are returning after a holiday yesterday. They are up 0.7% as well, although they are slightly off the highs at the start of the trading session. The Kospi in South Korea continues to move higher, 1% higher today as well, and the Shanghai Composite too, trading with gains of around 0.5%. So it's a green looking screen across the Asia Pacific, carrying forward that handover from Wall Street after Monday's trade. Pull up the GIFT Nifty. That is not quite mirroring the handover from Wall Street. Of course, we had these 2 straight days of last hour selling, last Friday and yesterday as well, and the implied open is also indicating a slightly subdued start for the Nifty at this monthly expiry trading session. We'll talk more about that as the show goes by. But to set you up for today's trade, our research team is here. They'll tell you about the trade setup, the stocks that you need to watch out for, and of course the setup on the F&O side of things as well. Firstly, Ekta joins in to get all the market cues we need to watch out for. Ekta, good morning. What are the important things on your radar today?
Morning. Well, yes, like you mentioned, the markets continue their losing streak from Friday. The Nifty slipped below 26,000. We had nearly 40 Nifty stocks in the red in yesterday's trading session, and the Midcaps and the Bank Nifty closed in the red as well. Heavy volume-led selling in select stocks is what we saw in the broader markets as well. Now, the RBI intervention in the rupee helped the rupee post one of its biggest one-day gains in a month. So the rupee closed at around 89.23, but the undercurrent of the rupee weakness remains. So just to also put it into perspective, there has been heavy FII selling. So Friday, FIIs net sold around 1,766 odd crores. Monday, which is yesterday, the FIIs net sold around 4,171 crores, though the DIIs net bought around 4,500 odd crores. The US markets have closed higher, so there was some recovery in terms of tech stocks, so that's something to watch out for. Asia is largely holding in the green as well, but yes, the GIFT Nifty is currently not reflecting that. What we would watch for today is volatility on account of F&O expiry, the Midcap index, which has been underperforming, so any kind of weakness and heavy volume-led selling in select stocks would be a trend to watch out for. US markets, we have retail sales, consumer confidence data, which is due later on, so that would be another cue. And in terms of a couple of things to watch from the primary market, the Sudeep Pharma IPO is closing for subscription, so that would be another thing to keep on your radar. But overall, yes, it was another day of losses for the market yesterday. Let's see whether there's any kind of recovery based on what we've seen in the US.
It's a quiet start, at least that's what the implied open is projecting. Ekta, thank you for that update. Over to Ria now, who would list out the stocks that you need to watch out for in today's session. Ria, good morning. What's in your list?
Well, good morning, Homer. Starting off with Dr. Reddy's, which will be in focus after receiving approval from the European Commission for a drug that is used to treat osteoporosis. We also have Siegel India in focus since they have received an LOI to establish 400 and 220 kilowatt in the Velgaon substation. Suntech Realty will be in focus since the unit has received an order from the London Court of Arbitration. The order has confirmed the withdrawal of the claim with the JV Grand Valley General Trading. Hoodco will also be in focus after signing an MOU with the National Institute of Urban Affairs. Paris Defence has also signed an MOU with Inter-University Accelerator Centre, and this is being done to develop commercial-grade MRI magnet systems. Moving on, Eris Life Sciences will also be in focus today. They have bought the remaining 30% stake in Swiss Parenterals for roughly rupees 423 crores. Keep your eye out on Surya Roshni as well. The company has received orders worth roughly 105 crores from an engineering and infra company. And lastly, Diamond Power Infra has received an LOI worth roughly 276 crores from Adani Energy for their Khavda project.
Ria, thank you for that update there. And over to Sudarshan now, who has cues from the F&O space lined up for you. Sudarshan, good morning. Well, last hour selling yesterday as well. But what is the F&O data indicating on the monthly expiry day?
So after such strong global cues where we have seen that all the frontline US indices closed with healthy gains, Nasdaq was up almost 3%. Similar move was seen even for S&P 500. The expectation would have been that, GIFT Nifty also would indicate with a gain of around 100 points or more than 100 points. But unfortunately, it's flat, and the reason might be because today it's a monthly expiry. But as far as the range for Nifty is concerned, it remains intact between 25,850 to 26,250. And if I go according to the options data, it indicates that Nifty may expire around or above 26,000. The reason, first, while Ekta was talking about that FIs remain on the sell side in the cash market, but in the derivative market, they have turned buyers in the futures especially. Yesterday also in the index futures, they have bought more than ₹1,560 crore. And good parties, they have added huge long position. Addition was more than 7,400 contracts, while on the other side, there was a minor reduction on the short side, and longs exposure has seen a minor improvement to 14%. Now on the short side, exposure is 86%. Come to the options data. 26,100, 26,150 and 26,000. These three call options were healthy, have seen maximum increase in the open interest, but it was a fall in the premium. Similarly, on the put side, 25,850 has seen an increase in the open interest of more than 15 lakh shares, and here also there was a fall in the premium. This was for November series. If you go to December series, the maximum increase in the open interest on the call side was for 26,700. On the put side, it was for 26,000. So it tells you that on the downside, support remains around 26,000. But for now, today, I'm going for 25,850 support and resistance 26,250. Some of the stocks that might be in focus, two stocks remain the band, SAIL and Saman Capital. Apart from that, keep an eye on two stocks, MCX and emphasis from IT.
Keep an eye out on all of this. Sudarshan, thank you for that update as well. Now, moving on, India has a new labour law regime in place where 29 laws have been repealed or rationalised into 4 new labour codes. The aim is to modernise the legal framework, extend social security to a wider workforce and ensure universal wage protection. Labour Secretary Vandana Gurnani told us that a committee would be formed to fix the floor rates soon. Listen in.
Floor wage was there earlier also, however, it was not mandatory. It was an optional kind of a floor wage which Government of India used to fix at regular intervals. Now, as per the new codes, the floor wage is going to be having a statutory backing, which means it's mandatory, and no state should fix their minimum wage below the floor wage. The floor wage would, as you said, look into the minimum living standards, and there would be a committee of experts that would be deciding on what should be the floor wage, and these would be periodically revised upwards. A lot of factories would have slightly less than 100 workers directly employed and rest through contractors, so that they could not come in the ambit of this condition. Now this has been increased to 300, so which means that up to 300 the companies would be now encouraged to take people on direct roles with themselves instead of taking them through contract, because it's only about 300 that they would need to take permission for any retrenchment, layoff or closure from the government. So this, in a way, this actually increases or encourages formalization, and this is an aspect that needs to be understood more clearly.
Take a short break here on Power Breakfast. On the other side, get you all the action from Wall Street and the White House in our special segment, Trump Watch. Welcome back. On to action from the US markets. Then it was a very strong session on Wall Street overnight, with the benchmark indices carrying on from where they left off on Friday. The Nasdaq was the outperformer, clocking the best day since May. The S&P 500 has its best day in 6 weeks, and this was led by the moves in shares of Alphabet, which were up over 6%, and of course a lot of other big tech names were also up anywhere between 3 to 7%. CNBC's Mackenzie Sigalos gets us a wrap of all the action on Wall Street.
U.S. markets were up sharply across the major indices in Monday trading as Alphabet helps lead a comeback in the AI trade. The Dow gained 203, the S&P 500 added 102, and the tech-heavy Nasdaq was up almost 3%, adding 599 points. Gains in Google parent Alphabet led stocks higher on Monday as Wall Street got optimistic about the company's position in the AI race. Just last week, Google announced its upgraded AI model, Gemini 3. Google's move to the upside also extended to other big names in the AI trade, with most of the Magnificent Seven up, along with Broadcom, Palantir, and AMD. U.S.-listed shares of Danish pharmaceutical giant Novo Nordisk fell to a 4-year low on Monday after its highly anticipated Alzheimer's drug trial failed to meet its goal. The trial tested whether the active ingredient in its blockbuster diabetes and weight loss drugs Ozempic and Wegovy helped slow cognitive decline in Alzheimer patients. Novo said that while treatment with semaglutide improved disease-related biomarkers, it did not translate into a delay of disease progression. That's what's happening here in the U.S. Back to you in Mumbai.
Now, investors are weighing a possible Fed rate cut after the New York Fed president signaled that a third cut could happen this year. Here's some opinion from former Boston Fed President Eric Rosengren on why the votes of the Fed presidents and the chair matter.
I would be surprised if Steve Myron doesn't dissent for 50 instead of 25. I would expect probably 2 presidents to dissent for no cuts at all, and the rest of the committee to go along. But I think the minutes are going to show that there was much more support for doing, if you look at the participants and not the voters, I think it probably, the presidents are strongly in support of not doing anything at this point. So it's a situation where the voters really do matter. And it's a big decision once the chair's made clear which direction he's going, if you actually decide to go forward with a dissent.
Let's also listen in to former U.S. Treasury Secretary Jacob Jack Lew on the way ahead for the markets.
Look, I think the outlook these days, you have to say, is uncertain. There's a lot of things that are very confusing. Even the jobs numbers that came in last week, you can look at one half and say it's good news, the other half say it's bad news. So uncertainty is the word I would use. When you have policy that's driving in an inflationary direction at a time when the deficit is as large as it is and growing, and the tariffs distorting so much that's going on in our economy, it's hard to say I'm comfortable. I'm not of the view that we're about to go over a cliff, but a shock could come and we're not well poised.
Moving on, in a rare layoff, Apple has announced job cuts across sales teams to strengthen its customer engagement efforts. The affected jobs included account managers serving major businesses, schools and government agencies, as well as the staff who operate Apple's briefing centers for institutional meetings and product demonstrations for prospective major customers. Employees who lost their jobs have until the 20th of January to secure another position within the company, or they'll be terminated with a severance package. Getting you the latest now on Donald Trump related developments, Vinny is here in our special segment, Trump Watch.
Hi, Ormas. Good morning. And let's start with the top headlines. President Donald Trump spoke by phone with the Chinese President Xi Jinping, highlighting renewed engagement between the U.S. and China. The leaders discussed a wide range of topics, including Ukraine and Russia, fentanyl, soybean and other American agriculture exports. Now, Trump took to Truth Social, emphasizing that a very important deal has been reached for the U.S. farmers and that the relationship between the two countries is extremely strong. He, however, mentioned nothing in terms of Taiwan in the post. Significantly, Trump announced that he has accepted President Xi Jinping's invitation to visit Beijing in April, and he also extended a reciprocal invitation to Xi Jinping for a state visit to the United States later next year, marking a step forward in US and China's diplomacy. Now, on the domestic front, President Trump signed an executive order on Monday to accelerate scientific discovery through artificial intelligence, directing the Energy Department and its national labs to integrate existing and future supercomputers into a unified platform. Now, this initiative aims to position US research facilities at the forefront of AI-driven innovation. Now, in other headlines making action, Trump signed a directive initiating the process to designate certain Muslim Brotherhood chapters in Lebanon, Egypt and Jordan as terrorist organizations. The order instructs the secretaries of the state and treasury to report and act on these designations within 45 days, underscoring a tougher stance on global terror issues. That's all we have today. Back to you, Hormaz.
Vinny, thank you for those updates there on Trump Watch. Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Some rebound in gold prices on hopes of a Fed rate cut, but what else is on your radar today?
Oh, that really is the major point because the markets are looking at a 79% probability of a rate cut for the month of December. That is how CME seems to be trading right now. Remember, it was 44% at some point in previous week, and that clearly is a deal maker here. When you look at the crude oil prices, well, we have seen that one edge further down, but this is on the prospects of Russia-Ukraine peace deal. We do understand that the U.S. has proposed a 28-point peace plan aimed at ending Ukraine war. Those 28 points are now cut to 19, so there seems to be some conversation happening which could lead to easing sanctions on Russia going forward as well. But yes, because of the expectation of a rate cut in the month of December, we've seen gains come back in case of metal prices. So gold is trading back above $4,100 an ounce. Silver is gained quite strongly overnight, trading above $51 an ounce. We're looking at steel rebar futures in China at a one-month highs. Copper prices have come back by nearly a percentage point in the overnight market as well. So all eyes really on the kind of data that the street is anticipating today. You have the U.S. retail sales, PPI data coming in today, and the weekly jobless claims coming in tomorrow. So between these three numbers, the street will really see a lot of reaction.
Oh yes, indeed. A lot of these delayed data points that will be reported later this evening. Mind you, this is a truncated week for the US markets due to Thanksgiving. So a lot of data points awaited over the next 2 days. Now, Manisha, thank you for that update. Now, in a big development, the Delhi government has ordered both the government and private offices to operate with only 50% staff on site, with the rest mandatorily working from home. The directive comes under the GRAP stage 3 as air quality continues to deteriorate, with AQI levels crossing 400 in many parts of the capital. According to the Environment Department circular, no government office can have more than half of its workforce physically present except in essential situations. Private offices too must enforce the 50% attendance cap starting immediately. Hey, take a leave on this edition of Power Breakfast. From me and the team, thank you for watching. Bazar Morning Call on the other side to set you up for today's monthly expiry session.
The countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazar Morning Call. Tuesday morning, we're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, hi. Morning.
Hi, good morning. It looks like it could be a better day. For one, maybe we retrace some of the fall that we had in the last 1 hour, and plus global cues look fairly upbeat, particularly tech, US tech.
Well, that's right. Yesterday's fall actually was a little bit, you didn't feel very, very comfortable by the time we finished off, but hopefully things stabilize. We have the expiry related factor as well that will play out today. But as you said, global cues looking better. And hopefully, all this...
The Midcaps should perform, right?
That's the big question, right? And I think some movement in terms of Ukraine as well. So hopefully we get some kind of, clarity on that front.
China, Ukraine,
yeah.
lots of hotspots. Lots of hotspots. But hopefully, they'll all, as we wrap up this year and 20-25 days to go, the picture will look much cleaner, much better into 26. That's the hope at least, right? Now, let's start from the beginning in terms of what you need to know as we begin this session. Sharp rebound in US equities. And when I say sharp, the Nasdaq is up 2.7%. Now, that is massive, big, right? S&P about 1.5% higher. And it was largely led by, as you can see on the screen, technology names. NVIDIA was up 1.5%, Amazon was up 2.5%, Alphabet was up 6%, and so on and so forth. NVIDIA, the big one, of course, and I think this is the market reacting to Trump administration's report saying that they may allow NVIDIA to sell back into China. They've been out of China, zero revenues from China, and it's one of the largest markets for chips, advanced chips, AI chips. So that, I think, at the margin did help. Alphabet, that is Google, a 6% move. Gemini 3, and we spoke about this in some detail yesterday morning, right? Now, that's one bit, which is AI. So there have been 2 pain points. One, of course, this AI wobble and questions around ROI and whether more capex will go in, and will that further push out returns on investment, etc. That is still a question. I think we won't have the answer anytime soon. The other, of course, is much more immediate, which the market seems to be fixated on, which is the December meeting for the Fed. For some reason, really important, but market pricing for a December rate cut continues to rise. So that is, I think, the other one which is helpful. So last night you had one more Fed member, a voting member, sort of backing the fact that he'd like to see another rate cut. Although he did say it's meeting to meeting, but in December he'd like to see a cut. Macro markets, 10-year yield was down 3 basis points. The oil price went up about 1.5 Brent, so 63.4. But basically, it's been bouncing around without too much directional move, big positional move. You have Ukraine's President Zelensky, and we'll read out the quote, like the exact bit in just a bit. But he said a lot. But he said that from what I could make out, he said, well, he's more open to the idea of striking some sort of a US brokered peace deal with Russia. And he kind of sort of alluded to the fact that what's being proposed now, as opposed to earlier, is much more streamlined. So does that bring us one step closer to so far, Ukraine has been urging Ukraine to fight. Ukraine has been saying we'll fight. They've been asking US for help. So this looks like they're cooling down in terms of their ambitions with regards to the war and what they can achieve there. Trump and Xi, right? That's the other one. President Xi of China, they held a call to discuss trade, Taiwan. There was, of course, a talk around Russia's invasion of Ukraine as well. And Trump essentially said that he's agreed to visit China in April. And he, in turn, has invited President Xi of China for a state visit next year. So this is, again, move forward. And that's the big rivalry, the big strategic rivalry, which is not going to go away anytime soon, but a bit of a thaw, as markets would like to see. Trump basically said our relationship with China is extremely strong. That's the other bit. Here in India, of course, markets have been, it's kind of one step forward, 2 steps back with regards to expectations of when we will see some sort of a thaw in India, US, but no sign of it at all. So we'll just wrap it out with levels and just support levels. 25,852. Yesterday's 100-point fall brought us closer to some of these levels. 25,852 is the 20-day moving average. It's been moving up. And, of course, for the Nifty Bank, it's 58,363, which is the 20-day for the Nifty Bank as well. So those are levels. On the upside, there's a swing high. There's a bunch of resistance levels. You basically come off a little bit. So that is much more easier for both the Nifty and the Nifty Bank in that sense. But 20-day is like, as they say, the Lakshman Rekha. And we shouldn't come very close to it and, of course, not break it. And I don't think we will, at least looking at the overnight reaction. GIFT Nifty will give you a quick sense of where we are starting. We'll pick it up from there. There was in the morning, about 1.5, 2 hours back, some problem with the GIFT Nifty. It was not really updating properly. I hope these rates are correct. But what you have on your screen is about a 70-odd point lower implied open. Nigel is standing by with the F&O positioning and the stats. Nigel, over to you.
Well, yesterday's fall actually was a little bit worrying. You know, the way we ended in trade. But, the hope is that, in fact, with global cues fairly positive, you'll want the Nifty to see some kind of a fight back in today's trading session. But the Nifty in yesterday's trading session, that fall was a little bit worrying. Now, in terms of the rollover picture, given that today is the monthly expiry, the Nifty more or less in line. The Nifty Bank relatively lower if you compare it with the last few series. So the Nifty Bank rolls are actually much lower in comparison to the averages getting into an expiry day. So there could be a lot of action left actually on the Nifty Bank in today's trading session. One of the factors that played out yesterday with regard to that fall was the FI, they turned sellers, close to around 4,000 crores in terms of selling. But two factors out here. One is getting into expiry day. And the second factor, there was an MSCI rebalance that took place yesterday. Net, there was supposed to be an inflow, but the gross volumes were massive. So, difficult to understand whether or not that 4,000 crores was genuine selling. Today, we'll get a better trend, I think, with regard to the FI net sell number. The DIs, though, they turned buyers yesterday. The FIs, after a while, they went ahead, they added some long positioning. They're still net short with close to around 86% of the positioning on the short side. But in yesterday's trade, the call writers, they felt that they're back in the game. And that was precisely what the FIs did as well. Aggressive call writing is what we saw in trade yesterday. And because of the kind of call writing that we saw, close to around 5 calls were written for every 1 put. You had the PCR that came down from around 1.4, just around 2 trading sessions ago. It came down to around 0.77 odd. So the PCR is moving to the lower end of the range after almost testing the higher end of the range at around 1.5 that we saw in the past week itself. So a couple of calls that were written should come up for you. 26,000, 26,100, 26,200. Aggressive writing is what we saw in yesterday's session. Which brings us to the levels then. 20 DMA, important. 25,850, crucial level on the downside. Last couple of trading sessions, we're going to around 26,150. The high is around this vicinity. And the options data as well suggests that in the near term, this becomes a bit of a resistance zone. So that's the important mark. And on the Nifty Bank, that's the one that will have to fight back. Rolls are relatively lower, and it's still trading comfortably above that 20 DMA odd, around 500 points higher in comparison to 20 DMA. So that's the the one that will have to fight back today. But more than the Nifty, we're talking about levels close to all-time highs. I think the broader markets need to participate because there's been a stark underperformance that we've seen in the small cap index. And in yesterday's trade as well, all through the trading session, actually, you had the breadth of the market that was negative. So some stability on the headline index and some performance on the broader markets is something that the street will be looking forward to. Expiry day, final hour of trade will be extremely volatile.
Thank you. And let's get to the big equity calls of the morning then. It's Jonathan Garner of Morgan Stanley who says investors were generally constructive on the 2026 risk outlook and formed a strong consensus on US relative valuation appeal within Asia's growth and AI cohorts. He also says that their overweight view on India and underweight view on Taiwan are still contrarian, and most investors agreed with a K-shaped outlook for Chinese equities and upside for Japan.
So those are some views. Investors are weighing a possible Fed rate cut, right? After New York Federal Reserve President signaled that a third rate cut could happen this year. Here's some opinion from former Boston Fed President Eric Rosengren on why the votes of the Fed presidents and the chair really matter this time around.
I would be surprised if Steve Myron doesn't dissent for 50 instead of 25. I would expect probably 2 presidents to dissent for no cuts at all and the rest of the committee to go along. But I think the minutes are going to show that there was much more support for doing, if you look at the participants and not the voters, I think it probably, the presidents are strongly in support of not doing anything at this point. So it's a situation where the voters really do matter. And it's a big decision once the chair's made clear which direction he's going if you actually decide to go forward with a dissent.
Let's also listen in to what the former U.S. Secretary Jacob Jack Lew had to say about the markets.
Look, I think the outlook these days, you have to say, is uncertain. There's a lot of things that are very confusing. Even the jobs numbers that came in last week, you can look at one half and say it's good news, the other half say it's bad news. So uncertainty is the word I would use. When you have policy that's driving in an inflationary direction at a time when the deficit is as large as it is and growing, and the tariffs distorting so much that's going on in our economy, it's hard to say I'm comfortable. I'm not of the view that we're about to go over a cliff, but a shock could come and we're not well poised.
Well, fair bit of uncertainty, right? Absolutely right there. Let's just quickly take you through President Trump and, the post on Truth Social. And this is what he says, and I quote, "I just had a very good telephone call with President Xi of China. We discussed many topics, including Ukraine, Russia, fentanyl, soybeans, and other farm products, etc. We have done a good and very important deal for our great farmers, and it will only get better. Our relationship with China is extremely strong. This call was a follow-up to our highly successful meeting in South Korea. That was 3 weeks ago. Since then, there has been significant progress on both sides in keeping our agreements current and accurate. Now we can set our sights on the big picture. To that end, President Xi invited me to visit Beijing in April, which I accepted, and I reciprocated, where he will be my guest for a state visit in the United States. That is later in the year. We agree that it is important that we communicate often, which I look forward to doing. Thank you for your attention to this matter." That is a sort of, classic sign-off from President Trump.
Okay, let's just get Asia up for you on your screen. It's a very green-looking screen. The Taiwanese market's up close to about 1.5%. Korea's up about 0.8%. The Hang Seng, the last time I checked, was up nearly 1%. So all tracking that Wall Street rebound, and it's picking up now across the Asian market. But as you heard, what Prashant was saying, maybe the friendlier US-China narrative, Trump calling the relationship extremely strong, and the movement towards a peace framework in Ukraine is also supporting global risk assets today. Mark Matthews of Bank Julius Baer is now joining in. Mark, thank you very much for joining in. It's the final stretch of the year. How are you feeling about global equities, and what do you expect now?
Well, if I look back at the other years when the S&P returned over 15% in the first 10 months of the year, in other words, from the beginning of January to the end of October, there were 21 years like that since 1950. And 20 of them, all but one, had positive returns in the last 2 months of the year. In other words, November and December. So purely on that one technical observation, I would say that when you've had a strong year in the first 10 months, you almost always have a good finish. And of course, as you know, November and December are typically the best time of the year for the market, along with the very beginning of the year. So I think that we should end the year higher. The December Federal Reserve meeting is garnering a lot of attention. I think perhaps a little too much attention, because if they don't cut in December, we think they will definitely be cutting in the beginning of next year. But after the speech that Fed President Williams gave on Friday, committing to a cut in December, and so we can deduce from that Powell will want to cut too. And if Powell wants to cut, then Governor Cook will want to cut. And you can kind of add up all the people who will cut. A cut does look more likely. The futures market's pricing 75% chance of it. And I suppose that's the primary reason why we had the reaction we did in the market yesterday.
Absolutely, Mark. Morning. In terms of what happens if President Trump, if he gets his way with appointing, his candidate is Fed chair in May when Powell retires, whether he'll get his way with much lower rates next year, that's also doubtful, right? As we've heard comments, the Fed members, etc., are pretty independent. They may want to cut in December more than, the greater number than those who don't. But, it doesn't look like they're all going to side with the view that rates should be a lot lower in 26. But that's another story. Just a quick word on the AI thing, Mark. We've been talking about ROI questions, etc. But there's this new thing, right? This Google Gemini, which basically topped the charts in terms of performance. Some say better than ChatGPT-4. Markets has been fixated around OpenAI and its ecosystem for where the winners will emerge from. And suddenly you've got Google, which kind of perhaps is the most complete a full-stack AI player coming up with, a great product. So does it push out expectations, all these ROI questions. I mean, it kind of makes everything much more difficult to answer at this stage, right? Who essentially will be the winner? So far, at least there was clarity that with OpenAI doing what it is doing, it is going to be OpenAI. The question was whether they're over-investing and whether they will make capital allocation mistakes, etc. But now there's this new one.
Yes. Isn't it interesting? And I must confess that I read Google totally wrong because I was one of the first users of Gemini when they launched it. I thought it was terrible. And so I immediately switched to another large language model. Now, of course, as you rightly say, it's top-notch, the best. And Google are making their own chips. They're monetizing AI through their many different platforms, not the least of which their own search engine, but also YouTube. And so they're looking like the winner. They are looking like the winner, and there probably will be more than one winner. But as you also pointed out, the market is worried about all the investment that's going into AI and whether it can be monetized. Some companies will lose a lot of money, the ones that are not the winners, if you know what I mean, the ones that do not end up having big market share. But I think we can start to see the horizon, and we can start to see that Google is going to be definitely one of the big players in the AI space for forever, basically. And of course, that's very meaningful. Because this is truly one of the greatest technological innovations in our history.
There was some commentary that OpenAI, ChatGPT has about 800 million active users, and Gemini has now it has hit 650 million. Almost. So it's very swiftly caught up, as he was saying, that first it was all OpenAI as the winner. Yeah. But look at Gemini's number, 650 million users.
Well, that's right. Mark, good to see you in as always. I wanted to bring us back to the Indian markets. What's the view out there? We've been relative underperformers. You're calling for a bit of a melt up towards the end of the year, as history suggests, that if we've had a good year, then normally the US markets, they end higher. What about the Indian markets? How are you feeling? And also, I wanted your call on tech. I recall a couple of interactions ago, you said that could be a contra-trade. Indian tech companies that have underperformed, going by the commentary, going by the valuations, you would take it as a contra call. Last few days, in fact, that's playing out. And for the month, actually, Indian tech companies have been relative outperformers. Your view on them?
Well, I made the observation purely on a valuation basis, and looking at the biggest losers, this theory, the dogs of the Dow, that if you buy the biggest losers at the end of a year, chances are you're going to make money out of them because they went down so much. So India's never been a value proposition, but there is definitely value in the IT space. That's why I talked about it. For India as a whole, I'm bullish on the market. That has not changed. I think the underperformance of India this year is attributable to the foreign selling, which was to finance a rebalancing in China, where foreigners were very underweight. And that should be largely done by now. I can't believe there's anybody who owned India and hasn't sold it yet if they were going to buy China. And then there's also the issue of the lackluster earnings for the last couple of quarters. And I also think that with the monetary policy changes this year and the tax cuts, we should look forward to an improvement in earnings for fiscal year 27. And we're looking for earnings growth on the Nifty next year of between 16 to 18%. If we're right and the Nifty's back down at what I consider to be a reasonable price earnings ratio, then I don't see why the market can't give you about 16 to 18% next year.
So India gets back to its outperforming ways, Mark?
I don't know if 16% will be outperforming China. We'll have to see. I would also expect China to give you, I'd say, somewhere between 10 to 15% next year. One thing about China is it is a very state-sponsored bull market, and they have the capacity to control it. They don't want it to become a parabola. They want it to be a slow and steady bull market so they can coax households to invest in it. And so I don't think that it'll get much above 15%. And on that basis, yeah, probably India will outperform China next year.
State-sponsored bull market. But yeah, I mean, point taken. I think it conveys the meaning of what's happening. Temper too much and slow, steady, but a market which does well. Thanks very much, Mark. Great speaking with you. Appreciate you joining us here on CNBC TV18. We'll take a quick look at what's coming up here over the next 2.5 hours or so. So we have at 8:35, Elara Capital's Karan Thorani joining us, and we talk about the impact of labor law on platform companies. And Karan has written about this subject. 9 o'clock, we have Equities Capital's Vijay Agarwal to discuss the labor law effect on infrastructure sectors. 9:20, Axis AMC's Ashish Gupta is a market master today. We talk stocks, sectors. The management of GE Shipping will be speaking with us at 9:45 on the outlook there. And towards the end of the program, Lata in conversation with Harindra Kumar of Elara Capital on second quarter earnings, valuations, and his preferred picks. Okay, take a break. We are back. Our research team is standing by with the key stocks to watch on the other side.
Welcome back. You're watching Bazar Morning Call. The GIFT Nifty is flat. Let's wait by to see if there is some rub-off of the positive handover that we got from Wall Street. Before now, the implied open is down close to about 5 points. But let's straight away dive into the market action and get you the stocks that you need to have on your radar this morning. Vinny is now joining in with Siemens Energy first.
Hi, good morning. So Siemens Energy, they actually reported their number for the September quarter ended. So they report full year numbers as well. And the year ending is September. First, talking about this quarter that has gone by for them. When you look at it, revenue, profits of the company came in line with what the analysts were expecting. Margins, revenue profits were better. Margins were in line with expectations of what the analysts were expecting. Revenue growth of 22%. EBITDA seeing a bit of a decline of 1%. And EBITDA margins have seen a contraction significantly, 14.9% versus 18.5% last year, same time. Net profits of the company have seen a growth of 31%. Now, in terms of segments of the company, when you look at the power transmission side of the business, that has done very good in terms of the revenue growth, margins, as well as in terms of EBIT margins is what I'm talking about, and overall EBIT performance as well. So operationally, the power transmission segment has done very well because expansion in terms of EBIT margins, 18.15% versus 16.09%. Now, when you look at the power generation side of the business, they're seeing an increase in terms of the mix coming in from power generation business. But the margins over here, the EBIT margins, have seen a contraction coming in. So that is why overall, when you look at the margins, EBITDA margins of the company as well, they have seen a contraction, and mainly because of the change in the revenue mix where higher share is coming from the project business. Now let's move on and talk about other internals. When you're looking at the new orders that have come in for the company, stable at around 2,351 crores. Order book, that is very strong. That stands at 16,200 crores approximately. That's a 47% growth on a year-on-year basis as well. So very strong growth there. Net working capital for the whole year, when you look at it, those days have come down to just 3 days versus 148 days. So improvement in terms of that operational performance improvement is coming in, and operational efficiency is coming in as well. And cash flows, operating cash flows have seen a good improvement there. 3,670 crores in September versus 150 crores last year. So good performance all in all. We'll see green on the stock for the day.
Okay, all right. Thanks a lot for that, Vinny. Hopping across to Ria, who's here to tell us about some other stocks that are in the news. Hey, Ria, morning.
Good morning, Nigel. Let's start off with Tilak Nagar Industries. The company will be in focus since the promoters have pledged 26% of equity, and 9.3 lakh shares have been allotted to the promoter on a warrant conversion basis, and the amount for this is aggregating to roughly 26.6 crores. Cello World will also be in focus after the company has entered into an agreement to assign its trademark for Cello brand for the stationery and writing instrument segment of the company from CPIW on a zero royalty basis. Now, as a result of this, the company is also eyeing a revenue of rupees 200 crores over the next 1 year in the first year of operation starting in January of 2026, and this is with an investment of rupees 50 crores. Also keep your eye out on Eris Life Sciences. The company has bought the remaining 30% stake in Swiss Parenterals for roughly rupees 423 crores on a preferential basis. Also keep your eye out on Premier Explosives. The company has received an export order worth rupees 73 crores for the supply of defense products, and this is to be delivered within the next 12 months. Moving on to Dr. Reddy's, which will be in focus after the company has received an approval from the European Commission for a drug that is used to treat osteoporosis. The last stock that we're keeping an eye out on is Sunteck Realty. The company has marked its entry into the UAE with a luxury project with a GDV of roughly rupees 12,000 crores, and they also have a pipeline over the next 3 years. This is an ultra luxury pipeline which is exceeding roughly rupees 36,000 crores.
No, absolutely. Thanks very much, Ria, for that. Just one more bit of news, right? And this is a setback for and we're talking about pharma there, basically. Novo Nordisk, and they were conducting trials for, using GLP-1, semaglutide, to treat, to try and see if it has an effect on Alzheimer's. And last night, they abandoned those tests, basically, that's saying that virtually there is no effect on GLP-1 to treat Alzheimer's. I mean, if you think about drug categories, the next big drug categories which are going to be, which are for virtually there is no cure, it's going to be things in the area of dementia, Alzheimer's, etc., etc. So that perhaps a bit of a setback. These drugs have been labeled by some as wonder drugs, a range of possibilities, but at least this one big thing last night, a bit of a setback. Okay, well, Manisha is here with a roundup of everything which is happening in the commodities space. Manisha, good morning.
Morning, and thank you for that, Prashant. I'll start with the crude oil prices, and the prospects of Russia-Ukraine peace deal seem to be getting closer now. U.S. had earlier proposed a 28-point peace plan aimed at ending the Ukraine war. Now, that has been cut to a 19-point thing with consultation with various European leaders there. So the deal, if that goes through, could ease sanctions on Russia, and that is what is weighing onto the crude oil prices, which, by the way, in this year now have declined by 19%. The strength, though, continues in case of the metal prices, and this is ahead of the U.S. data You remember, we have the retail sales numbers coming in today, the jobless numbers coming tomorrow. And ahead of that, there is some strength in the weakness in US dollar and strength coming in for gold and silver both. So gold is above 41.50, silver trading above $51 an ounce. And that's exactly what we are looking at in metals as well. The steel rebar futures are trading at a 1-month highs. Copper prices trading up to nearly 2-week highs as well. So metals as a sector continues to shine ahead of that US data.
Thank you very much for that. But for more stocks and ideas, let's go across to Sudarshan, who will fill us in with the brokerage calls of the day. Sudarshan.
So Investec has returned on oil marketing companies and it has downgraded all the three names IOC, BPCL and HPCL to sell from hold. For BPCL, target is rupees 330, for IOC target is 145, and for HPCL target is 425. And the reason is it's saying that market seems to be overlooking the fall in diesel marketing margin that these companies are facing. It says investor interest in oil marketing companies surged alongside sharp rise in the refining margin. Singapore GRMs doubled in less than 2 months to $13 per BBL, but OMC's profitability is more sensitive to marketing margin rather than refining margin. And diesel cracks that are lifting refining margin have dragged diesel margin, and diesel margin in the last few days has slipped to negative territory from the level of around rupees 4 per litre a month ago. And if the diesel cracks remain elevated, it would have an impact on the earnings of all these three companies. JP Morgan has returned Reliance Industries. It maintains overweight call and target is 1727 per share. It said Reliance is up 27% year to date and it has outperformed Nifty, which is up 17%, but it maintains positive bias going into 2026, and it has given three reasons. First, valuations relative to peers, and peers here are DMart and Bharti Airtel, are still attractive. Second, RIL still trades at a 15% holding code discount to peers, and earnings drag from weak refining of petchem through FY 24-25 is over as per JP Morgan, and it should improve further going ahead. Current refining strength has potential to drive upgrades and likely catalyst for 2026. First, Geo IPO and tariff increase that is expected. Second, new energy commissioning. And last one is more stable retail growth.
Okay, all right. Thanks a lot for that, Sid. Well, time to slip into a short break. Up next, we'll have Parag Thakkar of Fort Capital for some fundamental stock talk. Later on, we'll also be joined by Elara Capital's Karan Rai to discuss the impact of the labour law on platform companies. Welcome back. You're tuned in to Bazar Morning Call here on CNBC TV18. As promised, let's welcome Parag Thakkar, Senior Fund Manager at Ford Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you. Parag, we were just discussing about the Nifty IT index making a big comeback. Year to date, it's an underperformer. You compare it with the Nifty. You compare it with the NASDAQ as well. But the last 1 month, actually, the boys have shown up. The tech boys, they are feeling it, and yesterday you had Motilal Oswal that went ahead and upgraded the stocks as well. From this pack, what do you prefer? If you could name 2 stocks from the IT pack that you like.
So basically, I am equal weight in IT right now in my portfolio, and with large weights on Infosys, Tech Mahindra, and Mphasis. These are the 3 stocks in my portfolio, and I'm overweight, equal weight, but Infosys I'm overweight. See, basically, you cannot ignore this cash flow generating companies for long. My view is that Infosys generates a free cash flow of around 35,000 crores. Right? Market cap is 6,30,000 crores. And they pay you 90 to 95% of that free cash flow as dividend or buyback. I would say 18,000 crore buyback is going on, right? So I would say that 5%, 4.5 to 5% dividend yield, 5 to 6% free cash flow yield. And you are looking at now an increasing probability of December rate cut in US. Plus signing of trade deals with China is also progressing well. Hopefully, keeping fingers crossed, it will happen with India soon. So I would say that the valuation in this particular space was very attractive. These are high free cash flow generating companies. So I would say that this is not a valuation at which you will go underweight in these companies.
Okay, all right. You'll not want to go underweight, and Infosys is the one that you like.
Infosys, Tech Mahindra, Mphasis.
Mphasis. Got it. All those 3 stocks. Now,
see Tech Mahindra's CEO's comments on the Mahindra Investor Day.
Yeah.
They are very interesting. Yeah, he said that till FY27, their target is to get to that 15% EBIT margin, which he has promised to the street when he joined. Then after that, he said that the growth will be supersonic. Now, how growth will be supersonic in IT? That is because of this AI thing getting translated into revenues. That means he's expecting that from FY27 onwards, going into FY28, these AI deals, right now also the deal wins are very good, right? We are not seeing ramp up of those deals because everybody is in wait and watch mode in US. So once you see the AI deals getting larger and they are getting reflected in revenues, which is after FY27, then you will see growth also in this space. So it is just a matter of time. You have to buy at right value and wait for growth to come.
Yeah. Parag, hi, morning.
Good morning.
I'll just segue from what you left off at Tech Mahindra, but with Mahindra specifically. My colleague Shireen spoke with all the business heads and CEOs across the Mahindra groups. Big targets, right? In terms of 5 years, there was something on M&M and M&M Finance and so on and so forth. Leave Mahindra and Mahindra, the auto business aside. Anything else out of that on the back of what you heard at that investor conference and at the interview, which you would like to get behind?
No, I would like to say that Mr. Anish has done wonders for the group, right? Of course, the entire team deserves credit for that. The way they launched SUVs one after the other and got a huge success. Yeah. And they got a tailwind from tractor business also. And plus, their ambition for the other growth companies like Mahindra Lifespace, Mahindra Holidays is very encouraging. And they are ready to support these companies financially or capital-wise, any perspective. They are able to, they are most capable and they are willing to support all these subsidiaries also. So I would say that as of now, out of them, I have Tech Mahindra in my portfolio, but definitely Mahindra Lifespace and Mahindra Holidays are something to consider. They are right now small companies. They can become big. They have all the right to win and huge support from parent.
Huge support from parent as well. Got that. I mean, your call on Piramal Finance has worked out. Great run, right?
By God's grace, luckily, yeah, it worked out very well, and all credit goes to management, Mr. Jairam and his team.
He was on with us yesterday with Lata at 10:15.
I missed that.
Yeah, you can find it on YouTube. I mean, the interview was more of the sector, but of course a little bit about the company as well. But where, if you've looked at the numbers and updated it as of yesterday, where does it stand valuation-wise and I mean the upside-wise from here? You think it's basically it came at about 1250, right? And now I'm not sure where it left off yesterday. Closer to 17.
I tell you, I was on your conclave, and when it was about to list as Piramal Finance, the last closing price was 1124.
Wow. Yeah.
Today we are at 1590, so it is up by 35% from your CNBC conclave day. Yes, their stock has done beautifully. No regrets. Very happy about it.
No, why regret? It's done very well. I'm just.
But I would like to say that, see, when a stock does so much well, it can take a break also. So I would not thumb the table and say that a new investor should buy at this price. One should wait for consolidation.
Right. Parag, stay with us and we'll ask you about Swiggy, Eternal, Zomato, etc. as well. And we want to just get in a specialist on it. Karan Torani, Rima, is with us.
Indeed, Karan Torani of Elara Capital is also now joining in. He's the Executive Vice President. Karan, thank you very much for joining in. Now, you've had about 48 hours to assess all the changes in the Labour Code. They're simplified, consolidated. But in the near term, there could be an overhang or some cost implications for gig economy workers, Swiggy, Eternal. Going by the stock price yesterday, it didn't look material because stocks recovered, closed pretty much flat. But take us through your assessment, and are there any changes to your EPS estimates basis this?
Hi, Rima. So firstly, I think in terms of this impact, this will have a negative impact in terms of the cost for the food tech and the quick commerce companies, because gig workers is a very important segment in terms of the last mile delivery for them. Look at it here, I think there is a negative impact of anywhere in the range of 30 to 50 pips as a percentage of GOV. And on a per order basis, this number is around 2.5 to 3 rupees on a per order basis. So I think most of these companies are already providing benefits to the tune of medical insurance and some bit of maternity benefits as well, which is around maybe 1% of the top line or closer to that. This could potentially move higher to 2% of the top line. Now, the code clearly says that it has to be either 2% of revenue up to 5% of gig worker payout. So even if you put a scenario here that it is up to 5% of gig worker payout, even basis that, the worst case impact is not more than 2.5 3 rupees on a per order basis. The impact in terms of numbers is about 250 crores on EBITDA for both these companies on an average roughly. In terms of the negative impact on the margins, we don't see a big material impact of the medium to long-term perspective because as your revenue scales up, this impact will kind of become smaller with time. And secondly, I think we do see a potential that this will eventually be passed on to the consumers. So I think if you look at the AOV here, on the food side, the AOV is 40 rupees. On the QC business, the AOV is 600 rupees. As a percentage of AOV, the 3 rupees number, which is a negative impact, it's a very small component. So we don't foresee a big negative impact even in terms of this impact being passed on to the consumers or if they are asked to pay for these kind of charges incrementally.
All right. Hi, Karan. Good to see you. So you're saying that 3 rupees will be adequate to push through any kind of hit, right?
Yes, absolutely.
All right. And both the stocks, if I look at Swiggy as well as Eternal, they've come off a good deal from the top. And yesterday, in fact, Swiggy started off in the red, but then we saw a sharp recovery. You think the stocks are at good levels to buy?
Yes, I think the worst seems to be largely over as far as Swiggy and Zomato are concerned in terms of valuations. If you look at Zepto's recent fundraise, if we assume a 50% CAGR in terms of their GMV and the fundraise that they have done, it's about 0.6 to 0.7 times market cap to GMV. Now, if you look at Eternal, if you assign a 50 times EV/EBITDA to the food business, which could be debatable, but we do see a premium multiple there because the business is duopolistic in nature. You are seeing better growth prospects and EBITDA margin improvement is also there from here on. So assuming that, and then assuming the cash balance and assuming, the other business valuations, which is the Hyperpure and the events business, you are getting a quick commerce business today, the Blinkit, at about 0.6 times market cap to GMV, which is similar to the likes of Zepto. Now, because Blinkit is better in terms of growth rates, better in terms of scale, better in terms of profitability, we do see Blinkit trading at least at a 50% premium valuation as compared to Zepto's last fundraise. So basis that potentially if, Blinkit has about 60% valuation contribution in terms of SOTP for Eternal, you see a straight 30% upside from here on. So I think the worst seems to be over in terms of valuations basis this at current price point. Second thing to look at here is the discount, right? The price wars. So the kind of price wars we saw in the month of Feb at the start of the year in CY25, with Zepto coming in aggressively in the market, we don't see those kind of price wars here. I think most of these companies are now going to try to focus on profitability, and Zepto also will eventually want to go for IPO. And Swiggy's recent QIP is more for moving away from 3P to 1P in terms of inventory model in the QC side for reducing the foreign investment, and not because of price war discounting. Another important point is many of these companies like Amazon, Flipkart, which are making foray in the QC side, are not looking for price wars, but they're betting on execution rather. So I think if price wars is behind us in terms of worst, we don't see increase in terms of losses for these companies here on, unless you see a lower throughput per store in terms of the expansion that they're doing right now. The non-metro markets today have got lower throughput per store. So if that has a negative impact on the profitability, that could be a case in point. But external forces or price wars are behind us largely.
Okay, all right. Before we let you go, you're bullish on both these two names with a substantial target price, which is 25 to 30% higher than current prices, I think, on both of them. I think on Eternal, it's around 415 rupees. What are your other picks? You track a whole host of stocks. If you could name a couple of them.
So in terms of other picks, we are currently liking Jubilant FoodWorks. I think we mirror this company to food tech companies. I think we do see strong growth for Jubilant FoodWorks because of LFL SSG traction coming, and they are the only QSR player which is reporting growth. Obviously, LFL growth rate will converge because of a high base over the last 4 to 5 quarters. But on a steady state, we do see LFL growth rate of 5 to 6% and store growth of about 8 to 9%. We do see margin expansion as well playing out. Other QSR companies are reporting a lower margin. The margins are coming off because of price war. In pizza as a category, the competitive intensity is the worst seems to be behind us.
Okay.
The competitors are either scaling down or not expanding aggressively. So that could have a positive impact in terms of their margins as well. So I think Jubilant FoodWorks we like as a top pick apart from Eternal and Swiggy as of now.
And any view on Restaurant Brands Asia? My colleague Vivek and I think Mangalam, they were working on a story yesterday which we had filed that the PE could possibly looking at exiting. Any view on that name?
Yes, we do cover the stock. We have a buy rating on the stock as well. I think Restaurant Brand Asia, the India business has done reasonably well as far as growth rates are concerned. They have consistently delivered a better SSG, positive SSG as compared to peers. And even the store growth has been good from their end. The problem from their end is margins in the India business, which is quite low because they've been going for a price war. But as the growth rate picks up, as operating leverage does pick up, we see margin improvement as well. The key monitorable for that business in terms of the rating or valuation multiple for the overall business will be what happens to the Indonesia business. Indonesia business is currently making losses, and they've tried to scale down in the last 4 to 5 quarters. But once we see a potential exit or we see Indonesia business going to a break-even point, is what will trigger re-rating for this stock.
Okay, got that, Karan. Out of time. Thank you very much for joining us with that precise commentary on how you think about the labor law impact on platform companies, and of course your thoughts on other names under your coverage as well. We'll take a quick commercial break here. Parag is with us, but we'll also connect with Sudarshan and Mitesh for some technical trading ideas. Stay tuned, coming up.
Welcome back. Hope you're having a good morning. Well, as promised, it's that part of the show when Hormuz joins us to tell us all the big movers yesterday, and some of them were backed with delivery. Hey, Hormuz, morning.
Good morning, Nigel. And mostly the broader markets were sulking in yesterday's trading session. So we'll start off with the segment that was leading those losses. Real estate was one of them. And Anant Raj saw some sharp moves to the downside in yesterday's trading session. As a top loser on the realty index, has now declined in 4 out of the last 5 trading sessions. You look at the volumes as well. 30 lakh shares were traded. The volumes were around 20-day average of around 20 lakh shares. And out of those 30 lakh shares, 13 lakh shares were marked for delivery. Here too, the 20-day average is around 7 lakh shares. And the stock has not had a very good year. It's down almost a third in 2025 and 40% now from its 52-week high. So Anant Raj was one, but the ones that were bucking the trend yesterday were IT, and even those stocks came off the highs of the day. But Tech Mahindra managed to hold on to gains of around about 2.5% among the top Nifty gainers as well. The Monday's volumes were the highest in 5 months for Tech Mahindra, with close to 70 lakh shares were traded. The 20-day average was around 20 lakh shares, and out of those, so it's a significant delivery-based buying here, because out of the close to 70 lakh shares, 36 lakh shares were marked for delivery. So over 50% of the shares traded were marked for delivery here, and the stock has, in line with other IT names, is still down around 17% in 2025. And the stock on the downside yesterday was Tarson's Products among the small cap names. The stock is down for 14 straight sessions now. Even yesterday the stock was down around 8.5%, and in the month of November it has declined in all but one session. The 3rd of November the stock ended marginally higher. Ever since then the stock has been on a downward move. It's down around 30% in the last 14 sessions. Yesterday 10 lakh shares were traded. The 20-day average is just 1 lakh, and out of those 10 lakh shares, close to 6 lakh shares were marked for delivery. Here the 20-day average is only 65,500, so 10x on comes at the, in comparison to the delivery volumes as well. The stock has halved in 2025 and is down well over 70% from its IPO price, which was around 660 rupees. And lastly, ITI, the PSU names that were on the downside yesterday, this one was bucking the trend. Had a very good session, close to 10% higher, snapped a 6-day losing streak yesterday. Volumes were the highest in 3 months, close to 3.5 crore shares were traded. The 20-day average is only 5.5 lakh, but out of those 3.5 crore shares, only 16.5 lakh shares were marked for delivery compared to the 20-day average of just 1.5 lakh. Of course, a low free float, government has 90% stake, and the stock has been an underperformer, down 16% so far.
Yeah, thanks very much, Hormuz. Very interesting stuff there, as always. Parag Thakur is still with us. Parag, thanks for waiting. The mid-tier banking space, and we talked about pyramidal finance and some of the other stuff earlier. I think you're bullish on. Nigel was telling us Federal Bank. Yeah, is that the top idea out of that space, that category of stocks?
Yeah. So we had City Union Bank. Luckily, City Union Bank did very well for us, and now we are overweight on Federal Bank. We have a 4.5% weight, and we like Mr. Manian's strategy, which was demonstrated in this quarter very well, where actually margins were supposed to decline, but they expanded margins by focusing on current account, and fees. And plus, they are now lending to mid-yielding segments where risk-reward is favorable. So I would back that strategy, and I feel that the bank's DNA was always very good. They were a very conservative bank, lending to SME and retail. They never take disproportionate risks, lending to microfinance for high yields and all that. So we would love to back Mr. Manian's strategy, and we would be a long-term investor in this company.
Okay, all right. Federal Bank is something that you do like. One stock that's actually caught everyone's attention in terms of volume moves has been Karnataka Bank. Massive move is what we're seeing out there. Volumes extremely high. So let's see whether or not there is something that the street is getting right on this one. But in the last few trading sessions in a wobbly market, it's done 172 down 200. Yesterday's high, I think, was 205 or thereabouts. But Parag likes Federal Bank. Parag, final question before we let you go. Now, the Nifty has been doing okay. It's holding closer to around the all-time highs. And that's because the big boy Reliance Industries has got a couple of triggers. Going through a Jefferies note as well, they are fairly bullish on the stock. I think from a market perspective, where Reliance performs, it helps the Nifty because of its weightage. What's your view?
So Reliance is my largest holding as of now in the portfolio. Reliance, SBI, as I said, Federal, Infosys, L&T. These are my largest holdings. The simple way to look at Reliance is this That market cap is close to around 20.5 lakh crores. And I would say that Jio is a fantastic business. You imagine 50 crore subscribers using 24/7 all the way, and that revenue goes to Reliance, and Reliance make 50-55% EBITDA margin out of it. So I think the street is valuing Reliance Jio at around 585 rupees per share after Holdco discount. I think it should be much more, first of all. Second, retail. Q2 itself, retail showed 16% YOY growth. I'm expecting better growth in Q3. So these two consumer business, which make 1,05,000 crore EBITDA in total, it should get higher value in case of Jio and should do well from earning perspective in terms of retail. So I would say that if I sum up, and plus the new energy business is starting, 40 gigawatt factory is starting next year. So that will get, say, 150 rupees per share value. If I add it up, I think whatever these brokerages are suggesting, above 1,700 rupees should be your minimum intrinsic value of the company. I would not say target price, intrinsic value of the company. Target price depends on what they do afterwards also, right? Because Reliance is a box from where the value unlocking keeps happening. And plus net debt to EBITDA is in control, which is a major thing. If all businesses are incubated, grown with very, very calibrated debt, which is the most important thing, right? So net debt to EBITDA is below 1x.
Parag, thank you very much for joining in. Point taken on Reliance. Big mover, 27% up on a year-to-date basis, outperforming the Nifty by nearly 10%. Get into a break. On the other side, we'll come back with the pre-opening rates. We'll also be joined by Equirus Capital's Vijay Agarwal to discuss the labour law effect on the infrastructure sector. Welcome back. Let's get in our technical experts to assess the way trade will play out today. Sudarshan Sukhani and Mitesh Thakkar are joining in. Good morning, gentlemen. Good to have you this Tuesday morning. Sudarshan, let me start with you. Your thoughts on the Nifty Bank. Quite a bit of a fall in the last 1 hour yesterday.
Yeah, good morning. Yes, yesterday was a disappointment, especially the second half, as you say. Well, the trend is, I would say the trend is up, but that doesn't feel like that. Our stops for the Nifty are 25,800. With that stop in mind, you have to maintain, I would suggest maintaining long positions in the market. There's no need to buy today. If you have a position, hold on to it. I've already given you a stop loss. Let this choppiness be over. Then we'll take new trades, but existing long positions hold.
Okay, so stop loss should be 25,800. Mitesh, you've been a bit cautious in the markets. Yesterday, in the last 30 minutes, you were recommending a few STBT calls. What's the outlook today?
In fact, yesterday morning also I suggested that we might be in a range and therefore we might actually, after, getting close to the all-time highs, see some kind of a pullback. And would just still maintain that outline that, the good area or the good levels to buy would be closer to about 25,900, 800 zone. I think somewhere between that 100-point range. So I still believe that that's the good buying opportunity. But one thing which has changed from yesterday is the PCR, which is now close to about 0.65, 0.66, I think, and getting close to oversold levels. So I think today, in that sense, if we get a 50, 70 point kind of a cut, I think, we'll be in that buying range and I would explore some long ideas. So on the index, if you get it around 25,850, 860, buy with a stop below 25,780 and look for a retest of 26,100 to about 200 zones on the upside. So that's the idea.
By the dip. What about stocks, Mitesh?
So on the stock side, I have 3 buys to a sell. Wipro after a long time comes on the buy list. Keep a stop at 243, look for a target of 255. RBL Bank after a good pullback has come to support level. So buy with a stop at 303 for targets of 318. And MFSL, I think that's also a buy. Keep a stop at 1650, look for targets of 1740. And one sell call, that is PNB Housing. On a mild bounce back, say around 876, 880. Sell with a stop at 895 for a target of around 840.
Sudarshan, your calls?
Well, it's a mixed bag, and that tells you that the sense is not very clear. RVNL is a buy with a stop under 322. Persistent is a buy with a stop under 62.40. Now I have 2 intraday shorts. Ashok Leyland, buy with a stop above 150, and Glenmark. And Ashok Leyland, sell with a stop above 150, and Glenmark, sell with a stop above 1870.
Kavya, we'll come back to you and revisit the trades. For now, the big story over the weekend and yesterday was India's new labour law regime. So 29 laws have been rationalized into 4 new labour codes. And the aim is to modernize the framework, extend social security to a wider workforce, formalize the workforce and ensure universal wage protection. Our Labour Secretary, Vandana Gurnani, told us that a committee would be formed to fix the floor rate soon. Listen in.
Floor wage was there earlier also. However, it was not mandatory. It was an optional kind of a floor wage, which Government of India used to fix at regular intervals. Now, as per the new course, the floor wage is going to be having a statutory backing, which means it's mandatory, and no state should fix their minimum wage below the floor wage. The floor wage would, as you said, look into the minimum living standards, and there would be a committee of experts that would be deciding on what should be the floor wage, and these would be periodically revised upwards. A lot of factories would have slightly less than 100 workers directly employed and rest through contractors, so that they could not come in the ambit of this condition. Now this has been increased to 300, so which means that up to 300 the companies would be now encouraged to take people on direct roles with themselves instead of taking them through contract, because it's only about 300 that they would need to take permission for any retrenchment, layoff or closure from the government. So this, in a way, this actually increases or encourages formalization, and this is an aspect that needs to be understood more clearly.
Indeed, even the experts we spoke to yesterday, they're saying that this is one big step towards formalization of the Indian workforce. We've been talking about it for long, but the labor laws will truly ensure that. So that's a big push towards that. But let's talk about the infrastructure sector, also a very labor-intensive sector. So let's find out how these changes will impact the profitability of companies listed here. Vijay Agarwal, MD and Head of Infrastructure Practice at Equities Capital, is now joining in. Mr. Agarwal, morning. This is Reema here. First, give us, the impact as you see it of the proposed changes in the labor code.
Thanks, Reema, for inviting. See, these labor codes are a very progressive steps in the country, and we were all waiting for last 5 years where the laws have been passed, but they were not operationalized. Now, definitely every sector will have a mixed bag. So infrastructure sector is a very labor-intensive sector, and you have laborers which are on the payroll of the company and which are outside the payroll, because you require thousands of labor to carry out the work. Their job requirement may be for 6 months to 1 year. And typically people move from site to site to do the work. But with the new amendment, I am not the expert, but whatever I had read, see, there are two things which will have a profitability impact on the infra companies. One is your minimum wage, where the PF is applicable. It has been increased from 15,000 to 25,000. And another changes which has been done is that your allowances are also covered now for PF deduction. So that will have an impact on the profitability. It will increase the cost. Another one which was the gratuity. Earlier you had a 5 years period required for a payment of gratuity. Now it has been reduced to 1 year. So generally, what I had seen in the infrastructure industry, people stay for 3 to 4 years in one company, then move out. Now, this will definitely increase the cost of gratuity, because if any person is staying more than 1 year, the company has to pay a gratuity. By the way, if you see local municipal laws in the offices, as per shop and establishment, gratuity is payable after 1 year. But definitely it was not applicable to the factories and other setups. So I think that's a parity government has brought in here. I think the similar amendment will be required in income tax to give the exemption for gratuity. So I think on the labor side also, once you are paying the wages to the laborers, and generally 18 to 20,000 are the wages which you are paying to laborers as a minimum wages across India. So now you will have to pay a PF on this 20,000 amount, not on 15,000 amount. So there will be some impact on the companies. We have to see how it will pan out for all the companies.
How do you think this increased cost burden will be shared? Have you spoken to any companies or done any sensitivity analysis? Which companies do you look at in the infrastructure space, and how is their cost structure changing post these? Have you done some numbers?
Yeah. So generally, ballpark number 6 to 8% is the employee cost in most of the infra companies.
Okay.
And maybe I think maybe a 0.2% impact may come for these companies because of these changes.
Sorry, 6 to 8% is the employee cost as a percentage of overall expense, and the increase will be?
0.2 to 0.3%, not more than that. I don't see it will be a major impact of that. But see, they were already complying up to 15,000 rupees.
Correct.
It's a 15 to 25,000, which is an additional impact they had to bear.
Okay, got that.
And
this they will have to bear, or do you think the clauses that they have allows a pass-through?
I don't think labor is a component which is a pass-through.
Okay.
In the tax. As per my memory, whatever contracts I had read, labor component generally, see, your WPI is a one pass-through where WPI inflation index, and they link to a major raw materials, basically. Rest of the cost is a fixed cost for the companies, basically.
Okay, so
this will be part of the fixed cost.
Fixed cost. So increased wages, PF, gratuity will not be a pass-through, according to you. But the impact is about 0.1 to 0.2%. You also spoke about how these companies employ a lot of contract laborers who move from project to project. So what happens to this floating workforce, and is there going to be any change? Do you think companies will now, I mean, these contract laborers will prefer to be associated with one company? How does it change the dynamics?
So I think dynamics will not change. Currently, also the laborers who are on the contractors' payroll, their PF compliance is being done regularly. So it will continue, and I think the PF Act has made a very good thing is where they had given a single social security number to each laborer. So even if he moves from one contractor to another contractor, his PF deduction is accumulated in one account, which he can withdraw at the time of his retirement. So his benefits are with him. And even if he is moving pan-India, the benefits are with him and he is able to access those benefits. And another, I am not sure about the ESIC. What I read was that ESIC will also be extended to these people, then they will definitely get the health benefits if it is so.
Vijay, just one final question. Just review the overall Q2 numbers for the infra companies that you track. What stood out for you in terms of trends? What are you watching going ahead and your top picks?
So I think if I see the road companies, definitely order book is a big challenge. And that's why that is also being impacted on their growth. So most of the companies are guiding for 5 to 10% revenue growth in this year. And we have to really watch how many companies will be able to meet those guidance. But see, everyone is already impacted because of order book. Order book is like 1.8 to 2.2 times of revenue. And probably if they don't get the order, next year it will be only 1x. And that is visible on the share prices of infra companies. And the last 1 year, roughly, there's a lot of correction, which is like counter to counter. Some counter it has gone to like 15%, 20%. Is because of that revenue visibility and profitability. But good thing is that these infra companies are diversifying their sectors. They are entering into solar EPC, BESS project, railway projects, mining projects to maintain their order book. If you see this 1.8 to 2 times order book, it's also coming from that perspective. So yeah, companies are doing hard work.
Yeah.
To really.
We'll leave it, Vijay, we'll leave it there. Thank you very much for joining us. Good perspective. Just sort of apologies, we're just running into market open. So thank you for joining us with that perspective. Now, 9-10 calls a little later, actually, but Sudarshan is with us with that. Sudarshan, what do you have?
So Investec has downgraded all the OMCs, that is all marketing companies.
So 1 minute. So that question was for Sudarshan Sukhani. I think Sud.
All right.
That's a nice one. Cross connection, huh? But I'm coming to you, Sud. Sudarshan, go on. 9-10.
Persistent is a buying opportunity. Buy Persistent with a stop under 62.40.
Okay, Persistent. Mitesh, what about you?
I'll also go with the buy call today. A buy on Wipro with a stop at 243 for targets of 255.
Okay, 2 IT names and IT did well yesterday. Thank you very much, gentlemen. Sudarshan, Sud, over to you. Ab boliye.
Okay, now to oil marketing companies, Investec has downgraded all the 3 names to sell from hold, and the main reason, basically main risk, is the fall in the diesel marketing margin. While refining margin has moved higher, Singapore GRM has moved higher to $13 per BBL in last few days. But it believes that for OMCs, these OMCs are more sensitive to marketing margin rather than refining margin. And diesel marketing margin has slipped to negative territory from the around rupees 4 per litre a month ago. And that's the main reason that it has downgraded. Next one is JP Morgan Reliance. It maintains overhead call and target is 1727 per share. It says it has outperformed Nifty Y2D. But going into 2026, it maintains the positive bias because valuations relative to peers, those peers are DMart and Bharti Airtel, are still attractive. And earnings drag from weak refining and petchem through FY 24-25 are over. Some of the catalysts it has mentioned: Geo IPO and tariff increase, new energy commissioning, and more stable retail growth. That's it's expecting in 2026.
Got that. So right on time. Thank you very much for joining us with that. So OMC is down, Reliance up. That's the view. One from Investec, the other one from JP Morgan. Markets have opened, so it's absolutely flat. 25,970, 25,980. Nifty Bank is absolutely flat. And 58,780 is where So it's kind of, I mean, almost unchanged, right, across the indices right now. Small cap index is a little bit more in terms of green. The mid-cap index is slightly lower, so neither here nor there. This is an absolutely quiet start to the trading session. 900 up, 800 lower. So even in terms of, if you look at advanced decline, and this is very early to do that, there's not very much which one can kind of say one way or the other. Max Health on one side. I think with Max as well, there's a call from one of the brokers. BEL is there, JSW Steel, so they're all green. And on the other end of the spectrum, there's Indigo, Wipro, Nestle. But split right down the middle on the Nifty heat map. 24 points lower at this stage, 25,940 on the index. Guys.
Well, let's talk about Max Healthcare, where Citi has written a note where bullish call 1460 is the target price, and the current market price is about 1165. Max Healthcare is up 1%, top gainer now on the Nifty. They met the management, that's Citi, and the key takeaway is that the management expects a strong growth trajectory supported by rising occupancy, improving case mix, improving profitability at Dwarka and Noida, and even the three major brownfield projects which are going to be commissioned, they don't expect an EBITDA drag from there. So Dr. Reddy's is doing pretty well. BEL has seen a pop this morning. The company has gotten into a joint venture agreement with another company, Safran Electronics, for production of Hammer Smart Precision Guided weapons. So joint venture agreement, BEL, has seen a bit of a pop. Other gainers included Dr. Reddy's. Dr. Reddy's today has surpassed the 200-day moving average with the gain today. The European Commission has granted marketing authorization for a medicine for Dr. Reddy's, which is used to treat osteoporosis. So news there, and stock is doing well. So the top three gainers are Dr. Reddy's, BEL, Max Healthcare. Other stocks on the gaining list include Maruti Suzuki, Bajaj Auto. Eternal is up close to about 0.5%. JSW has a little bit of a green tick. On the way down, IT is seeing a little bit of profit booking after yesterday's gains. So Wipro, Infosys, Tech Mahindra in the red. Nestle has a bit of a downtick. Reliance Industries, JP Morgan is bullish. They see the target price above 1700, but there is no rub-off this morning. Reliance Industries is a bit subdued. And let's just pull up some of these oil marketing companies to see if there is any impact of that Investec downgrade. BPCL, HPCL, IOC come up for you on your screen. 1% down.
Well, that's right. And in fact, the Nifty is down 20-25 points thereabouts. I think the Nifty has very strong support at around the 20 DMA. So in all probability, that doesn't get breached in today's trading session. But the breadth of the market is already negative. So that's a bit of a worry. And by the end of today, if that can turn around, the bulls will feel very good, because on a day-to-day basis, we have seen the number of stocks that are declining are outweighing the number of stocks that are advancing. Moving to individual stocks, ITI has given up some ground, fallen on decent volumes for the first few minutes, down 2%. RVNL is another one. I think yesterday in late trade, it did see a bit of a surge. That one's giving back some part of it. It is down close to under 1.5%. And Aztec, Aztec Life, I think we should get that stock up for you on the screen. It was down a little bit. It was down 3% actually, but that dip has got bought into. And on a day-to-day basis, I've been observing this on Aztec. The last 1 month, it is up close to around 35%. So that's a stock that should be on your radar. Karnataka Bank, another one of those big movers. Large amount of the stake is with institutions. There are large HNIs as well that have it. And on a day-to-day basis, volumes have been very high. That is up yet again 2.5%. Grow, that's up close to around 3%. Remember, in yesterday's trading session, the stock slipped considerably from the highs. So that started off at least on the winning side. And I think PhysicsWallah as well, there was some green to kickstart trade. So the Nifty is holding with mild green now, 10-15 points higher. However, the breadth of the market, that's important. And for the time being at least, number of stocks advancing are marginally outperforming the number of stocks declining.
Absolutely, Nigel. By the way, Grow at 157 rupees is the number one volume-led gainer by far. Huge volumes on it, and it's up about 3.5% at this stage. This is GE Vernova TND, right? 1%, but very large volumes. So keep an eye out on this one. Karnataka Bank, big outperformer. I mean, it just keeps going. So 2 days back, 175 close, 200 pass now. So that's the other thing. What else? TeamLease was this big shooting star, but TeamLease kind of ended in the middle of the range. The high yesterday was about 1872, and the close was 1686. But it's up 3% this morning. Premier Explosives 1.7 higher. There've been a couple of upgrades on these new listings, HDB and Tata Capital. HDB I can see with about 1.5% gain. LG Electronics, again, one of those names after listings which has not done very well. It's up about 1.5%. The Phoenix Limited, the mall company, 2% higher. And so it goes. But, you go down the list, volumes start to thin out very, very fast right away. Narayana Hrudayalaya, basically, it's a big step up compared to where it was, 6-7 days back. From 1750 levels, it went up to about 2100 and it's cooled off to about 1940 right now. It's under pressure with some, not large, but it's got volumes on it. Swiggy is down another 2.5%. Swiggy is down, 2.5% at this stage. So, yeah, I mean, it's a quiet, very, very quiet. 1 point change on the Nifty, right? 25,955, so finely balanced almost. Well, we have Ashish Gupta, CIO at Axis AMC, is with us. Ashish, good morning. Great to have you with us here. Prashant this side. Thanks very much. As some people have jokingly described it, but I think the description fits accurately. This is a market in liquid oxygen. That old Ajit saying, "Jeene nahi dega, marne nahi dega." It's like there's enough on both sides, right?
I agree with the sentiment. I think if you look technically on the market, you have the macros that support it. I think we are also seeing a fair degree of resilience in earnings. I think this quarter, after nearly 5 quarters, we have kind of stepped away from the earnings downgrades that we had been witnessing. So I think the macros support the market, domestic flows support the market. But on the flip side, we continue to have the challenge with the large pipeline of IPOs and stake sales, right? And if you look at the data, just in the last 90 days, more than 60,000 crores of IPOs have happened. Over the next 1 month itself, another 30,000 crores of IPOs are slated to come to the market. So I think the fact that domestic flows and SIP flows continue to be strong is offset by this continuous supply that we are seeing. And again, IPOs is only one part of the supply. And if you see some of the data about non-IPO supply. So, for example, companies that had IPO'd in the last 6 months, about $30 billion of stakes will be getting out of lock-in over the next 6 months. So, unfortunately, this pipeline of supply does not seem to be abating anytime soon, and that kind of keeps the market upside more moderate.
I think sometime this week we'll hear more on Misho's IPO too. Perhaps the price man and then the opening would subsequently follow. And that's going to be a big one, keenly tracked. Ashish, morning. This is Rima here. So as you look ahead to 2026, what are the big predictions that you are making? What do you expect? India's performance relative to global peers, will it reverse the underperformance? I mean, what are your thoughts about next year? And give us your top 3 predictions.
Sure. So I think clearly this year, thankfully, on absolute basis, India has not done too badly. We are still up a high single-digit percentage, particularly in the Nifty. The broader market, the small caps may not have done as well. But I think it's not been a bad year for the overall market. We'll end the year on a positive note. Where we kind of have struggled is on a relative basis. This has been a year of global equity market rally, particularly with the dollar weakness in the beginning of the year. Many global markets have been up in dollar terms between 25 to 35%, and we have not participated in that. Looking at next year, I think we can be more confident in saying that relative underperformance should go away. I think the challenge will be what's the degree of absolute outperformance that we will have, because given where valuations are, given the magnitude of supply that is coming in, big gains in the market look unlikely. I think what is very positive for the market is that in the last 6 to 9 months, we have seen a lot more affirmative action from the regulators, RBI, SEBI, as well as the government. And I think really after the challenges we have had on the tariff front, there is much more the sense of urgency in the government to take action to support the economy. We have seen reforms on the GST side, more recently on the labor code. We are going to see in the next month and a half, the new insurance bill coming through the parliament. There are more capital market reforms that are on the anvil. And another big activity that is being undertaken is deregulation. So there is a committee headed by the cabinet secretary that's driving this. There are also several provisions around decriminalization of major laws that are coming through. So I think that is really what will continue to spur the economy over the next 6 months. And that makes us more optimistic that the earnings recovery that we are seeing should sustain into next year.
All right. Hi, Ashish. Good morning. Good to see you. And Nigel on this side. Ashish, I wanted to ask you about the RBI action. What's your take? December rate cut is something that the street was expecting. You suddenly had some weakness on Friday, on the Indian rupee, which, gave you a little bit of a jitter. But otherwise, inflation down. I think the CAD is at the lowest we've seen in multiple years. Do you think that a rate cut is in the offing? Would you be backing it?
Yes, I think definitely we are expecting a rate cut. I think, frankly, if the pressure on the currency would not have been there, I think the probability of even a 50 basis point rate cut would have been there. But I think 25 basis point rate cut probability in the December meeting continues to be high despite whatever recent volatility on the currency we have seen. I think where we need to kind of be watchful of really what is the RBI action on the liquidity front. And if some of the defense of the currency leads to some moderation in the liquidity surplus that has been there in the market. If we look over the last 3 months, unlike last year when RBI tried to defend the currency around 83, 84 levels, the intervention has not drained out liquidity, and that's meant that cost of funding has continued to drop. So I think that is the only piece that we need to watch out for, that even as rates come down, even as RBI kind of steps to curb the volatility in the currency, how does the liquidity environment pan out? The other piece is really in terms of the demand supply for the long duration bonds. I think while liquidity has come in through the CRR cut, this year the open market operations have been limited, and the demand supply of bonds therefore had not been as favorable, and that's the reason we haven't seen the drop in the 10-year yields commensurate with the magnitude of rate cuts that have happened. So I think these are the two points that we need to watch out in the policy statement. I think the market is fairly confident about the rate cut coming through.
Ashish, we've got a flash running attributed to you. Big gains in markets unlikely. But we need some gains. Where will those gains come from? Where, would you look to, would one have to venture into slightly more, for the lack of a better word, riskier areas of the market, more, focused on absolute returns, single stocks, and even within sectors which look like they're not going anywhere? So what's the strategy going to be at Axis?
So actually, we are seeing over the last quarter, earnings growth recover and coming back even in the large cap space. Right? And if you see last 5-6 quarter, the gap between earnings growth between the mid-cap and the large-cap space had widened. Large-cap earnings growth had come down to low single-digit 5-6%. And as I look into the next year, you are actually seeing large-cap earnings growth recover. It's recovering in financials. It's recovering in the energy sector. Most of the IT companies are also talking about revenue growth being better than the last 12 months. And we are actually seeing next year earnings growth moving to about 15 to 16%. If you would have seen 3 quarters ago, we were at about 6% earnings growth. This quarter, earnings growth for the market has recovered to 10%. But clearly, the large cap earnings growth is picking up, and it's broad-based. If I talk about sectors, of course, financials, both banks and NBFCs, we continue to like. Besides the liquidity, what we are seeing is some early signs of pickup in credit. Asset quality challenges have anyway been modest. We continue to like sectors like power, defense, where there is strong themes of indigenization also playing through. Consumer discretionary is another area we like. So there are multiple sectors to play. And I think it's going to be a better market than what we saw, say, beginning of this calendar year, where the gains were much narrower.
All right, Ashish, always a pleasure talking to you. Thanks a lot for joining in. Wishing you a good day ahead, and we catch up before the end of this calendar year. Thanks a lot for joining in. Well, let's turn our attention now to the ferrous space, and there's plenty happening, both on the domestic steel industry as well as on the global front, with China exports continuing to remain at elevated levels. How can our regulators, as well as the people at the center, protect the domestic steel industry? Well, to help us out with some clarity, we have Sandeep Pondrik, the Secretary, Ministry of Steel, who joins in. Hi, Mr. Pondrik. Good morning. Thanks a lot for joining in. Always good to have you on the show, sir. Now, Street is waiting to hear from you, sir, because there have been some jitters with regard to this protection that you all were offering to the ferrous industry. Case in point being the safeguard duty. You all put it in at the right time. Then there was that notification that said that it's going to be in the works. However, the safeguard duty lapsed earlier in November, and there were some jitters about the way ahead. Is it delayed, the final notification, or is there some rethink? And if there's no rethink, by when do we expect this final notification with regard to safeguard duty on steel?
So thank you first for having me on the show. And on the safeguard duty, as you know that there is a process which was conducted by DGTR. And on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6th, 7th November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years, which is under consideration with the government. So we can expect a decision pretty soon. I can't give you a time frame right now, but I will expect a decision of the government in the near future.
All right.
That's the best I can tell you.
All right, so Mr. Pondrik, basically you're telling us that but currently is the safeguard duty already in works, that 12%?
No, after the provisional duty has elapsed, the safeguard duty is no longer there for the intervening period. If the government decides to reimpose it, means as per the DGTR final recommendations, then it will come into picture again.
But is there a risk, sir, that it doesn't, because in all probability, my interactions as well, whether I spoke to Tata Steel, JSW Steel, all of them indicated that it's coming. Just it could be a delay. It's not being put on the back burner. It's just a delay. Should we term it as a delay and we'll hear about it in the coming weeks?
As I said, the government decision should be there pretty soon. That's the best I can tell you. You know that since the matter is under examination in the government, I can't really give you a time frame or what the decision will be, but the decision should be there pretty soon.
Okay, we'll take it as pretty soon then, and the ferrous industry will be hoping sooner, not just soon, because otherwise we are at the risk of those imports coming in there. And the other point is, India relaxed the quality control regulations on steel imports. Why are we diluting BIS, sir? Do we have some kind of change in policy to facilitate maybe imports to help the SME players? Is there something on that front? I want to know the thought process.
So basically, before answering your question on quality control orders and BIS standards, I would like to point out the status of imports and exports.
Yes.
Now, if you actually see the import-export data vis-a-vis the data of the last year, the situation is much better in terms of trade imbalance as compared to last year. Last year, if you take the April to October data on steel exports and imports, last year the exports were less than half of imports, while this year they are more or less same. Imports are still slightly higher, but the situation is much better. Overall, the imports have reduced by 34%, and exports have increased by 25%. So just to give the background that in terms of trade imbalance in finished steel, the situation is much better than last year. Now coming to the issue of quality control orders and BIS standards. So there was a high-level committee made by the government which has recommended certain measures to ensure that the export competitiveness and the efficiency of domestic market is maintained. Now, when we talk about domestic market, it includes both the steel producers as well as the steel consumers. So the idea is that the domestic consumer industry also gets steel at a reasonable price, and they are not adversely affected. So that's why there have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have relaxed it, suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades, and specialty grades have to be imported, so we have suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both.
Okay, you're trying to do that balancing act in there. And Mr. Pondrik, in the past you have said that India's per capita of steel will just move up from here on. I think we're ballpark around 105 kgs or thereabouts. And you said that, we're likely to head to around 140, 150 as well. So how are you seeing demand on ground? The growth has been very good. Steel consumption growth in India actually has been splendid if you compare it with the globe. Do you expect demand to continue at this sort of a pace, 8-9% kind of growth? And also the government may go easy on the capex, right, in the second half of the fiscal. You have steel capacities coming on stream as well. And suddenly you have no big avenue to export because of what the United States has done and the way China is flooding the system. Do you fear that we're getting into a place where, in fact, that growth, that demand growth for steel could come in a bit of a tough spot? Or do you believe the demand is strong enough?
Well, if you see the data, for last 3 years, our domestic consumption has been growing at more than 12%, in fact, at 12.5%. This year, the consumption growth is slightly lower as compared to last 3 years. It is about 8% April to October data. But we expect the growth to increase a bit as it normally does in the second half of the year, because after the festival season, the infrastructure and real estate picks up. Having said that, I will expect that this year it's around 9%, the consumption growth. If we see the export market, you're right, there are challenges, especially in European Union, where CBAM will affect exports as well as the proposed European Union quota changes, that will also affect exports. If we take USA into picture, we did not have much exports to USA anyway.
Yeah.
So that's not likely to affect us. Overall, the exports will come into challenge, but our expectation is that our domestic consumption itself, we expect it to, even if you take a 8 to 9% growth, it will be around 160 million ton domestic consumption, and our exports last year was only about 4.5 million tons. So exports do not make a large part of our overall production.
Okay.
Having said that,
Yes.
there is a short-term challenge that the capacities are coming faster than the consumption growth, because as you know, the consumption growth, even if it increases it to 9%,
yes.
it will grow in a sort of a linear manner,
Okay.
while the capacities come in spurts. So we already have a capacity of about 215 million ton. So in short term, there may be some stress on demand-supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%.
Mr. Pondrik, hi, good morning. Prashant here. There is, so let's just, 2025, I guess, has been such a volatile year, right? With tariffs and it's essentially has been very, very difficult to call, so many twists and turns. So as we go into 2026, maybe a lot of these hotspots will cool down. US, China, US, India, hopefully, very soon. And it'll be a more settled kind of a world. Maybe average tariff rates perhaps will be higher when they were where they were at the end of 2024, but more certain in that sense. Let's hope so. Once you have all this settled, do you think, generally speaking, as you said, steel is in India largely a local story. It's not so much from our perspective, a big global story, provided we have that protection, etc., in place. But do you think once all these hotspots are settled and the environment is more certain, it should help in better prices? There's the China involution, anti-involution as well. And things should look much better in 26 over 25? It's a broad question.
Means to say that things should look up in terms of pricing. Yes, I think so, because two things. One, if you see the latest data from World Steel Association, the production of steel in other countries is going down. If you see the latest data, even China, the production in October has decreased significantly. So I would presume that the demand-supply scenario will improve. The steel prices right now are at quite low level. And as the demand increases in coming months, I would presume that 26 the prices would stabilize from where they are right now, and the steel sector should be, in terms of pricing and in terms of getting realistic or rather reasonable price realization, it should look better. And that is also reflected in the fact that the steel sector is planning and executing capacities, not only in the executing but also in planning. So both is happening, and that sorts of gives focus on this thing, that even the market is looking at the thing that the demand will keep growing.
All right. Mr. Pondrik, and the building blocks have been in place. I think for the last 9 to 10 years, I've been seeing that every time the industry is in a bit of a tizzy, you'll come in there and you'll have helped the industry. And that's why we have a solid domestic ferrous sector, which is standing out in this volatile environment globally. And the point on China, yes, they're producing less. The problem is the exports are continuing at around that 10 million tons odd. Hopefully that cools off, because otherwise it's blocking avenues where we can export as well. But we'll talk about that in greater detail, in the next time around. For the timing, the market will want to know a couple of factors. What about NMDC Steel? Is there going to be a divestment? You said maybe, probably it'll happen. Timeline is not sure. Do you think there has been some movement on that front? And if you could help us out with RINL, how are things progressing out there? The turnaround strategy was in place, progressing well?
So first, NSL, my answer remains the same. So the decision of divestment stands. The process is going on. There's no fixed time frame of when it will happen. So that's the status for now. Having said that, the plant is doing well. It is reaching almost 100% of its capacity in terms of production. Because of the low steel prices, they are not coming into a lot of profits, but in terms of operational efficiencies, they have improved quite significantly. So divestment, the decision stands. When? I can't really say. On the RINL, so as you know, last year this year, in fact, in January, government gave the package. They have used it well. I should say they have used it well from 25% capacity in August 2024. Now they are running at about 80% capacity. Yeah. They should reach 100%, but there are challenges in terms they have never actually ran at 100% for a long time. So they are getting operational challenges, which they are trying to address. But we hope that now the plant is on its way for revival on a sustainable manner, not in a short term. So we expect that RINL will continue to perform well and do well.
Okay, all right, Mr. Pondrik. Always a pleasure, sir, having you on the show. As you're telling us, both those two assets are ramping up well, NMDC Steel as well as RINL. But I'll tell you what, a lot of industry players, as we speak, have already messaged. They are hoping that safeguard duty comes sooner than expected, because they have been waiting, for the past 1 month or so for that notification to come in.
Since we have Mr. Pondrik, absolutely unfair question to you, sir, but you're one of the top bureaucrats in the government. On this India-US trade deal front, you're shaking your head already.
You better talk to my other colleagues who are dealing with it.
Okay.
I won't push you, but thank you very much for joining us, sir. Really appreciate it. And thank you very much. We'll take a quick commercial break here. We have the manager of G Shipping joining us on the other side. Stay tuned. Coming up. Okay, welcome back. Markets, of course, not doing very much. We're about three-point change, nothing. But the story, of course, is that basically the fact that we've pulled up quite a bit from the day's lowest point. I think the low was made about 25,900, and we pulled about 60 points, 50, 60 points off the lows. And I think one big reason, of course, is Reliance Industries once again, which seems to be pulling its weight. It's up 1.25% on the day, and of course more from the day's lowest point. So 1554 on RIL. I think majority reason why the market is doing what it is doing. Now, overnight news flow, and maybe we can put that quote up from Ukrainian President Zelensky, sounding much more open to the idea of settling the war in Russia, and those graphics will come up. This is a US brokered peace plan, and Zelensky not going on the offensive like he has in the past couple of years, saying we're going to fight to the end, and we got support from European countries who've been urging him to continue the fight, etc., etc. Much more conciliatory sounding Ukrainian President Zelensky. Remember, it's a war which has gone on for 3 years now, over 3 years now. G. Shivkumar is Executive Director and CFO at G Shipping. Thanks very much, Mr. Shivkumar. Good to have you with us here. We've discussed this many times in the past. How material is this? Something of a ceasefire coming into effect, if it can happen. I think there's a deadline this week, 27th, which of course seems to have been put in place by President Trump. Go on.
Morning, Prashant, and thanks for having me. Yeah, so we'll await whatever developments happen, and this is of course a fast-changing situation. The first impact of a ceasefire. And we'll have to see what impact it has on the tanker market. So if trade patterns go back to where they were 4 years ago, before the start of the war, then the first impact is a negative for the tanker markets, because we had between a 5 and 10% ton-mile bump as a result of the change in trade patterns. However, then that's a negative for the freight market. So that's a negative for earnings if it happens. However, you'll have to see whether trade patterns actually go back to where they were. And just to remind you, most of the trade was between Russia and Western Europe. And Western Europe was heavily dependent on Russian crude oil and Russian refined products, which changed after sanctions came in, so on and so forth, in 2022-23. So the question is whether it goes back to the earlier situation, or you have this disruption happening permanently. So that's really, while a ceasefire could happen, and that would be good, we don't know whether the trade patterns will actually go back to where they were in 2021 pre-war. And that's really the critical point for the tanker markets.
So 5 to 10% drop and negative for earnings, basically, immediately, right?
And when I say 5 to 10% drop, that's in ton-mile demand, and the impact on rates would be much, much, much higher. So just to give you an idea, 4 years ago, rates for tankers, whether it's product tankers or crude tankers, were between $10,000 and $15,000 a day. Today, the rate for crude tankers, which is, and let's say the mid and slightly larger size crude tankers, Aframax, Suezmax, are $50,000 a day. Okay, and that's the kind of impact a 5% difference in ton-mile demand can have. However, as I said, the caveat is that is if trade patterns go back to where they were before the war, which is a little unlikely in most analysts' opinions.
Okay. Wow, 10 to 15,000 pre the war starting. This is tanker and product, oil and crude and tanker product rates. Tanker rates basically for oil and product, and now 50,000.
That's right. For crude tankers, for product tankers, it's like $30,000 a day.
Wow.
So these little changes on the margin, 2 to 3% also makes a big difference on the margin, because the market is pretty tight. And, once that change happens, then it's anybody's guess what happens to rates.
And you said if the product purchase thing remains, if it goes back, basically, which is Western Europe starts to buy from Russia once again in a big way, only then all this will happen.
Will reverse. Yeah, that's right. And then you have the second order impact, which is there's a lot of ships which are actually still here, and the fleet is very old, the shipping tanker fleet. And a lot of the ships are only still carrying cargo, though they are overage, because the market is so hot, because you're making $30,000, $40,000, $50,000 a day. And if the market drops, then the next impact is for a lot of ships to get removed, which then brings the markets back into balance.
Yeah. What happens to, because, the product market has also been very tight, right? I think 7-8 days back, there was that refinery in Russia, which was a major attack. But I think supplies, etc., have resumed from the port nearest to it.
Yeah, but refining margins are very high, especially in Europe. So there is a shortage, especially of diesel. I think even US gasoline inventories are pretty low. So there is a shortage of refined product. So oil is, moving from wherever it's available, even if it's a long way away. So there is, and refining margins, high refining margins, incentivize transportation of crude oil, transportation of refined products. So demand for tankers is really being driven by these refining margins and the amount of oil that's coming into the market, the crude oil which is being pushed into the market by OPEC.
Yeah. What kind of, what can happen if, do you have a view, because you're so closely associated here, these exceptionally high, margins, especially on diesel. Mm-hmm. If say there's a ceasefire or something, you think we can, what happens there?
Yeah, so you could have that Russian oil coming back in. You keep having these little disruptions from the attacks, the drone attacks on the Russian refineries, and that's what's taking out this capacity from time to time. We also have some refinery turnarounds happening in the Middle East, which is also resulting in more crude oil being exported out of the Middle East. And again, this happens in a cycle. You'll get those refineries coming back, and maybe you'll get margins coming off again because they're exceptionally high now. We're talking $35, $40 in Europe. So that should probably come down because they are unsustainably high. You can't have them this high for much longer. But the good thing is that it helps the tanker market.
Yeah, and what could be the kind of impact here? I mean, just like you did for the, is there a way to tell?
You mean on the tanker earnings?
No, not tanker. So diesel spot cracks, as you said, $30 a barrel, right? Yeah. What could happen to it? $30, $40, as you said.
Yeah, I'm not sure. It's pretty high already. I don't know how much higher it could go. And again, we're not experts. We just say that, okay, this is high and that's what's driving the market and we enjoy it while.
No. I'm saying they could be, if there is more product into the market and Russian oil is back in the market in a big way, these cracks will compress. That's my point. Not about.
That's right.
So could there be a substantial...
The impact would be that they would come down a little bit. That's right. Come down substantially. Yeah.
Yeah. Okay. Come down substantially. And you would expect all of this to play. Financial markets respond, as you know, quick and fast. But this is, the business of ships and routing and all of that stuff, right? So that takes time. But do you expect all of this? If there's a ceasefire announcement, we wake up to a ceasefire announcement. You think all of this will play out very fast?
First, the EU has to remove sanctions. The EU has to accept it. Then the consumer, so the German consumer, let's say, who was earlier importing a lot of crude oil from Russia, has to go back to importing crude oil from Russia rather than from the US or from Brazil or from West Africa. So all of that has to happen. And this is not as easy as signing a ceasefire or agreeing a ceasefire. So that will take some time. Yeah. That will take a bit of time to play out in the tanker market. Again, sentiment can change, but you need a lot of things to fall in place for trade patterns to go back to where they were before.
Got that. Now, just one last question, Mr. Shivkumar, and this is, I'm moving away now from what the bulk of our conversation, actually all the conversation so far, which is this big push to the shipbuilding, make ships, at home here. Actually, a lot of countries are doing it. US is doing it. It is talking about it. What do you make of it, the push?
I think it's good to have a shipbuilding ecosystem, a shipbuilding and ship repair ecosystem, and a shipping ecosystem for that matter. As a large maritime country, we need to have a bigger shipping industry, which includes everything associated with shipping. So to that extent, we welcome it. It'll take time, obviously, to build this up, but you have to start sometime. And hopefully this can get built up into a big contributor. And so we are happy that shipping is on the radar of the government. As a big consumer of freight, as the Indian economy is, it's good to have a shipping fleet, an Indian shipping fleet.
Yeah. No, 100%. It's a critical sector in that sense. And China, by far the leader, right? In terms of the number of ships they make every year. Thank you very much, Mr. Shivkumar. And I hope we don't have to talk in the realm of possibility, and soon we can say, well, the war's ended and there's some semblance of peace in that part of the world. Thank you very much for joining us. Good speaking with you. Well, that's GE Shipping with some perspective on, the likely implications of this ceasefire, which is it's looked lossable many times in the past, but I think closer than ever before. 25,992 is where the Nifty is at. And we're up about 32 points off the lows by quite a bit. We have Chandan Taparia, who's with us, Head of Derivative and Technicals, Wealth Management and Motilal Oswal Financial Services. Chandan, good morning. Good to have you with us here. Quick word on what the price action you're seeing and trades you would recommend?
Yeah, good morning. Thanks for having me. So we have monthly expiry and index got stuck in between the series VWAP and weekly volume weighted average. So as of now, if I look at the series on series basis, Nifty just flattish. But the good part is we have seen put writing at 25,850, and that is also the volume weighted average for the entire month. The only concern is that weekly volume weighted average is at 26,050, and that is not allowing market to move beyond that level. But the good part is that market is trying to absorb the supply near 26,000 marks from last couple of days. So major trend could remain positive. However, we may consolidate today with some volatile swings being the monthly expiry. But overall, I believe till it holds above 25,800, 25,850, index has potential to rally towards 26,100 to its all-time high of 26,277. The good part is that today the India VIX is down by 6%, and that is somehow adding some sort of support-based buying in the market. Now, talking about Bank Nifty index, Bank Nifty outperformed the broader market in this series, and Bank Nifty has comparatively higher base. As of now, it has been supporting or finding the key support at 58,500. So till it holds above the same, we are expecting a positive stance towards 59,250 to 59,500 marks. Now, talking about stock-specific idea, our first study is buy on AB Capital. One of the strongest counter, overall longs are being added on series to series basis with positive rollover. In fact, multiple supports are visible near 325, 330 marks. And put writing also visible in the next series. So we are recommending to buy with support of 330, and this counter can head towards 360 kind of level. Second trading idea that is from the auto pack, that is buy on Ashok Leyland. In fact, some short covering is visible in the counter. Consolidation of last 5 to 7 days is getting over. Major trend is positive, respecting well above its rising trend line. Rollovers are beyond 82, 85%, indicates bullish bias. So with support of 144, one can see an upside target towards 158 kind of level. And one more trading idea that will be buy on Nykaa. Strongest price pattern has been consolidating, but every declines are being bought. So with support of 264, we are looking for an upside target towards 285 in the Nykaa.
Thank you very much for that. After a slow start, the Nifty is back at 26,000, and Reliance Industries has been a big contributor. Stock has popped nearly 1%. Get into a break. On the other side, Manisha Gupta will focus on commodities. Stay tuned. Welcome back. As promised, let's talk commodities. Manisha is now joining in. Manisha, what are you looking at?
Precious metals, because overnight gains have been quite strong into this one. And after being stuck in a range for gold and silver, both of them, for most part of the last 4 to 6 weeks, we seem to be breaking range on the higher side right now. And this is majorly ahead of the lot of US data that's coming in as well. Today, you have the US retail sales, PPI numbers, home sales, consumer confidence, all of that data and some more is coming in today. And the important numbers that are coming in tomorrow is the US weekly jobless claims number. You have the durable goods data order. It also is about the third quarter GDP numbers and some more data again coming in tomorrow as well. Remember, it's a truncated week for US because of the Thanksgiving holiday there. And ahead of all of this as well, we also are looking at the US December rate cut probability on CME rise to a 79%. This is from 44% in the previous week. And that in turn also seems to be supporting gold and silver prices. There is a bit of a decline that we have seen for the dollar index that has come off its 6-month highs, also supportive. Many of these metals, not just precious, but the base metal prices have gained today because of this as well. Take a look at the gold prices then, and we have seen 2% of an overnight gain come in for this one. And with that, we are trading at around $41.50 an ounce. For the month, we are up by 4% and 58% up for this year. This is perhaps the best yearly gain that gold is heading for since 1979, with 58% of gains. For the Indian markets, the gains stand to around 63%. That is with the rupee depreciation as well. So we are looking at higher gold prices for the Indian consumers there. Take a look at silver, and we've seen 1.5% of gains in the overnight market for this one. It's 10% up for the month of November, and 78% of a return is what silver has given you for this year. And this is for the international markets. For the Indian markets, it is 84% of gains, taking rupee depreciation in. This is the best yearly gain that silver is headed for as well for a decade there. For the international markets, there's a bit of a disparity. And if you look at the premium, COMEX is paying it slightly on the higher side, but because COMEX has a silver inventory of 462 million ounces, while LBM stands and London stands at 844 million ounces. So London is trading cheaper. You have a premium that COMEX is paying and premium that much of the Asian markets are also paying, especially India, where the physical silver investment buying continues to be on the stronger side. And then it's not just about gold and silver. Platinum is up 74% this year. Palladium trading up 59% as well, with markets awaiting all of that data that US has to give in, and that would give you further direction.
Okay, Manisha, thank you very much for that. Well, as commodities in focus, we're going to take a quick commercial break here. Time for our special segment, Market Masters. Lata will be speaking with Harendra Kumar of Elara Capital on second quarter earnings, valuations, and his preferred picks. Stay tuned. Coming up.
Welcome back. Indian equity indexes, large or mid-cap indexes, have delivered only about 6 to 7% returns in calendar 2025. The second quarter earnings of FY26, that is, have not quite been able to trigger a market-wide rally. But are the earnings at least showing signs of bottoming? Elara Capital has just put out a report stating that Nifty EPS rose only 6.8% in the second quarter, and for the full year will deliver only 3% EPS growth. But they expect Nifty EPS to grow by 14% in FY27. Elara also points out that midcaps have done far better. Now, to get a sense of whether the worst of earnings downgrades is over and which sectors show maximum promise in calendar 2026, I have with me Harendra Kumar, Managing Director Institutional Equities at Elara Capital. Harendra, good morning and thank you very much. We're meeting after a pretty long time on air. Well, first up, that's the question really which is bedeviling the market, confusing investors. Is the worst of earnings over? Are you seeing, a reasonable, steady earnings growth from here on?
Yes, pretty much. I think the good part is that we caught this trend reversal early on before the results in our preview note. And we said that sequentially, the single-digit earnings is going to trough out and you're going to see a rebound in earnings from Q2. So while the Nifty earnings are tepid, our broader Elara Capital company coverage, which is around 300, seen a good PAT growth of 13.5%. And this is largely coming from mid and small, which has surprised even the large caps. So there is a broadening of trend in the earnings, which is clearly being seen from the numbers. Now, this trend is going to become stronger as we progress into the next year.
Okay.
What is driving this is, of course, our rebound in our nominal growth, which will set in. That's the point we're trying to make.
Okay, Harendra, I'm coming to that in just a bit. I mean, that's the most important thing that people want to ask. But this confusion between Nifty and the broader market. Your report says Nifty grew by 6.8% EPS in second quarter, but for the full year, you're expecting only 3%. So Nifty hasn't quite bottomed out, even if the, non-Nifty stocks have?
Yes, if you see, because the calibration is the Nifty is dominated by the financial sector index, which is still seeing a calibration with respect to the NIM margins and the interest rate resets. That will reverse in next year after the deposit pricing, the interest rate and loan pricing gets settled in. That's one very large important point that you'll have to see. Okay. And of course, you will get a reset on the IT earnings as well, which is a significant portion because of the rupee depreciation and the rebound. Okay. So when you have two large market weights moving upwards, you should see a natural growth. And third, of course, you will have the consumer discretionary, which has picked up with the autos and some of the discretionary spends, will get a continuous fillip going into next year with the pay commission, which is larger than the GST tax cuts or the regular tax cuts that the government gave this year. So all in all, there are multiple triggers for earnings in various sectors to play up.
Okay. No, I take your point on Nifty being kind of weighed down for the current year, even in the second half, by the financials, which I think is about, 35% of the Nifty weight. So that would weigh down. So should one look more at mid-caps? Is that the place where the growth is?
Yeah, absolutely. If you see, where did the mid-caps start to flounder? Mid-caps are, lower down the food chain. Once you tighten liquidity on the large caps, it actually flows down to the mid and small. So when the RBI started tightening, from all sides and the flow down of the correction set in the mid caps. Now, as the liquidity start to ease up, it will start flowing into the profit margins of mid caps and all caps. So clearly that is what is being seen in this current quarter earnings as well. And this trend will continue. And remember, there is this broadening of the market where the mid and small caps are in fact adding more value than large caps because of the availability of capital and productivity gains. So that's where we see higher earnings growth coming up. So in fact, we have put out in a note that our preferred picks are mid caps first, large caps, and then small caps. So if you're looking for hunting to create more alpha for next year, I think you should start looking very aggressively on the mid cap side.
Okay, that's helpful. And that line of yours from your report is flashing as you speak. Let's then concentrate on sectors and stocks. What would your top three sectors be? in terms of earnings growth and even stock price growth?
So first and foremost is, of course, what we've seen is we've spoken on financials. Our financials form around 34% of profit weight, Nifty weight. And it is also heavily FI owned. So what we're seeing is with the return of the earnings for the financial sector, the FIs will also start buying the financial space. And this is quite under-owned, and the valuations are quite converging to whether fair value multiples. If you look at the private banks per se, you're getting larger names at 2.2, 2.1 times. And if growth returns, the multiples should expand. So we see, a good play in private banks at there, given that PSU valuations are kind of converged to private banks. So, if you see what's weighing on the Nifty is the private bank earning re-rating. Pretty much all the three large banks have not delivered anything. Even in fact, the stock prices are pretty much matching the earning growth, or they're trailing the earnings growth. So if the growth comes back, there will be a re-rating there. So that's position.
Yeah.
As rates ease and liquidity eases, NBFCs will outperform the larger ones as well. So what we're saying is the mid banks and NBFCs and some fintechs in a easing liquidity environment tend to do better.
Okay. Got that. So those would be three of your bets in the financial space in 2026. What outside? I mean, one hears a lot of buzz on power. Several parts of the power cycle have done well. Is that a space you like? It is one of the better performing indexes, energy index in 25.
That's correct. So I think power is viewed as utilities, but I think it should now be seen as a growth sector. Given that as India's manufacturing sectors get a little better aligned, we have now new data centers coming up. The power requirement growth is going to go on an uptick. And if you see the CapEx announcements coming up with new data centers in Vizag or by other players, it's a given now. Now, along with that, the government is triggering the Nuclear Power Act, right? So it's going to, in the budget session, probably take up the inclusion of private companies to run nuclear power projects, the SMRs. Now, this will lead to a renewed CapEx cycle as well. So what we're saying is that the power sector CapEx that had pretty much stalled, for some reason, will get a new cycle, a new breath of life.
Okay.
So that will play up on cap goods, the financiers, the exchanges. So its value chain is as much like auto ancillary. So if you trigger power sector, it works on the economic, different sectors down the
Fair
line.
point. Yeah, fair point. Okay, let me come to, what's the fashion of the day. E-commerce companies, as well as, the recent IPOs. In your list, in large caps, you have Eternal, and in small caps, you have Delivery. Otherwise, I don't see too many of the, newfangled or latest, lately listed IPOs, like, say, Grow. I don't see Lenskart. I don't see a lot of the newly listed ones. You're not still enamored by these new listings?
No, so we have a very basic methodology of how we assess value. We have anchoring value, which is pretty much the net worth of the company. We have short term, and large part of the value of any stock comes from the terminal value. Now, I can give you umpteen examples. So you can say, for example, one asset manager trades at 2,500 crore PAT and a 1 lakh crore market cap, which is around 45, 50 times multiple. And you have a new IPO which is coming at 0 PAT at 1 lakh crore multiple. So the new listed company, we are not against the newly listed company, but it will take years to come to 2,000 or 2,500 crore PAT before the 1 lakh crore market cap is justified.
Okay.
So you could see the time value killing the returns for investors who enter at this price point. We'll be happy to look at the opportunity at lower multiples. So that's pretty much the premise. So it's not that they are not great businesses or great entrepreneurs. It's the price at which you want to buy. So in that context, Eternal, if you look at its journey from the IPO, it fell first. Its fortunes turned only after it grew first, which turned into Blinkit and the subsequent re-rating, where the actual TAM and growth opportunity, the terminal value aspect started to play into the price. Right? So we are very cognizant because of the growth aspect in the formula and the ability of the management to deliver the ask rate. Let me tell you, execution is the most toughest in e-commerce. One leg of growth, whether the terminal value will play up is the point. So we keep taking assessment. So
Okay.
in our case, Eternal has gone through the pain. It's a re-established new model and growing from here. So also delivery. We see a strong turnaround in earnings. It's actually returned to profitability. The new acquisition is a turning point.
Okay.
And from here, it will compound at a steady rate.
Okay. Actually, I'm sorry I'm rushing you because I'm a little disappointed also that, or disappointed as in surprised, that Paytm and PB Fintech are not there in your list of financials. You have Kotak Mahindra Bank. If you can comment on that very quickly, but more importantly, you prefer realty in a big way. You have got both Oberoi and Godrej Properties.
Yeah, I'll start with the realty piece because I'll tell you in the financialization of India's savings, real estate is a very large piece that people miss out. We all know the mutual fund and the AIF story, but fundamentally as per capita income goes up globally, be it Japan, be it US, real estate is a large variable. As people go for second homes, luxury homes, we've had, in this from January, we've had 2-3 sharp drawdowns, but actually the pre-sales and the selling has picked up in a big way across all markets. Even the cash flow conversions are very strong. So we see a disparity between the true value and what the market is trading in. So there is an arbitrage. Stocks are closer to NAV and it will compound at a strong rate. So I think there is a dissonance.
That explains, the realty piece. Okay.
And with respect to Paytm and PB Fintech, again, like we said, so the earnings, for some of these fintechs, we love both of them actually, but it's just that in the list of names that we have to put up, maybe some others got more preference over there. Personally, I feel that the AI play is going to work big time on fintechs in reducing the cost to income ratio. So be it what is being announced in Paytm with respect to the AI adoption and the reduction in the cost to income ratio will play up in all NBFCs and fintechs. In fact, we are very cognizant of that, and we actually working with a lot of corporates to figure out how the tailwind will work in their cost to income and adding to the bottom line.
Okay. I think I'll have to invite you yet again for a discussion on that as well. I'm a little intrigued that you have only Kotak Mahindra Bank. The usual list we get is ICICI, HDFC Bank and Axis, but we have to postpone that discussion for another day. More interesting is really how will AI evolve or change the fintechs, and therefore what should we be invested in ahead of the curve? That discussion for another day. Harira, thank you very much for a very interesting conversation. We have to wrap up on Bazaar. On that note, Chartbusters coming.
Dr. Reddy's is among the top gainers on the Nifty today, higher as the European Union drug regulator has approved the launch of denosumab.
Yatra Online under pressure after its CEO Dhruv resigns, citing personal reasons. Siddhartha Gupta is appointed as the new Chief Executive Officer.
Restaurant Brands Asia surges as sources suggest to CNBC TV18 that Everstone Capital has reinitiated efforts to exit the Restaurant Brands Asia business in talks with multiple parties for the same.
LG Electronics surges after Jefferies initiates with a buy rating, target price 1,900 rupees. The brokerage views the company as a strong play on India's discretionary consumption given its diversified mix. Hello and welcome to Chartbusters. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. As we speak, the market's trading in the green. Started off a little bit jittery, but there's a good recovery that we've seen, Mangalam, from the lows. I think resistance continues. 26,150. Last two trading sessions, we've gone till there and seen a bit of a U-turn. So that remains the important level.
Yeah, 25,800 to 25,200 has been the broad band. That's November series expiry today. December has a fair amount of cues, including the likes of the RBI policy. You have the US Fed meet as well, talks around US-India trade. All these factors will play out, and towards the end, will we get a Santa Claus rally or not? Well, those are for December series. For now, let's see what the triggers for the November series or the charts are saying. Saumil Mehta from Sharekhan joins in for a quick technical check on the market. Saumil, today's dip was bought into, but that dip was from the lower end of the range. Now, as we move higher, do you think consolidations happens around this 26,000 mark itself, or do we break out in the last hour of trade?
Hey, good morning. Good morning to everyone. I think definitely consolidation could happen here. But overall, the trend remains positive. The medium-term trend still remains positive. We are taking support every time we dip. We are taking support at 10 daily moving average and 20 daily moving average, which is a very good sign for any market, any charts. So I think every dip should be a buying opportunity, and from here the crucial support is at 20 daily moving average, which is 25,850, and the next support is 40 daily moving average, which is 25,645. So these are the two levels I'm looking out for, and this opportunity is also there because the banking sector is doing really well. PSU banks, financials, I think the private banks will start participating as well. So Nifty target in the very short term is 26,300, and in the medium term outlook, 26,900, 800, 900 levels I'm looking out for. Bank Nifty, very similar. A triangle pattern is being formed on the hourly charts, and I'm expecting this to break out on the upside. Great momentum now today, and my targets would be 60,000 for Bank Nifty.
All right, individual stocks. You want to give us a couple of picks?
My first pick is L&T Finance. L&T Finance has just completed a ABC corrective, taking support at 10 daily moving average. Great setup already in the uptrend. Stop loss would be 287, and the target would be 312. The next stock I've chosen is Ashok Leyland. Today, great momentum, taking support at the averages, short-term averages, already on the uptrend. It's a slow mover, but a great medium-term trend already in. Stop loss would be 142, and target would be 155.
All right, we take that point. Thank you so much for joining in and giving us your calls. Saumil, 60,000 on the Nifty, Bank 26,900 as the medium-term target for the frontline index as well. Meanwhile, just watch out for a couple of these auto names, two-wheelers in particular, Hero MotoCorp and Bajaj Auto, both of them at the high point of trade. We actually take a short break and speak about the real estate space. In fact, it's been buzzing all through the morning. Embassy Developments joins in to discuss their business outlook. Stay with us for more. Welcome back. Just keep an eye out on HDFC Bank. That's moved a little off the highs right now, currently mildly in the red. The stock has been doing well for the last few trading sessions. Let's see how that pans out in today's trading session. It has a fair weight on both the Nifty as well as the Nifty Bank. But the real estate space is on our radar this morning. Aditya Virwani, who's the managing director at Embassy Developments, joins us now. We'll be talking to him obviously on the company's FY26 guidance, any inorganic growth plans, more importantly, the impact of labor laws on the development industry as well. Thanks a lot, Aditya, for joining in, and welcome to the show. The FY26 guidance that you've given, for pre-sales of 5,000 crores and collections of 2,200 crores. The first half of this year, you've done 600, 650 crores on both pre-sales and collections. Do you stand by this guidance, or does it revise downwards?
Well, it's great to be here, and we absolutely stand by our guidance. I realize today we're standing at around 12-13% of where we are, but the Q3, Q4 has always been the big years, big quarters for Embassy Developments. And if you think about what we've done, we've taken over a company that's really been abandoned for the last 4.5 years. It does have a J-curve recovery, and we really feel that we now have entered a really moment where the company can launch, can deliver on pre-sales. And in fact, Q3, we already have 2 projects that are RERA approved. We have another one for Q3, and then 4 for Q4, which would be 2 Bangalore and 2 in Mumbai, 1 very big one in Worli.
Is that the Palais Royal project?
It's not Palais Royal. It is another project on Worli Naka, E. Moses Road, something that we'll bring to market in Q4. We're very excited of that product.
Which one is it? We're curious because
we're just down the road.
We're just down the road.
We are not the target audience, by the way, just to clarify. But we're down the road, so we just would like to know more.
Well, so this project is the last phase of the earlier India Bulls Blue project, although this is going to be its own project. It's Embassy Citadel, and it's going to be the first embassy launch in Mumbai, which we're very excited about.
All right. Bottom line, you're sticking to the pre-sales number of around 5,000 crores and collections at around 2,200 crores. Got that. Good to speak to you, Aditya, and welcome to the show. You're also talking about some inorganic growth, right? Help us out with some details on that front. Will it be a project level that you're looking at, or are you looking at, buyouts, buying out smaller real estate players in various markets?
Well, look, our focus is quite clear. We've actually taken over this company now, which has a lot of in-place land bank fully paid up for. We've also contributed some of that land from Embassy Private. And our focus right now is just to execute on the projects that we have in hand. We have existing ongoing projects that are quite exciting across the spectrum, premium as well as luxury, across Bangalore and Mumbai. And we have these new projects where we have so much surplus to unlock, roughly 51% of gross surplus that the company can unlock. So we feel we want to just put our blinkers on, execute on our plan, throw out cash, throw out surplus, and then cherry pick new deals. We do want to be there. We've done 1 deal last quarter. We are looking at new deals, but we want to be very, very selective, especially in a time where the market is so hot and you see land values go up. And we don't think that this same price appreciation at this double digits is going to continue. We want to be a little bit more modest as a developer, focus on the product, focus on good business principles, and that's what we're going to do as Embassy.
All right. So you're basically saying you'll do it at a project level, right? If you're this inorganic that you're talking about.
Yes, I think we're done with some major M&A activities. The merger was a big one for us. Now we want to just execute on a project level.
All right. A couple of other quick questions. Over the weekend, we got the new labor laws. If you could tell us, labor cost as a percentage of your mix, what is it at? And incrementally, in terms of cost of development, how much does it go up by? Most feedback suggests that it will be low single digits. So if you've done some rough math.
We think it'd be maybe low to mid single digits, the impact on labor costs. But I do think labor has been the biggest challenge in the industry. You're seeing a shortage of supply, mainly for 2 things. One is approval processes, and 2 is the availability of labor and the delays it's having on projects. So I think it's a fair thing that we should be compensating labor more. we have enough margin cushion to bear that. So we actually welcome this, and this is a very good thing for the industry, I would say.
So two-part question here. One, you said that there has been a bit of a shortage. There could be an increase of anywhere between 3 to 5% if I had to numerically put your qualitative numbers out there. And secondly, you said that you have enough margin cushion to absorb that. So does that, one, assuage the labor concern right now, the shortage concern? And secondly, does that mean you're not going to pass it on to consumers and take that on your EBITDA?
No, I think at least from an embassy point of view, we're going to take it on our EBITDA, mainly because all our projects are outright fully paid for. So we have a lot of margin to play with. We really just need to beat construction cost and then focus on paying off our interest and then take out surplus. So from an embassy point of view, we're in a very lucrative place. I can see if you're doing new deals where margin pressures come in, and if you're already paying fancy price on land, it'll be tough for developers to absorb all of that and not push it on. So I think we're in a very unique place.
Right, that makes sense. And you spoke about construction cost and interest. Let's speak about the interest bit. You have about 2,600 crores of debt. What's the repayment plan here? And with the GDP that is coming in going forward, how fast can you collect the money and repay the debt?
And so last quarter, we also raised 1,300 from Kotak. Right. For us, this is a one and done exercise. And what I mean by that is we have so much GDV to unlock, and we do need a little bit of equity to get going with it. Although they're fully paid up lands, you need money for approvals, you need money to get to a marketing stage, and you can't fully bank on sales funding construction. So this was important for us to top up a little bit on our debt. We still feel comfortable at a 0.3, 0.35 net debt to equity ratio. And we feel pretty good. We do want to come down from here. Maybe we top up small projects specifically, which will help us unlock more inventory. Okay. But I think over the next 3 years, you'll see the debt levels come down in this company. And we are just focused on execution, generating surplus and collecting.
All right, final question before we let you go. Commercial GDV is approximately 8,700 crores. Could you help us out with what the exit rentals will look like?
So I can't talk too much about exit rentals today. We're so early on. But as Embassy, this is our bread and butter. We have executed on office. We have done the largest REIT in Asia by square footage. This is the expertise that we want to bring in. With that said, the market is just, the residential market is just 5 to 7 times deeper. So naturally, we will be doing a lot of residential. I see this company doing 20 to 30% of commercial at any given time. But the big focus is to come back in the residential space, as well as create these trophy-like REITable assets that we have been doing as Embassy. We are being very, very selective with assets on the commercial side, and we'll start building an annuity base in this company, and the journey has just started for that.
What would the target be at some point in time, say maybe 4 or 5 years down the line? What would your target annuity income be?
So if you just look at our one asset that we have in Whitefield that has 5.5 million square feet, it's a land that we fully own, that would generate upwards of 600 to 700 crores of NOI per year. We want to deliver that. We want to execute on that asset and then be very selective. Like I said, we can't just do any commercial asset. And especially now, as we see AI play an impact on jobs, we have to only have trophy assets. So for now, this is the only commercial asset of that scale, but we'll be looking at similar assets down the line.
Got that. Thank you so much, Aditya, for joining in and giving us a detailed outlook into your business. For starters, we'll be happy with you holding on to your guidance despite having done just about 12-13% of that in the first half of this year. And we'll watch out for the new launches that come about, especially in the Mumbai and other regions. With that, we'll take your leave and also get you another segment coming in from our colleagues at Money Control Pro, Ideas for Profit. Today, we have Jitendra Gupta joining in. Jitendra.
Hi, thanks. Power Grid corrected recently from around rupees 365 to about 277 currently. At 16 times its FY27 estimated earnings. Stock now trades attractively. The business continues to benefit from regulated returns, strong cash flows, and of course predictable earnings model. The second quarter results were soft. Revenue growth was muted and margins weakened because of operating expenses spiked. Profit dipped as other income fell sharply. These issues, however, appears temporary. Execution is improving. The first half was held back because of the right of way delays, which slowed down capitalization. But the government's revised compensation norms have started easing land access challenges. This should mean higher execution from the second half onward. Power Grid has lined up one of its largest multi-year capex plans. It expects 28,000 to 30,000 crore of spending in FY26, followed by even higher investment in FY27 and FY28. A work-in-hand pipeline of 1.52 lakh crore provides strong visibility for the next 3 to 4 years. Consulting income is also gaining momentum. The company is gradually expanding it into new areas such as data center, digital infrastructure, smart metering, and cross-border transmission. Overall, Power Grid looks like a good defensive idea in this market.
Thanks a lot for that, Jitendra. Time to slip into a short break. You come back, we'll continue to focus on markets as well as on stocks. Welcome back. You're tuned into Chartbusters. You're on CNBC TV18. Well, time to focus on individual stocks. And one stock that's in the news is Dr. Reddy's. Ekta joins us to help us with a quick update on that. Ekta?
Well, yes, Dr. Reddy's is in focus because the European Commission has granted marketing authorization for a couple of biosimilars. So the biosimilar AVT03 or the biosimilar of Prolia, which is denosumab, and Xgeva, which is also denosumab. Now, Prolia is basically a prescription medicine used to treat osteoporosis, and Xgeva is a prescription medicine used to prevent bone complications in adults. Now, what has taken place is that the European Commission decision has followed what was a positive opinion from the Committee for Medicinal Products for Human Use, which is basically the committee in Europe, which took place in September of 2025. The reading for Dr. Reddy's is positive because Dr. Reddy's had licensed this product from Alvotech, which is basically the developer of this. And Dr. Reddy's is a commercial partner with semi-exclusive rights both for Europe as well as UK. So analysts say that this development is definitely positive for the European business for Dr. Reddy's.
All right, we take that point. Thanks a lot for that. Ekta, the other stock which has been doing extremely well is Restaurant Brands Asia. Restaurant Brands, Vivek, looks like Everstone is looking to sell them.
Well, that's right. We are actually revisiting the story. We did close to market close yesterday. And, what we had told was that Everstone, which is the controlling private equity investor in Restaurant Brands Asia, has gone ahead and reinitiated efforts for exiting their complete stake in Restaurant Brands Asia. Now, what we understand from our sources is that talks are at an advanced stage. It's actually at the stage where negotiations for the price is on. We understand that there has been interest that has come in from a family office of a large listed company with a QSR present and other private equity players to have evinced a certain amount of interest. We understand that the bids that are being spoken about are at a premium to the current market price. And another important thing to note is that even though Everstone actually holds just around 11.2% stake in RBA, and this particular stake is under the name of QSR Asia PTE, according to SEBI norms, a change in controlling promoter is something that will trigger an open offer. So even though it's not breaching the 25% mark, the change in the controlling promoter is what, if this particular deal fructifies, will trigger the open offer once the transaction takes place. So we reached out to Everstone Capital. They did not offer us any comments, and Restaurant Brands Asia has still not responded to our queries as of now.
Okay, all right. Thanks a lot for that, Vivek. Well, on that note, though, we'll wrap up on this edition of Chartbusters. You stay tuned. The team of Trading Hour is waiting for you.
Good morning. Welcome to Trading Hour, live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, Reema Tendulkar and Hormis Patakia. Hey guys, good morning. Well, we are already at the end, not the end of the month, but we are towards the monthly expiry already. And what a day it has been so far, right? Quite range bound. We saw some green briefly above the 26,000 mark, but again, we are below the 25,950 mark yet again. It's a 27-point downtick on the Nifty. Quite range bound ahead of the expiry, but right now we are seeing that big fall from the highs, and the Nifty is at the day's low as well. Midcaps, which have been underperforming for better part of the last few trading sessions, that is the one which is in the green, but that too has come off from the highs of the day. Nifty Realty doing well. That index is up 1%. Nifty PSU Banking Index is up 0.6%. But we do have some losses coming in from IT and FMCG, especially IT, since that was one which was batting for the bulls yesterday. But again, we did see that fall from the highs yesterday as well. And today, it would be very interesting to watch the last 1 hour of trade.
Indeed. So at about 10 o'clock, the Nifty had crossed 26,000. So the start was slow, but we managed to cross 26,000, get to 26,025. But as Sonal pointed out, we've seen some profit booking. But at least today, the advanced decline ratio has been positive. Yeah. We've been struggling with the market breadth. The Midcap index is still flat, but the advanced decline ratio has about 1,460 stocks advancing for about 1,300 stocks in the red. IT is weak, and HDFC Bank too has slipped close to about 1.5% from the day's high. So that's dragging its feet a bit. And along with that, even Kotak Mahindra Bank is now inching towards a 1% fall. But let's drill it down to the big movers in the market right now. Hormis is putting the spotlight on individual stocks. Hormis.
Well, the advanced decline is converging. It's been the pain point of the last few trading sessions, but we'll keep an optimistic tone today. We'll talk more about the gainers than the losers. So we start off with Nuvoco Vistas. Among the top gainers today on the Nifty 500 is the gain in the 3 out of the last 5 trading sessions. But before these last 5 sessions, the stock was on a 12-day losing streak. This was from the end of October until last week, before the 5 sessions, out of which it has gained in 3 of them. The volumes are the highest since July, already in the first couple of hours of today's session. We have had close to 50 lakh shares that have been traded. The 20-day average here is only 46,000 shares. So it's almost 100x compared to the 20-day average. The stock has moved above its 200-day moving average, or it did move above its 200-day moving average intraday, which was at 374. So still around those levels. And the stock has had 3 months of negative returns, including this month itself, despite today's move. Himadri Specialty is another one. Snapped a 3-day losing streak. This one too is off the highs of the day. It was up around 7% earlier in the day. The volumes today are the highest in this month so far. They've had close to 20 lakh shares that have been traded. The 20-day average is only 2 lakh shares. But the stock remains below its key moving averages and has been an underperformer this year, down around 24% so far year to date. On the downside, Yatra Online is reacting to a news flow development. The CEO resigning. Now it has slumped further. Now 7% lower now. There's a 6th straight day of losses for the stocks, down 13% in the last 6 sessions. And we've had close to 20 lakh shares traded. Volumes are not too convincing on this fall today for Yatra. You'll of course see as the day goes by, but currently the volumes are below the 20-day average. The stock now hurtling towards its 50-day moving average of around 159. So important levels coming up. And only recently had managed to cross its IPO price, which was around 142. So Yatra Online, a -1 in today's session.
Thank you very much for that. But let's talk about IT. Yesterday, the IT stocks were doing well on the back of a Motilal Oswal upgrade. So Motilal Oswal had an underweight rating on the Indian tech sector, and they upgraded it to a mild overweight. They singled out Infosys as one of the big movers, but there were upgrades on a lot of other stocks like Wipro, Emphasis, Accenture, etc. Abhishek Pathak, research analyst, technology, institutional equities at Motilal Oswal Financial Services, is now joining us on the show. Abhishek, thank you very much for joining in. First, tell us what's driving this upgrade, because Indian IT companies are still struggling on the revenue front. And even if you look at estimates all the way out FY27 or even FY28, we're still talking about single digit, maybe low single digit moves to high single digits by FY28. So what explains the upgrade from here on, and how much upside do you expect now?
Right. Hey, Rima, thank you for having me here. Our call is actually fundamentally about the business cycle turning. We've been negative on the space for the last 1 year now. Infosys is a stock we downgraded earlier at the start of the year. our model portfolio also has no IT, for the last 1 year. And that's largely because there has been no appetite for discretionary IT spending globally, right? I mean, the entire incremental tech spend has focused on AI capex and AI infrastructure. And we are now in the third year of the AI capex cycle. Now, historically, in year 3 or year 4 is when the spends start rotating back from hardware and infra to services. And that pattern has held true across multiple cycles. And we believe we are closer to that rotation now. So, we think that AI-led services deals will sort of, start picking up maybe in the second half of this calendar year. And that's when you start seeing a meaningful uptick in revenues over the next, let's say, 2-3 years. And the valuations being where they are, they mostly price in a pretty pessimistic scenario for IT services. And we believe if revenue growth rates triple from 3 to 4% right now to even 8-9% over the next 2 to 3 year period, we should be expecting a massive re-rating in the sector.
When you say massive re-rating, Abhishek, what kind of upside are you factoring in? Give us a sense of the upside on different stocks that you're tracking. And you already believe that we are at the bottom. So do you think we'll only see a one-way up move from here on?
Yeah, so I think, most valuations for large caps are kind of either at their 10-year averages or at a significant discount to their 5-year averages, right? So I'd like to believe that whatever headwinds, whatever major headwinds the sector had to face, we're already kind of, pricing that in. If growth rates triple, if we are at the beginning of an actual technology implementation cycle, I expect a 20-30% re-rating in multiples earnings upgrade cycles to come in. So most of our estimates or most of our target prices right now feature upsides between anywhere between 40 to 60%, depending on the stocks we're talking about. So, Infosys, we are pricing in a 40% upside. Some of the smaller names, for Forge, we are very positive. We believe the stock could do almost 70% upside over a significant period. Hexaware as well. So again, I mean, we believe that the payoffs are asymmetric. Most of the negative news flows are priced in, and if the cycle turns, there's a good sort of upside to be had from these levels.
Yeah, Abhishek, you mentioned the valuations. Fair enough that the valuations are beaten down, but looking at the commentary that the companies have given after the end of the second quarter as well, most of it comes to a conclusion that things have not changed much on ground, whether it comes to the demand scenario or whether it comes to discretionary spending. So is it just a hope that things will turn in a couple of years? Because as of now, at least for the first half of this year, things have not, and they have remained the same as they were over the last 12 to 18 months.
Right. This current down cycle exactly mirrors the cloud build out we saw from 2015 to 18, right? I mean, capex was increasing quarter on quarter, and we saw organic growth rates across the entire, IT sector reduced from 10-12% to almost 4.5-5%. Once the capex settled down, not reduced, just sort of rebased to a different high level. We saw that services spend come in, and we saw growth rates accelerate across the board between 2017 to 2020. This is, like I said, I mean, this is more a call on the business cycle turning and the hardware spends kind of morphing a little bit into services, and it's played out before multiple times. And we're again there, and I believe that we have to brace ourselves for a turnaround.
So you're expecting 8-9% kind of revenue growth by FY28?
That's right. For the large caps, I'm at around 8.5 to 9.5%. For mid caps, of course, I mean, depending on the company we are tracking, we could go as high as 25%. But the range that I'm building in is between 15 to 25%.
Okay. And in mid caps, Coforge, you spoke about a 70% upside.
Right.
Which other stocks do you like in the mid-cap space where growth rates are going to be closer to 25%?
We like Persistent as well. It's a fantastic team. They execute really well. But the valuations are a tad bit expensive over there, but we still like the name a lot. Hexaware is a name that we, again, really prefer. It's probably one of our top ideas for the next couple of years. We also upgraded Emphasis to buy. We believe that the stock has gone through its own client-specific issues over the past 6-8 months, but the deal wins are quite strong. and the next 2-3 quarters we should see a pretty smooth uptick in growth rates. So yeah, these three names I'd probably call out from a mid-tier perspective.
Abhishek, just stay on. We want to play a couple of sound bites from, the Japanese company NTT. So I had a chance to meet them last week. And, they said that they're already seeing about a 50% productivity benefit this year in 2025. And they're penciling in that productivity benefits will hit 70% in 2 years. We spoke to Jan Wapperman, who is the senior executive at NTT Data APAC. He's the head of the APAC region. So, the conversation began by asking him what's driving these productivity improvements. And they also have this ambition of hitting $2 billion of revenue from agentic AI. Listen in.
The 50% and 70% is not only cost saving, it's productivity gains. So we are well on track on that as well already today to really produce those benefits. We're producing more code through AI, for example, in the software development cycle.
And this is across the entire software development?
This is in the software development life cycle, correct? Not across the rest of the organization on other parts. With regards to our ambition of $2 billion, again, there we are on track. We are growing exponentially as we speak today. And we're very confident that we're going to achieve that target.
Do you need fewer engineers now that you're getting 50% productivity benefits on account of...
No, we see so much exponential opportunity. We put them all to projects there. And if anything, we probably need more engineers, but we are using them with that productivity gain.
You came out with a global AI report,
yes,
where you've interviewed about 2,500 companies across 34 countries, 15 industries. Did you interview any Indian enterprises,
yes,
AI leaders?
Absolutely. And this is not only from the research, but also from the experience and the conversations I've been having with clients in India. Number one, a huge enthusiasm around, even more enthusiasm than other countries and companies in other geographies around AI and the desire to adopt AI. I would say there's a bit of a overconfidence at times around that, and quite a confusion of where to pick from because it's a very heated market.
What do you mean by a little bit of overconfidence?
At times, the idea that it's easier to be implemented than the actual journey does take. There are some who are really looking at the foundations, again, building the foundations to build the house. And they are very mature in having the data ready, having a governance and part of their strategy, having really a business strategy anchored around AI, having the right stakeholder governance around that, being clear about the business case, where they want to create the value, and others who are still a victim of the FOMO.
Abhishek, for starters, when you speak to Indian companies, what kind of productivity improvements are you seeing? So NTT spoke about 50% this year, going up to 70% in the software development cycle in 2 years. So that's question number one. Where are we, in the Indian companies? And number two, have you been able to quantify in your analysis now models for the next 2 years? What could be the contribution that comes, say, from generative AI or agentic AI? Like NTT's put a number to it at $2 billion.
Right. I think on the first question, in fact, we've kind of written extensively on this across the entire software development lifecycle, right? Be it low-level coding, testing, incident sort of generation, debugging, documentation. We should be seeing close to 40 to 50% productivity gains, at a steady state, right? I mean, these numbers are obviously not, kind of being implemented right now, but yeah, eventually we do see that kind of gain. Productivity gains are coming for the industry, and there is no two ways about it, right? I think the call is that there has always been a technology that's disrupted the previous model for IT services. And, these companies have been able to pivot successfully time and again. Likewise, we will see new models coming in. We will see, for example, we will see service as a software being picked up far more often, right? We will see platformization or these services being offered as platforms far more often. And we'll see revenue per employee across the industry go up quite significantly to kind of counter these arguments. But at the end of the day, getting to Gen AI will need a significant amount of system integration work, a lot of sort of data engineering, a lot of service lines, new service lines will open up, which will kind of
Abhishek,
offset.
yes, on that itself, on AI, we've been talking about around $5 trillion spends by 2030. If you can quickly tell us, how would that impact Indian IT?
Yeah, I think so. Capex is only the base spend assumption for IT, right? I mean, what happens when I want a higher ROI on that capex is when services comes in. So I mean that the same thing happened in cloud, right? Between 16 to 19, hyperscalers sold a lot of capacity, a lot of compute and cloud capacity to enterprises, but they did not know what to do with this capacity, right? To actually implement them, to actually shift my workloads from legacy to cloud, that needs a lot of work. So the arithmetic around whether we lose 3% growth from Gen AI and we get 5% extra, I think we are probably too early in the cycle to call that out. But if there's anything to go by how the early cycles have played out, there will be revenue accretive opportunities coming in the way, and the right companies who can honestly innovate a little bit and sort of disrupt their own sort of cycles, their own business models will probably do well, and those are the stock picks that we've gone with.
Abhishek, thank you for sparing time and joining us with these interesting insights on the Indian IT sector. The markets continue to remain very choppy. The Nifty Bank is now back into the green as we speak. We'll take a short break, focus on the crypto markets on the other side with Manisha Gupta. Welcome back. Still continuing to remain very choppy on the markets though, as the Midcap index, which had now slumped to the lows of the day at the start of the show, has recovered some lost ground. But shifting focus to the crypto markets, and Manisha Gupta is here with more on this. Manisha.
Well, thank you so much for that. It's a decline that has just about continued. And when you look at the month of November, it has not been so great, because when you look at the overall markets, well, we have seen the Bitcoin prices decline by nearly 23%. And with that, this is perhaps the worst monthly decline that you have seen come in since 2022. Well, the decline clearly for Bitcoin has come in from its all-time highs of 126,000 to a low of around 82,000. It seems to be trading at around 86,000 at this point in time. The decline also has come in not just for Bitcoin, but various other altcoins as well, where you have seen a decline between 20 to 45% from the highs of 2025. Well, there are various reasons on why we've seen that kind of a decline come in. One has been the risk of sentiment that we saw in various other asset classes. It has been a hawkish Fed, which does not augur well for the buyers of cryptocurrencies there. The Stalled Clarity Act, the Genius Act, has gone through, but the expectation was that the Clarity Act will go through by the month of November. Hasn't happened, and with the way that we have seen a sell-off happen in case of crypto, the market believes that this could perhaps go in for 2026. And then this year has been very, very strong when it comes to institutional interest. That seems to be waning out in some sense too. The profit taking after hitting those all-time highs is something that the markets were expecting, but the kind of crash that we have seen is something that the markets were not expecting. Well, uncertain Fed policy has been yet another reason that you have seen jitteriness across asset classes, and cryptocurrencies clearly being part of that as well. The markets have seen the overall crypto market cap continue to decline too. If you look at the outflows only from ETFs or exchange-traded platform, that has been to the tune of $5 billion. And the overall market capitalization has declined 24% since the October peak itself. The expectation is that the month of December perhaps could go the same way, especially given the fact that you have holidays coming in. The volume continues to decline as well. An interesting study on your screens on how cryptos really are correlated with the international equity markets there. So in the month of October and November, we have seen this correlation actually increase up. So Bitcoin and Nasdaq 100 has a correlation of 46% there, and it has jumped to a 42% when it comes to Bitcoin and S&P 500 also. So markets tell you that as it comes to tech stocks and tech indexes, crypto perhaps seems to be gelling in.
All right, Manisha, thank you so much for joining us. So that is a lowdown on what's happening in the crypto market. But with that, we'll slip into a short break. When we come back, we'll discuss market technicals with Sneha Seth of Angel One, discuss their top trading bets as well. Welcome back. You're still tuned into Trading Hour. Let's get in all the action from the F&O space. Mangalam is joining in now. Mangalam?
Well, it looks like, ahead of expiry, the traders have closed their books on the Nifty trade. Why is that? Because they believe that the market will be very narrow range and they're looking forward to the December series from here on. And there are data points that suggest so. The Nifty Bank and the Midcap index are fairly undecided right now. The Nifty is off its lows and off its highs in equal measure, the Nifty Bank as well. And we have the Midcap index. While, at an index level, it's slightly outperforming. If you look at the advanced decline, that tells you those lines are fairly close, even Steven. So, it's fairly indecisive and uncertain right now. Typically, the Nifty trades in a narrow range ahead of a big move on either side. And today's high on the Nifty, 26,025, is something that we'll be watching out for at lower levels. The 20-day moving average of 25,852 is an important support as well. Ahead of expiry, when the market expects a big move or a move in either direction, you see the India VIX move higher as well. But, with the market being absolutely fairly range bound and the India VIX moving lower, it's telling you that the traders don't expect this range to move out as well. So that range continues, and that's further cemented by the action that we've seen in options. 25,600 call, extremely active in today's trading session, premium for almost 25-30 rupees. Again, coincides with today's high on the Nifty, telling you that was that is where the supply would likely to be. And then you have the 25,900 put at the lower level, which again coincides with around that 25,850 sort of mark, which is the 20-day moving average. So 26,000 call and 25,900 put, both of them equally active in trade. You want to get a further analysis on the range for today? Look at the straddle, 25,950, which is where the Nifty is closest to right now. The 25,950 call and put, both of them together have a combined premium of 80 rupees, telling you around 25,870 or 26,030 is where the broader range for the frontline index is. Again, largely on the range. So that takes care of the November series expiry. Now all eyes will be on December series, which is expected to be a big mover again in either direction. Why is that? Because on one side you have the RBI policy meet, then you have the US Fed meet where the street is expecting a rate cut, US-India trade talks, any sort of developments out there would be positive. And towards the end of the year, you also get a bit of Santa Claus rally. Do we get it this year or not is something that we will be tracking. So for now, over to December series, even as November series, the expiry session may end on a consolidatory note.
The bulls will definitely be expecting the Santa Claus to come on the street and take the Nifty past that record high level. Mangalam, thank you for that update. Sneha Seth from Angel One joins in for a quick chart check. Sneha, good morning. Thank you for joining in. You have consolidated now over the last 2 to 3 sessions, selling off from the highs. Dips are getting bought into, but this very narrow range, is it showing signs of breaking out on either direction? Your call on the index and specific stocks as well.
So very good morning. Now, if you look at Nifty, we are seeing some consolidation. If you look at Nifty, even Bank Nifty has been consolidating. So at present, especially with the expiry today, looking at the overall options activity, within the range of 25,900, 26,000 on the higher side. So expiry is more likely to be in this range only. Apart from that, if positionally, if we see the overall setup, I believe 20 DEMA should be acting as a support. So 25,800, 850 should be acting as a support. And on the higher side, I believe the resistance is placed around 26,200, 300 zone is the resistance. So overall, I believe any kind of a dip should be used to go long for a positional trade. In case of banking index as well, we may see some consolidation, more likely in banking index. But yes, the overall setup looks positive still, and the dip should be used to go long. As far as individual counters are concerned, I have a 2 buy call today. The first one would be on UPL. Now, if you see the chart structure for this counter, we have seen some profit taking. Now the counter is around the 20 DEMA, and we are seeing some buying interest coming in over here. So I would recommend buying this counter at current levels. Keep a stop around today's low, that is around 735, and upside potential target would be around 820. Apart from this, the next counter which I'm liking is Vedanta. Here again, we have seen some profit taking. The counter is again retesting the 20 DEMA now. I believe keeping a stop loss of around 494, it's a buy, and the upside target would be around 522.
Okay, all right. Thank you so much for joining Sneha with your technical bets and the overall market number as well. We'll slip into another break. When we come back, we'll talk about the big story of the day on the other side.
Welcome back, and the big story of the day now is the contra call on OMCs, the oil marketing companies. Sonal, there is a downgrade that has come in for these oil marketing companies today.
Oh yes, there is, and it's interesting because it's come after a strong performance from OMCs in Q2. A lot of these brokerages upgraded the stocks back then, but now Investec has gone ahead, downgraded oil marketing companies to a sell, all three of them, and now they prefer Reliance Industries when they want to play the refining upcycle. Now, do remember, refining margins are very strong in Q2. Singapore GRMs, they've continued to see higher numbers as well, and that is something that the OMCs were surging on as well. Singapore GRMs, they have doubled in more than 2 months. They are at that $13 per barrel mark, and Investec says that it is only a part picture for oil marketing companies, because do remember, they have a marketing side of the business as well. So while refining did well because of higher diesel cracks, they had diesel cracks to the levels of around $4 per barrel as well, reaching to the levels of $12 per barrel at times. This is something which is hurting the marketing business because of higher diesel cracks. They are seeing marketing margins fall from 4 rupees per litre in the month gone by to negative levels right now, and that is something which will hurt these oil marketing companies because they do have exposure to the marketing side as well. If diesel cracks, according to Investec, they remain elevated at these levels and go higher than that, then marketing will continue to suffer. That's why they have sell on all these three stocks, and target price for BPCL at 330, HPCL at 425, and IOC at 145 as we speak.
Okay, but oil marketing companies have done pretty well, right? I mean, what's been the stock price performance and valuations?
So, you know, this year they have done so far. I know Investec says they've done extremely well, but the gains have been around, you know, single-digit numbers. So, if you look at the YTD number, these stocks have moved up anywhere between 11 to 20%. But if you look at the 1 month performance as well, BPCL is up 4%, we have IOCL which is up 5%, HPCL is up just 1%. So, yes, these stocks have done well so far this year. Crude has been soft as well. Refining margins have been strong, and that is something which has worked for these stocks in this year itself. When we talk about valuations, they're slightly higher than what they were historically, especially for something like an IOCL. It's trading at 10.6 times. It used to trade between 7 to 8 times. BPCL, though, has come off from its average valuations because remember, it was trading at 10 to 11 times when the divestment talks were going on. So it's lower than the 5-year average, of course. HPCL is at 7.4 times. It continues to be the cheapest stock in the oil marketing space, and also remember, it has the highest exposure to the marketing space. Around 55 to 60% of HPCL's EBITDA is from the marketing side. So if there's something that happens to diesel cracks, not diesel cracks, the diesel marketing margins, it could impact HPCL the most.
You know, crude oil has always been that one trigger that you always link the OMCs to, but beyond that, what are the next ones?
So, you know, interestingly, there was a fear that ahead of Bihar elections, again, we could see price cuts come by for petrol and diesel. That did not happen. So that was a relief for most of the investors as well. But there was an interesting note that came by Citi on 11th of November where they indicated that they expect an excise duty cut post Bihar polls. That is because crude price is something that we always talk about, and crude has been soft for a long time, right? We've not seen those elevated levels, and if there is 1 rupee litre cut in excise duty, it would be around 17,000 crore of revenue for the government, which they'll have to forego. But it's not only a loss for the government. Excise duty can impact HPCL the most because of the biggest exposure, as I said, in the marketing segment, because it'll be a loss, inventory loss for them, and for IOC it'll be the least because they have higher exposure to the refining side. So this is something we'll be watching out for, whether there is really an excise cut that comes by or not. But today, on the back of this downgrade, we've seen some cuts, but again, these stocks also have recovered from the lows.
We're down yesterday, down today as well, but yes, as you mentioned, recovery from the lows of the day. Is that the big story? The oil marketing companies and the downgrade coming in today's session. Take a short break. Corporate conversation on the other side. The management of TrueAlt Bioenergy joins in to discuss their business outlook and their recent MOU with the Andhra Pradesh government, and a lot more. Stay tuned.
Welcome back. You're still tuned into Trading Hour. TrueAlt Bioenergy, the stock is on our radar after the company signed an MOU with Andhra government to set up sustainable aviation fuel manufacturing facility with a total investment of 2,250 crore rupees. Vijay Nirani, who's the managing director at TrueAlt, is joining us now to discuss this and a lot more. Vijay, good morning. Thank you so much for joining in. Can you give us a sense of what part of this investment will you be making in the sustainable aviation fuel plant? How will you be funding it, and what is the typical asset turn on such plants, because we don't have a big market to cater to for sustainable aviation fuel yet. So give us some timelines on this one.
Thank you so much, Sonal, for having us on your show. This is a very dear project to us. We're super excited for the sustainable aviation fuel journey for India and in the global space to take off. And we are very happy to be one of the early movers in the space. Our idea is to set up one of the first plants and the largest plants in the country. So we've chosen Andhra Pradesh thanks to the ICE policy, the Integrated Clean Energy Policy that the government of Andhra Pradesh has. And we're also discussing with them to get better packages in order to help us set up the plant, because this is a very high capex that is required. So we plan to set up a 10 crore litre per annum sort of a capacity at a cost of close to 2,200 crores. And we're looking at an asset turn of almost 1 times the total capex. That's broadly about 2,000 to 2,200 crores of top line that gets added to TrueAlt's financials post the plant getting commissioned.
Okay, and how will you be funding it? Will it be completely done by the company, or will you, will it be a JV with some other company or with the government? If you can give us a sense of that as well.
So we've got multiple JVs, or rather, let's say at this point in time, they are MOUs. Some of the MOUs have been executed and some are under advanced stages to be executed. For example, Sumitomo is a large Japanese entity who has a lot of exposure, or rather who wants to get into a lot of sustainable businesses in India. And Sumitomo and us are already in a JV to set up multiple CBG plants. So with them, we also have this exploratory on the SAF plant that we intend to set up. We are also in advanced discussion with a large airline carrier to be one of the JV partners into this, and also a large public sector undertaking. An oil marketing company also could be one of the partners for us to set up the plant. And again,
how much will you be investing in this, Vijay, then? Just trying to understand how will it impact the balance sheet?
Yeah. So the idea is, it's as of now, there are still a lot of moving pieces into this. We plan to bring in a mix of debt and equity. And because there are a lot of incentives that could be coming into our way, so which is why debt is an essential part, because most of the incentives are only going to offset the debt if we have any. Otherwise, we end up losing out on a few of these incentives. That said, we plan to hold somewhere about 51 to 55% of stakes into this JV. And the balance 45 to 49% will be split between either 2 or 3 partners that we could have in this building.
Well, Vijay, have you zeroed in on the amount that you are going to be investing? You mentioned moving parts, but there must have been some amount that you would have committed, right? If there is so, how much of it would be debt? How much of it would be equity? If you could share, give us a breakup in more specific terms.
I think it's a little premature for that because we're still negotiating with multiple partners. So the idea is the cost is not going to exceed 2,200 crores. It's the upper ceiling. And we are hopeful that the cost could come drastically lower also. That said, we have had this estimations done on a preliminary basis, which gives us a figure of almost about 2,250 odd crores. And for us, one thing is for sure that we are not going to hold anything less than 51 to 55%, somewhere between that range.
Okay. Vijay, now this is about the sustainable aviation fuel, and you said there are a lot of moving parts. So let's talk about the ethanol business overall. You did transition into an all-year ethanol production company, and that is why Q2 numbers were very weak. We saw a big decline on a YY and on a quarter-on-quarter basis. Now that this has come on stream, what kind of numbers are you looking at? FY25 revenues were at 1,900 crore rupees. In the first half, you've done 456 crore rupees. What are the targets for FY26 and FY27 with this transition that has come by?
So on the first business, you're right. We had about 4 or 5 months of a mute period. 3 out of our 4 operating plants went under a construction phase. We could not utilize the capacities, and it was an intentional decision to take the plants under shutdown. So now, very recently, in the beginning of October, we have commissioned most of these plants, and they have been put to use. So usually in the earlier years, the Q3 and Q4 have been heavy years. I mean, the business time for us, and the same will continue for this year also. So Q3 for this year and Q4 for this year will bring in a lot of larger revenues. And we've also very recently received the CFO for our Unit 5 in TrueVault. So all 5 units have now been put to use and are in operation as we speak. So in the last 3 years, TrueVault only has about 3 years of history. And over the last 3 years, we've been growing at almost about 50-55% year on year. But because we had about 4 or 5 months of shutdown this year, we may not be exactly at 50-55% year on year CAGR, but we will be close to that number. So there will be a good growth from last year.
Now that you've moved on to this transition, what is the current utilization levels, and do they increase going into the second half of the year?
That's exactly the idea. So we want to keep increasing utilization. So if you calculate utilization based on the operating days, we should exceed somewhere between 80 to 85%, jumping from almost 45 to 50% in the preceding years. But however, there are challenges around the ethanol allocation and ethanol offtakes, which I'm sure you've had discussions on your shows as also. We as TrueVault are trying to mitigate all these challenges and ensure that we have an assured marketplace to supply at least 50-55 crore liters on a yearly basis.
Take that point, Vijay. Always a pleasure speaking with you. A lot more questions, but we'll take that for some other time. Thank you so much for joining in today with your insights on the business outlook going forward. With that, we move on and get your quick programming note. If you're looking for the big bets and market themes for 2026, CNBC TV18 Access gives you direct access to White Oak Capital AMC's Ashish Somaiya and Prashant Khemka as they share their winning market themes and actionable investment strategies. Ask your questions live on 28th of November at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com/access/plans.
Welcome back. Coming to the end of the show, the markets though are, well, choppy as choppy can be, still around that 25,980 mark on the index. The Midcap index is 150 points higher, so that is something that the bulls will look to take some heart from. The advance decline ratio that had converged to almost even Stevens at the start of the show was widening slightly in favor of the advances, ever so slightly, 1550 stocks advancing compared to 1270 on the decline. With that, we call time on this edition of Trading Hour. From Sonal, Reema and me, thank you for watching. Halftime report on the other side.
Stocks trade ranged ahead of F&O expiry on NSE, Realty and Metals gain, while IT and FMCG dragged. Midcaps fare better.
Secretary in the Ministry of Steel, Sandeep Pondrik, says a decision on the safeguard duty on steel is expected soon. This even as he sees supply expanding ahead of demand over the next 3 to 4 years.
The stocks of Restaurant Brands Asia, the owner of a Burger King franchisee in India and Indonesia, jumps after CNBC TV18 reports that promoter Everstone Capital may sell its 11.3% stake and exit the QSR player.
The ash cloud from the Hayali Gabi volcanic eruption in Ethiopia is crossing India and disrupting flights, with Akasa, Indigo and KLM reporting cancellations. The weather department, however, doesn't see any significant impact on air quality.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, Vinny Motiwala and Ekta Batra. We come to you live from the CNBC TV18 Motilal Oswal studio. The markets biding time ahead of expiry. If you look at it, you know, the Nifty has been off lows and off highs in equal measure. The Midcap index as well, while currently up by about 1/3%. We have the advance decline, which is fairly at an even keel. The advance is just marginally outnumbering the declines right now, and the India VIX is down by 6%, telling you that the street has shifted its focus away from the November series expiry all the way up to a Qs heavy December, where you have the RBI policy meet, you have the US FOMC meet. Trade talks around India and US will continue even as we're looking at a Santa Claus rally towards the end of this year. So short point, we are consolidating in a range, but maybe now the news is over to December series.
Hi, afternoon, Ekta as well as Mangalam. Absolutely, we'll watch out for that Santa rally, maybe that coming by the end of the year. But in terms of today, the sectors that are doing well, let's look at that as well. PSU Banks manages to hold on to good gains in today's trading session. We're seeing Realty that's managing to hold on to gains as well. IT that's a bit subdued and muted in today's trading session, down 0.6%. A lot of individual movers that we're seeing in terms of volumes as well. So that is what we'll be keeping an eye out on. Whether you talk about Nuvoco, LG Equipments, the Adani Wilmar agriculture side, so AWL, that's the one that we'll keep an eye out on. Craftsman Automation, these are some of the names that are managing to hold on to that gain in today's trading session. But as such, it's been muted in the last few trading sessions.
Absolutely. It's a yawn for the markets at this point in time. We have the Nifty as well as the Sensex, which is absolutely flat at this point. But we do have the Midcaps, which are marginally outperforming, so up around 0.3% currently for the Midcap index. And that's possibly, that's good to see actually, considering the kind of underperformance that we've seen for the broader markets. In fact, if you look at it on a month-to-date basis, the Midcap index is up around 0.7% as compared to the Nifty, which is up around 1%. What stands out is that the advance decline ratio is absolutely flat at this point. So let's see, as the second half of the trading session does pick up. We do have expiry as well. So what exactly is going to take place with the advance decline ratio? A lot of stocks in focus. Grove, Physics Wala, just look at the way those stocks are moving in today's trading session, along with stocks such as Yes Bank and IDBI Bank. But let's get to all of the buzzing stocks that we're tracking this afternoon. We have Vivek joining in to take us through that list. Vivek.
Well, thank you so much for that. Well, a lot better, especially when you're comparing the breadth to how it was yesterday, but still not too many sharp movers as far as the markets are concerned. But quite a few names on the radar. Well, Restaurants Brand Asia, yesterday we did tell you about how there could be a potential deal on this particular name. The stock high by almost 3%, good volumes today. The entire pharma pack is doing quite well. Look at names like Glenmark, Lupin. All of these stocks up anywhere between 1.5% to 3%. Look at a name like Craftsman Automation, that particular stock amongst the top gainers on the NSE 500 index. Very good volumes for this particular name. Quite unusual, in fact, almost 6.5% higher. And a name like HEG, the entire graphite electrode themed stocks, HEG, graphite, even a name like Rain Industries has been doing quite well in the last few trading sessions. On the other hand, quite a few laggards as well. Well, the entire OMC pack and investor downgrade coming in after a while. Diesel graphs, marketing margins have fallen quite significantly. Also, there's been a downgrade from Investec on these names. Honeywell Automation, good volumes today, but there has been quite a sharp price correction in this particular name. Have a look at Yatra Online. The resignation of the CEO is something that is weighing in on that particular name, almost 7% lower for Yatra Online. And Tata Communication today is the top mid-cap laggard, almost 2.5% lower as far as Tata Com is concerned.
Right, okay. Thank you so much for that, Vivek. We'll keep an eye out on those buzzing stocks through the day as well. But moving on, India has a new labour law regime in place. Now, 29 laws have been rationalised into 4 labour codes. This is to aim to modernise the legal framework, extend social security to wider workforces and ensure universal wage protection as well. Labour Secretary Vandana Gurnani told us that the committee would be formed to fix the floor rates soon. Listen in.
Floor wage was there earlier also, however, it was not mandatory. It was an optional kind of a floor wage which Government of India used to fix at regular intervals. Now, as per the new course, the floor wage is going to be having a statutory backing, which means it's mandatory and no state should fix their minimum wage below the floor wage. The floor wage would, as you said, look into the minimum living standards, and there would be a committee of experts that would be deciding on what should be the floor wage, and these would be periodically revised upwards. A lot of factories would have slightly less than 100 workers directly employed and rest through contractors, so that they could not come in the ambit of this condition. Now this has been increased to 300, so which means that up to 300 the companies would be now encouraged to take people on direct roles with themselves instead of taking them through contract, because it's only about 300 that they would need to take permission for any retrenchment, layoff or closure from the government. So this, in a way, this actually increases or encourages formalization, and this is an aspect that needs to be understood more clearly.
And now, to understand the impact of all of this in terms for staffing companies, employers, we have Lohit Bhatia, President India and Global Operations at Quess Corp, to talk to us about that. Thank you so much, Mr. Bhatia, for joining us this afternoon. Let's just start by talking for Quess Corp or the industry, the staffing company industry as a whole. When you talk about it, currently the industry has around 65 lakh maybe workers, employees that come under that purview of the industry. Now, gig workers as such, when they come into this whole scenario, that is almost 1 crore, more than that, around gig workers. What does it mean for Quess Corp? And how will these changes actually work for staffing companies?
Thank you, and glad to be on the show. I think the first thing is a compliment to Government of India for finally announcing that we have an implementation roadmap, which came out on the 21st of November, just on this Friday. I think the important aspect that we need to remember as a country is there are many things which have been embedded in the code, which are pretty basic to everybody probably who's listening into your show today, which could be standardized employment offer, it could be payment of wages by the 7th, it could be healthcare, it could be other benefits like floor wages, like the Madam Secretary was just mentioning. But we must remember, what does India really make up of? We have 1.43 billion people. Of that, about 900 million are in the working age population. From the working age population, about 570 million is what we call as the labor force. From this labor force, you'll be surprised to know, as on today, only about 80 million were getting all benefits of all labor laws in the last 78 years. Only 80 million of the 560 million. So what does the balance make up? The balance is made up of informal labor market, which is almost 85% of India's youth. This could be MSME sectors. This could be gig, like you rightly said, close to about 1 crore people are there. This could be domestic workers, which is another 5 crore individuals. This could be construction workers, which is another 5 crore individuals. So it is an expansion of what was always intended to be done. However, it was rarely elitist in the sense that it impacted only 15% of the top corporates and employers. Now it impacts the entire nation.
Right. So, the other problem was that there was labor shortage. How much of that was on account of the lack of these rules? And now that these rules have come, do you think that problem gets assuaged?
Yeah, absolutely, Mangalam. So I'll give you an example of my own firm. We are part of the flexi staffing industry. We have about 5 lakh workforce deployed at 6,464 different towns and locations. We do about 40,000 onboards in a month. But every month we are able to do only about 55 to 60% of the workforce. We're never able to do 100% of the workforce. And the critical reason for that is that the supply and the demand side mismatch would be extremely aggravated in a country like India. In many ways, it would be better to be in the informal labor market and not be part of the formal labor market. Many of the institution, establishment, and companies which were smaller in nature would also look at informal labor rather than getting formalized labor. What the labor codes have now done is it's made it one India, and everybody will have to address from part of that one India. It opens a much bigger supply side for companies like us. At the same time, instead of just working with 10,000 leading corporates and enterprises, it opens millions of other establishments that we could also, work with in times to come, including the gig space in the coming years.
Lohit, I just wanted to actually narrow down on the execution part of it and the impact that it could probably have in terms of numbers. For your company in specific, what would the possible impact be on the P&L, and when will it probably start showing, and how difficult will it be to possibly execute with regards to the new changes?
So first and foremost, we've been 18 years in the making. 9 years of that was in the startup space, and the last 9 years have been as a listed company. We became, almost at the same time that we became a listed company 9 years ago, we also became the market leaders of the flexi staffing industry as far as India is concerned. While we are number one in the country, we are number 4th in the world. So the first aspiration that we have internally is how can an Indian company become the global largest? So that's the first aspiration that we set for ourselves as this market opens up and as this market broadens both from the demand side as well as from the supply side. The second thing to your specific question on how ready are we? Like I just mentioned, Quest already has the largest workforce in terms of 1,200 recruiters fan out there every day finding new talent. We have customers who have deployment with us at 6,464 locations and expanding. We have demand which outstrips the amount of supply that we are able to give. But the technology that we started putting into place almost 8-9 years ago will augur very well for this expansion which can happen. I'll just give you one thought on technology. 9 years ago, we created something called paperless onboarding process. Today, flat in 7 minutes in a multilingual language, we can do onboarding for any worker as per the requirement of Government of India, the principal employer, as well as Quest Corp. And this can be done flat in 7 minutes in a language that you understand anywhere in the country. So that's the impact of the technology that we've created over the years. We don't think that the extra demand which will come in front of us in the times to come will be an impediment for us given our scale, our reach, our size, and the tech that we have behind it.
The newer startups, I mean, the likes of, the Swiggies of the world, etc., the kind of feedback that we've got is that there could be near-term impact, but on a longer-term basis, things will smoothen out. You would agree?
So the gig and platform workers now are covered under the OSH code. This basically means that every gig company will have to part with 1 to 2% of their revenues and a maximum of 5% of what is the payout to each individual gig worker. Quest invested in a small startup called Tasmo in the gig space a few years ago. This is our time to take it to market in a much bigger way than we've been taking it in the last couple of years. Right now, we have some 75,000 gig workers or taskers, as we call them, which are registered with us. But nothing stops us now from scaling it up to a few million people. You're absolutely right that this will require each one of us to contribute that 5% towards what the gig worker is earning from us. But at the same time, this is also something which will expand social security for people who erstwhile never had these benefits. Yes, for a lot of large platforms, like you just mentioned, some of which are listed, who have millions of workers, maybe they'll have to relook at their business model as well and also see that how much of it can be as a platform for them and how much would they further want to outsource to someone else managing it better for them.
Absolutely, Mr. Bhatia. Thank you so much for joining us this afternoon, as well as giving us an understanding in terms of how these new changes in terms of labour law will impact companies, how it will go about in terms of process as well. Thank you so much for that. But on that note, we're going to slip into a very short break. On the other side, we'll come up with a segment, Movers and Shakers. Stay tuned in for that. Welcome back to Halftime Report on CNBC TV18. As of now, Nifty 25,970 levels, just where that is just slight bit of a green there, 16-point uptick right now for the Nifty 50. But let's move on to our Movers and Shakers segment, where we track a whole host of stocks on the move. First up, let's talk about Dr. Reddy's. That's the one that we're keeping an eye out on today. What's the reason for this one?
Well, yes, Dr. Reddy's is in focus because the European Commission has granted marketing authorization for a biosimilar, which is basically AV203. It is the biosimilar version of the biologic drug Prolia or denosumab, and Xgeva, which is also denosumab but is used for a different thing. So now Prolia is a prescription medicine which is used to treat osteoporosis, and Xgeva is a prescription medicine which is used to prevent bone complications in adults. So it's basically used for bone conditions and for two separate conditions. Now the EC decision, which is basically the European Commission decision, follows what was a positive opinion that they had received in September of 2025 from the Committee for Medicinal Products for Human Use in Europe. So it is positive news. Dr. Reddy's has licensed this product from Alvotech, which is the developer. Dr. Reddy's is the commercial partner with semi-exclusive rights for Europe and the UK. Analysts say that this is a positive development for its overall European business. So that's on Dr. Reddy's. But Yatra is under pressure in today's trading session. This is after its CEO has resigned, citing personal reasons. Well, Mangalam, tell us more about this.
Well, you know, there is a management transition in Yatra.com, and the manner in which it has happened has the street a little spooked. Why is that? Because Dhruv Singhi, who's the CEO, has resigned as for personal reasons with effect from November 24, 2025. So it is an immediate resignation and with immediate effect and for personal reasons, no further reason given beyond that. At the same time, the company has appointed a new CEO as well, Siddharth Gupta, who's been appointed with effect from today, that's November 25. The important part is that Siddharth Gupta brings with him a fair amount of pedigree, a fair amount of experience and good skills as well. Could this have been managed a lot smoother than what it has happened is something that the street is still on tenterhooks about. Dhruv Singhi has been appointed as chairman board of directors, so in a way he's been elevated from CEO to the chairman of board of directors. But again, the reason being personal and the exit being immediate has the street a little spooked, but which is why the stock is lower. No real problems from a business standpoint, though. If you look at their second quarter numbers, revenue was up 48%. EBITDA has actually seen a jump for almost 160%. Net profit up by almost 95% as well. They added 34 new corporate clients with a potential billing of about 260 crores as well. Cash and equivalents on their books close to around 213 crores. Air bookings grew by 12%. And remember, this is the company which is a market leader in corporate travel. So all these factors fundamentally doing well for them. But just this little management transition which has happened in an abrupt manner has the street slightly perturbed, and that explains the 6% drop. But a stock that has been surging all through this morning is Restaurant Brands. Remember, they run the Burger King chain in India and Indonesia, along with the Popeyes chain in Indonesia as well. Vivek joins in. Vivek had yesterday told us that there is the likelihood of Everstone selling out, and we're revisiting the story after the big move that we've seen on Restaurant Brands. Vivek.
Well, that's right. Like you summarized it so well. So Everstone Capital, remember, is the private equity that controls and manages the Restaurants Brand Asia. It was earlier known as Burger King, and they run the Burger King franchisee across India. Popeyes, like you mentioned, in Indonesia. While we understand that, in this particular deal and in Q2, itself, the management had highlighted that they are looking for an exit, especially as far as the Indonesian part of the business is concerned. What we understand from us is that, especially when it comes to the Burger King franchisee, Everstone wants to cash out. They want to divest their stake completely. They've been paying their stake, via tranches over a period of time. They're now left with around a little over 11%, but we understand that this time around they are keen to sell it all at one go to an interested buyer. In fact, we understand the bidding process is on. The bids have come in. We understand the family office of a large listed company is in the fray, along with a few other private equities. Especially when you're talking about the listed company, we understand they do already have some interest as far as the QSR space is concerned already. Now, when it comes to the ownership and especially when open offer rules of SEBI, it's interesting to note that despite the fact that the eventual buyer will only need to buy out a little over 11% stake, given the fact that this is a change in the ownership of the management, there will be a triggering of the open offer. in case this particular deal does fructify. So that's an important development, and we understand that the bids have been coming in at a premium to the current market price. We reached out to Everstone, they refused to comment, and we are awaiting a response from Restaurants Brand Asia, the management of Restaurants Brand Asia.
Okay, all right, Vivek. Thanks very much for that. So that's Restaurants Brand Asia. That stock is up around 3% at this point in time. Well, for the markets, extremely quiet as we speak. So we have the Nifty, which is just about higher by around 5 odd points. But there's always a strategy and there are always stocks to focus on. So we're going to do just that. On the other side of the break, we have Aditya Agarwal of Invest4 Edu, who will be joining in with some trading calls. Stay tuned.
Welcome back. You're watching us here on Halftime Report. And just as when we started the show, Ekta called it a yawn of a market. That's exactly what's taking place, from the F&O desk as well. I'm looking at all the cues that have come in. The Nifty, all of 1 point in terms of a change, moved off the highs, off the lows. You have the Nifty Bank as well up around 28 points. And the Midcap index, while at an absolute level, it shows an increase of almost 108 points. If you look at the advanced decline ratio, it's still at an even keel, telling you that the market has decided to be indecisive right now, at least for the expiry, and thereafter move on and look at the December series itself. Why do we say that? Because, when all of this happens and you have the Nifty, which is trading in a range, today's high is 26,025 and the 20-day moving average is 25,852. That's this roughly 170 point sort of range that we're looking at. Typically, it signifies a big move, and any big move is actually preempted by the move that we've seen in India VIX. That hasn't been the case. Right now, the India VIX is down by almost 4.5%, holding below that 13 mark. So, which basically means that right now, they don't expect, the option writers don't expect the change on the Nifty to be much beyond this range that we're talking about. Why do I say that? Once again, 26,000 call has a premium of 18 rupees, 3.7 crore shares outstanding. That's telling you that upwards of 26,000, closer to today's high, there would be supply. But then there's support as well at the 29,000 put. That comes up for you right now as well. On the screen, 29,000 put has a premium of almost, 15 rupees. Again, telling you that 25,900 is an important support. 25,900 to 26,000. You want to further understand the range today? Look at the, closest straddle. 25,950 call and put. The 25,950 call has a premium of almost 40 rupees, 1.5 crore shares outstanding. 25,950 put comes up for you. That too has a premium of 31 rupees, 2.6 crore shares outstanding. Again, a combined premium of 60 rupees, telling you that 25,890 to 26,010 is the range that even the straddle writers are hoping for. So that's exactly what everyone's looking at from a November series standpoint. But all eyes will be on December series, because so far the rollovers have been slightly on the lower side and the long positions of the FIs have increased, which tells you that the shorts haven't carried their positions forward as much as the street was anticipating, which means that there could be a positive bias for December series. The RBI MPC outcome, there is a chance of rate cut in India. US Fed meet outcome, there is a rate cut chance in the US as well. Then there is the US-India trade talks that take place, and towards the end of the year, maybe NAV propping and Santa Claus rally, all these factors working for the markets.
Okay, all right, Mangalam, thanks very much for that. Seems like a lot of people have already taken their Christmas break if you just look at the markets. Aditya Agarwal joins in to discuss what he's strategizing. Aditya, hi, welcome to the show. Well, what's your sense in terms of the markets? Do you think that the second half is definitely going to see a lot more action, considering that it is expiry, and how would you approach it?
Afternoon, Ekta. Thanks for the show. I think markets will turn little volatile definitely towards the second half of the trading session. Today was a classical day where we could have seen a good short covering rally, which we did witness in the morning trade, but then again, it fizzled out and now we are back to Steven Evans. My sense is markets will turn little volatile. And if 25,900 breaks during the day, you could be in for some more selling pressure, and a 50-100 point on the Nifty can easily be shaved off in that case. Overall, I think, like Mangalam also pointed out, 25,900 to about 26,000 is the range which market is playing out for now. On the upside, it looks little unlikely that markets will break out about 26,000 today. If it does so, then yes, we could be in for a short covering rally. So these are the two levels that I'll closely monitor and watch out for towards the second half of the session. If 25,900 breaks, then could be a case for another 100-point correction on the downside. On the flip side, if 26,000 breaks on the upside, we could be in for a 50-60 point kind of a rally on the Nifty. Bank Nifty on the flip side, which has been providing some kind of a support, continues to do so. And my sense is Bank Nifty will continue to oscillate in a narrow range between 59,000 on the upside to about 58,800 on the downside.
Right. And Aditya, which are the individual stocks maybe you're looking at?
So very afternoon, couple of them where I am seeing some bit of a momentum pickup and continuation. The first one is NBCC. That's a buy recommendation from my side on NBCC for a target of 125 on the upside with a stop loss at 113 on the downside. After a decent bit of a consolidation, stock seems to make higher highs, higher lows again. And the second stock is City Union Bank, CUB. That is also quite looking interesting to me. It's been one stock which has actually started to inch higher making higher highs, higher lows constantly within the smaller private sector banks. My sense is this up move is likely to continue in City Union Bank. For a target of 300 on the upside, I'll be a buyer here with a stop loss at 265 on the downside.
Okay. Just wanted your thoughts on Dr. Reddy's. It's the top gain on the Nifty today. It's up around 1.8%. How would you approach that stock?
So it's still early days, Ekta. My sense is it's still going through a consolidation phase for sure. In fact, the entire pharma pack, my sense is one should start nibbling into it, not from a trading perspective purely, but a good investment bet as well. So Dr. Reddy also checks that point. All the checkpoints are ticked. So for the stop loss somewhere around 1200 on the downside, I would actually initiate a long position in Dr. Reddy's, more of a positional trade Ekta here for a target of 1400 on the upside, and then stay put here for at least a month or so. And my sense is you will see a decent bit of a run up in pharma stocks. There could be a shift in the sector and pharma could make a comeback.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and giving us all of your perspective, Aditya. So that's the technical call coming in for the markets. Very quiet at this point in time. Just watch out for BEL because that seems to be competing with Dr. Reddy's for the top spot at this point on the Nifty. Along with that, State Bank of India seeing some buying as well. We'll take a break. Up next, Manisha Gupta will be talking to Dilip Chenoy, who's the chairman at Bharat Web3 Association. Stay tuned.
Welcome back. Joining us on the show now is Dilip Shenoy. He's Chairman, Bharat Web3 Association. Mr. Shenoy, thank you so much for joining in. The kind of sell-off or profit-taking that we are seeing in the crypto markets right now, one, how are you reading it? And how would you look at this year end? I mean, one of the things that markets are getting bothered with is that while the Genius Act has been cleared, the clarity continues to be stalled. And with the kind of scenario that we are working with, perhaps could be slightly difficult.
Good afternoon, Manisha, and thank you for having me here. So, Manisha, I think the fall in the crypto market is very similar to what we see when commodities during the risk-off phase. Liquidity tightens, the dollar stays strong, and I think positions unwind. But if you look at the reasons behind this at this current point of time, I think it's the macro tightening and the risk-off sentiment that is there in the market. Global interest rates are remaining higher for longer. And slowing liquidity cycles always hit assets like crypto first. The second is, you mentioned the Clarity Act and the and the other U.S. developments, but I think the regulatory overhang with the U.S. shutdown, the U.S. enforcement actions, and of course the delay in major ETF approvals and flows, and the continuing uncertainty in the stablecoin regulation. And of course, within India, it's the Indian TDS and the compliance cost is keeping participation muted. The other thing is that, I think the market had priced in the Bitcoin halving cycle early, and the correction is natural. It's a profit taking after a strong 2023-24 rally. And of course, the fourth point is the exchange-related news. But I think the sentiment is bearish to cautious, but long-term on-chain indicators remain strong, whether it's the hash rate or the developer activity or the institutional custody that is being built up. And I think we are in a consolidation phase at this point of time. Going forward, maybe the institutionalization of crypto, ETF, custody products, tokenization of real-world assets, which we have discussed in the past, and the acceleration and implementation of the stablecoin and payments regulation, whether it's Japan, EU, MiCA, the UK FSMA rules, I think, and the clarity will bring capital back. And the Web3 space continues to grow, tokenization continues to happen, so loyalty, digital identity, supply chain will continue to actually enable this to happen. So what's the outlook for 2026? I think optimistic, but selective. Most likely Bitcoin and Ethereum are likely to recover faster due to institutional demand and halving cycle effects trailing into 2025.
Okay.
Stable adoption could be 3x by 2026 as cross-border payments mature. And like I mentioned earlier, tokenized RWAs could become a 3 to 5 trillion market globally. You'll see VC funding revival. Last year was good, but late 2025 to new innovation cycle in 2026.
All right. So, well, of course, there's a lot of justification on why we've seen this sell-off because of risk-off, but the outlook really seems quite bullish. And Mr. Shenoy, that perhaps coming from the fact that we've seen these cycles before as well in the last couple of decades since the crypto has been around. But my other point really is also about that almost the year is over, 2025 is almost done with, and we haven't seen that conversation paper, the draft paper or a regulatory conversation in the Indian markets begin. Is that something that you see being pushed to 2026 also?
I think India, we have an opportunity in February. We need some TDS clarity on crypto transactions. It has pushed volumes of offshore, reduced retail activity. I think clarity on refunds, off-market transfers, and lowering the TDS would revive domestic liquidity. If you allow setup of losses, it will be a huge positive, initiative going forward. It's interesting, the G20 and FSB influence, India has agreed to that timeline, and we are expected to align with that framework going forward. And of course, we hope that at some point of time, the discussion paper would come in.
Okay, all right. Manisha, thanks very much for bringing us that perspective. We'll take a short break, but up next, we'll get you excerpts from our exclusive conversation with M&M on their growth trajectory and growth outlook. Stay tuned.
Welcome back. Even as the markets, flitting between 25,900 and 26,000, just look at a couple of these stocks from the broader markets. Godrej Consumer is the one that really takes your breath away. A big move is what we've seen over the last few minutes on Godrej Consumer. That stock has surged to the high point of trade with a gain of almost 3% odd. Just trying to figure out if this is just a Godrej Consumer thing or we're seeing collective buying in FMCG. Well, it looks like it is collective buying in FMCG because Britannia has moved higher as well. And if you look at the FMCG index by itself, that too has moved from the red into the green at the high point of trade. Britannia comes up for you. Remember, sometime in the middle of December, the new management, Rakshit Hargave, takes over as well. But speaking about managements and conversations, Mahindra Finance MD and CEO Raul Rebello lays out the company's ambitious targets in an exclusive conversation with CNBC TV18. He expects 5 times growth that will take their AUM to about 3 lakh crores. Listen in.
What gives us a lot of confidence in just drawing from what Anish put out as a target for Mahindra Finance, 5x in a decade. Just to give you context, we were about 60,000 crores at the end of FY20. That 5x would mean 3 lakh crores.
Yeah.
I would have felt extremely constrained if the playbook was just the auto and farm lending. What we have done is now we've expanded the lending book to 2 other big categories. So we are actively going to chase the mortgage opportunity and the SME opportunity. These 3 together to get to a 3 lakh crores is a CAGR of about 20%. So we feel much better equipped today that we have widened our participation. And the headroom for growth in these 2 segments, auto is still a big player. But the headroom for growth in these 2 categories is extremely formidable, and it's all about execution now.
Welcome back. Extremely quiet day for the markets. We have the Nifty, which is just about higher by around 35 odd points at this point in time. We do have some news coming in. So transformers and rectifiers has bagged orders worth around 390 odd crores. You can see that the stock is up around 3 odd %. Just want to point out that even stocks such as Infosys are seeing some amount of profit booking. Remember, they were in focus on account of the IT index gaining because a lot of the AI stocks were declining in the US. So on a month-to-date basis, it's still up around 3 odd %, but seeing some amount of profit booking today. Well, on that note, it's a wrap on Halftime Report. Business Lunch up next.
Stocks trade in a narrow range ahead of the FNO expiry on the NSE. Realty and metal stocks gain while IT and FMCG are the big drags. The mid-caps fare slightly better. Secretary in the Ministry of Steel, Sandeep Pondrik, says that a decision on the safeguard duty on steel is expected soon. This even as he sees supply expanding ahead of demand over the next 3 to 4 years. The stock of restaurant brands Asia, the owner of Burger King franchise in India and Indonesia, jumps after CNBC TV18 reports that promoter Everstone Capital may sell its 11.3% stake and exit the QSR player. The ash cloud from Haile Gubbi volcanic eruption in Ethiopia is crossing India and disrupting flights, with Akasa, Indigo and KLM reporting cancellations. The weather department, however, doesn't see any significant impact on air quality. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormus Patakia. It's been a quiet, range-bound day, fairly devoid of what you could call an monthly expiry session, but still have the very crucial last 2 hours of the trading session that are still left, as the actual action in the last 2 sessions has only transpired in the final 60 minutes of trade. And as of now, the Nifty trading in a very, very narrow band, as you can see on your screens. It's a 100-point range on the index. It's been oscillating between gains and losses all through the session today. Nothing much to write about here, but the broader markets is where the action is. The Midcap index is off the highs of the day, and significantly at that, so 70 points higher. Now at one point the index was up 200, and we have been struggling with that market breadth over the last few trading sessions. In last evening as well, the markets had sold off sharply in the mid caps and the small cap space, and that line on the advance decline, which was slightly beginning to widen in favor of the advances, has started to converge again. So 1500 stocks that are advancing in comparison to 1335 stocks on the NSE that are trading lower. The one stock that has kept the Nifty in the green is Reliance Industries. There's another positive note that came in from JP Morgan earlier in the day, highlighting 3 key triggers going forward for the stock in 2026, and that one is contributing to the gains on the index. But the other stock that is in focus, the top gainer on the Nifty today, is Dr. Reddy's, and that is after the European Union's drug regulator gave its approval for the to market the denosumab, which is used to treat osteoporosis. Ekta is here with more details on this. Ekta.
Well, yes, Dr. Reddy's is in focus because the European Commission has granted marketing authorization for AV203, which is basically a biosimilar version of the biologic drug Prolia, which is denosumab, and also Xgeva, which is also denosumab. Basically, it's the same drug but is used for different conditions, hence marketed differently. Now, Prolia is a prescription medicine which is used to treat osteoporosis, whereas Xgeva is a prescription medicine which is used to prevent bone complications in adults. The European Commission decision, remember, follows a positive opinion from the Committee for Medicinal Products for Human Use, which took place in September of 2025. So this is following that. Now, Dr. Reddy's has basically licensed this product from Alvotech, which is the developer. Dr. Reddy's is the commercial partner with semi-exclusive rights both for Europe as well as UK. Analysts say that this is basically a positive development for their European operations.
Top Nifty gainer, Dr. Reddy's, 1.5% higher on the stock. Ekta, thank you for that update. Now, earlier today, Sandeep Pondrik, the Secretary of the Ministry of Steel, told CNBC TV18 that the government's decision on safeguard duties is expected soon. He added that he expects a pickup in demand as well. Listen in to his comments.
Safeguard duty, as you know that there is a process which was conducted by DGTR. And on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6-7 November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years, which is under consideration with the government. So we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So For some standards, we have relaxed it, rather suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades, and specialty grades have to be imported, so we have relaxed, suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. Short term, there may be some stress on demand-supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level, and as the demand increases in coming months, I would presume that 26 the prices would stabilize.
Take a short break, but a quick programming note before that. If you are looking for the big bets and market themes for 2026, CNBC TV18 Access gives you direct access to White Oak Capital AMC's Ashish Somaya and Prashant Khemka as they share their winning market themes and actionable investment strategies. You can ask your questions live on the 28th of November at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com/access/plans. Welcome back. Now, India has a new labour law regime in place where 29 laws have been repealed or rationalised into 4 new labour codes. The aim is to modernise the legal framework, extend social security to a wider workforce and ensure universal wage protection. Now, Labour Secretary Vandana Gurnani told us that a committee would be formed to fix the floor rates soon. Listen into what she had to say.
Floor wage was there earlier also. However, it was not mandatory. It was an optional kind of a floor wage which Government of India used to fix at regular intervals. Now, as per the new codes, the floor wage is going to be having a statutory backing, which means it's mandatory and no state should fix their minimum wage below the floor wage. The floor wage would, as you said, look into the minimum living standards, and there would be a committee of experts that would be deciding on what should be the floor wage, and these would be periodically revised upwards. A lot of factories would have slightly less than 100 workers directly employed and rest through contractors, so that they could not come in the ambit of this condition. Now this has been increased to 300, so which means that up to 300 the companies would be now encouraged to take people on direct roles with themselves instead of taking them through contract, because it's only about 300 that they would need to take permission for any retrenchment, layoff or closure from the government. So this, in a way, this actually increases or encourages formalization, and this is an aspect that needs to be understood more clearly.
Now, the Supreme Court has agreed to quash criminal proceedings against former Sterling Biotech promoters Nitin and Chetan Sandesara. This after they agreed to a 5,100 crore rupee settlement in a bank fraud case. The court observed that if the petitioners are ready to deposit, criminal proceedings will not serve any useful purpose. Ashmit is joining in with more on this. Ashmit, what do you make of this development, and is it likely to set a precedent?
Well, indeed, it's not every day that we have the Supreme Court saying that if you're about to pay X amount of money, we're happy to close the investigation. We don't see that every day, and therefore, again, very valid questions being raised about whether or not this sets a precedent. That's a question we'll circle back to towards the end of this. But before that, as far as the facts of this case are concerned, 2017 is when a bank fraud case was registered against former promoters of Sterling Group. Bank fraud case, that figure in question was about 5,300 crore rupees. Soon after the registration of this FIR, the CBI investigation, ED investigation, the promoters eloped to Nigeria. They have a very successful oil business running out of Nigeria. But while they've been in Nigeria, they've been pursuing developments here in the Indian courts before the Indian banks, asking for a settlement of those dues. And to their credit, they have coughed up a sum of about 3,500 crore rupees. And since then, they've essentially been pleading before the apex court that, look, if we are ready to pay back the money, why not close the investigation? That was their prayer. That was their relief that they had sought. And similar questions were then asked by the court of the CBI. The question being asked is that what purpose will this criminal investigation serve if the money is coming back? It is, after all, at the end of the day, an issue of public money. If it's coming back, no useful purpose will be served with this criminal investigation. So it is after that prod, that nudge by the apex court, that the CBI came back with that magic figure of 5,100 crore rupees. That figure was submitted in a sealed cover, and nonetheless, that figure appears to have found traction with the apex court, with the former promoters as well, and they've come back and they've agreed to that, and basis that agreement from the promoters, Supreme Court saying that provided that money is paid up, 5,100 crore rupees, the Supreme Court is happy. They want to settle and they want to quash all the ongoing investigations as far as the Sterling promoters are concerned. But as far as to coming back to whether this sets a precedent, the interesting caveat that the apex court has added is that these findings, these directions are only for the peculiar facts and circumstances of this particular case.
Ashmit, thank you for that update. Now, a sudden eruption of the long-dormant Haile Gabi volcano in Ethiopia has resulted in the spread of massive clouds of volcanic ash across West Asia and the Indian subcontinent. The volcano, which erupted after being silent for over 10,000 years, sent plumes of smoke and dust almost 14 to 15 kilometers into the atmosphere. The dense cloud of volcanic ash has disrupted aviation in and around the region, with airlines suspending several flights bound for West Asia. Madiha is here to give us more details on this. Madiha.
Well, Hormuz, like you were mentioning, it's a volcanic eruption in Ethiopia, and that has sent a massive ash cloud into the upper atmosphere. Strong winds in the region are pushing the ash eastward into air routes that connect India with the Middle East and European countries. So the ash clouds that originated in Ethiopia started flowing towards Yemen, Oman, Arabian Sea, Western India, and then climbed towards North India. And as per ATC sources, they are now flowing towards the Himalayas and China. The height at which these ash clouds are is between 25,000 to 45,000 feet, and flights generally fly at 35,000 feet. So the DGCA, the aviation regulator, has issued an advisory for pilots, flight dispatchers, and the air traffic controllers to guide the pilots so that they avoid these clouds, to stay away from any turbulence. It has had some impact on flights, like you mentioned. Not a major one right now, but few international flights have been cancelled. So at Mumbai airport, what we learn is that since midnight, 6 international arrival flights and 5 international departure flights have been cancelled. And in Delhi, 7 international flights, including arrivals and departures, have been cancelled for the day so far. Some flights have also been delayed. Now, the clouds might even evaporate and disappear and move away from the Indian airspace. But as of now, this is the update we have from our sources.
That explains the hazy atmosphere that we are experiencing here in Mumbai as well, along with the heat, which has returned after a bit of a cool weather that had set in at the end of November. We'll take a short break. More news and updates on the other side. Welcome back. Now, in a rare layoff exercise, Apple has announced job cuts across sales teams to strengthen its customer engagement efforts. The affected jobs included account managers serving major businesses, schools and government agencies, as well as the staff who operate Apple's briefing centers for institutional meetings and product demonstrations for prospective major customers. Employees who have lost their jobs have until the 20th of January next year to secure another position within the company, or they will be terminated with a severance package. Meanwhile, the AI race continues to heat up in the US in a bid to rival Gemini and ChatGPT. Anthropic has launched a Claude Opus 4.5, its most powerful AI model yet. Here's a report.
Anthropic is launching its most powerful model yet. It's called Opus 4.5, and it is the new flagship of the Claude family, built for advanced coding, agentic workflows, and enterprise tasks like financial modeling. The update includes new Excel and Chrome tools and a feature called Infinite Chat that prevents memory cutoffs in long conversations. And it comes as Anthropic commits more than $80 billion to compute over the next decade, including a new spend commitment with Microsoft Azure and its own custom-made data centers across the United States. But in terms of this model race, some would argue that Anthropic's chief rival is now Google. Gemini 3, it hit the top of the benchmarks last week.
Now, US President Donald Trump on Sunday posted on Truth Social that he spoke to his Chinese counterpart Xi Jinping. He said that both leaders discussed many topics, including Ukraine and Russia, fentanyl, soybeans and other farm products. Trump also remarked that the US's relationship with China remains extremely strong. He also accepted President Xi's invitation to visit Beijing in April of 2026 and added that Xi will be his guest at the White House later next year. Meanwhile, the Chinese readout of the phone call mainly focused on Taiwan. Here's a report.
Both sides emphasize very different things in terms of summarizing the call, which reflects their respective priorities. And according to Beijing's readout, Taiwan here was the key issue. And this strong focus does make it unusual. And of course, this is happening as we see tensions ratcheting up between China and Japan over to the Taiwan issue. And Xi, on this phone call, pressed Trump on the Taiwan issue. According to Xinhua News Agency, President Xi said Taiwan's, quote, return to China is an integral part of the post-war international order. And Beijing also said that Trump stressed that the U.S. understands that the Taiwan question is very important to China. And according to the Wall Street Journal, President Xi was the one who made the outreach for this call, citing people close to Beijing and calling it a rare diplomatic overture from China. And Beijing does view Taiwan as its own territory, while Taiwan's government rejects Beijing's sovereignty claims. And the U.S. has been governed by its approach to Taiwan, which is the one China policy. So Trump's readout on Truth Social, though, did not mention Taiwan, and this omission is telling as well. And they did both acknowledge talking about Ukraine, and Xi Jinping said he hoped, quote, various sides would narrow their differences and reach a fair and binding peace agreement. But again, both Taiwan and Ukraine being discussed here, both highly sensitive issues, does make this call unusual.
Now, Tata Motors has launched the new Sierra today. The model marks the revival of the Sierra, which was discontinued way back in 2003. The car boasts of triple screens, including petrol, diesel and electric variants, and has a 6-door layout. Bookings for the car are expected to start soon. A lot of childhood nostalgia there when you talk of Tata Sierra, only synonymous to the Tata Sumo that we used to watch growing up. We take a leave on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. It's the monthly expiry day, so a lot of volatility which is being seen in the markets. For now, we have recovered around 85 points from the lows. Nifty is above the 26,000 mark. The midcaps as well. The advance decline ratio is in the favor of advances as we speak. But again, it remains to be seen the last 1 hour of trade because that will be action-packed.
That's right. Good afternoon, Sonal. And the good part today is, unlike yesterday, the screen is green. That is the good part. And especially, the mid and small cap end of the indices doing slightly better compared to the benchmark. But we have a lot lined up on the show. So let's start off with the top headlines. Stocks trade ranged ahead of F&O expiry on NSE. Realty and PSU banks gain, while IT and consumer durables track. Midcaps fare slightly better.
Yatra Online, the stock is under pressure after its CEO Dhruv Shringi resigned citing personal reasons. Siddharth Gupta is appointed as the new Chief Executive Officer.
Siemens Energy under pressure despite reporting a good Q4 SY25. Margins in line with expectations while revenue surged 22% on a year-on-year basis. However, order backlog surged 47%.
Karnataka Bank surges after Aditya Kumar Halvasia buys 2% stake in the bank. He's the chairman and MD of Cupid Limited and a director in Tourism Finance Corporation of India. All right, those are the top headlines that we are tracking for you. The big talking point has to be the market moves, the ranged market moves ahead of expiry. For now, a massive recovery from the lows, 85 points from the lows. That is, we have come back below the 26,000 mark. So that's the kind of markets that we are dealing with. Mid-caps, they're higher in trade, almost 100-point uptick, but it has also come off from the highs. Nifty Realty, that is doing well. We have the PSU Banking Index, which is higher in trade as well. What is not doing so well? IT pack, which was a big gainer yesterday, is seeing some profit booking today. We also have some losses coming in from the FMCG pack, so watch out for that one. These are some of the sectors on our radar. We do have some of these chemical names which are doing really well. Sudarshan Chemicals is higher. We have Tattvachintan Pharma. Something like Himadri Chemicals is also up. We have Anupam Rasayan also, which is up around 3.5%. So we'll talk about all those stocks and a lot more.
That's right. One particular name that stands out is SBI. That particular stock has moved to the high point of the day, taking along with it the PSU banking pack. On the other hand, a few RE lenders, renewable energy lenders like PFC and RSC, are sulking near the day's lowest point. But these stocks and a whole host of other stocks is what Ria has on her radar. She's standing by the wall to take us through all of the mid-caps that are moving around in the session.
Well, yeah, starting off with the gainers first, we have Restaurant Brands Asia up around 3%, giving up some of those gains that after we saw the 6% move in the early session this morning. Sources have said that Everstone Capital has reinitiated its efforts to exit stake in the company. For Nuvoco Vistas, this one is also up around 3% after the 8% move that we saw in the morning. 82 lakh shares traded on this one today versus the 1 week average of just about 2 lakh shares. For Orient Electric, this stock is up around 14% today. Almost 2 crore shares have been traded today versus the 1 week average of just 13 lakh shares. For Dilip Buildcon, seeing a gain of around 6% today, continuing its move that it saw on Monday after receiving a rupees 500 crore order from NALCO. And HEG is the last one. This is up around 4%, 47 lakh shares traded today versus the 1 week average of just 8.5 lakh shares. Some other big gainers in trade today include Lumax up around 8%, Rolex, Rings, Aeroflex, as well as Craftsman Auto. On the losing side, we have All Cargo Logistics hitting a lower circuit of 5% today. VLS Finance also down roughly 3% after nearly the 18% rally that we have seen on the stock since Friday. For AWL Agri, this is also down nearly 3% today, recovering from the 5% dip that we saw in the morning. But this is still one of the biggest volume losers of the day. And the last one is Yatra, down around 7% after the CEO of the company tendered his resignation today.
Okay, all right. Thank you so much. And we'll, of course, have a conversation and understand the reason for that resignation as well. Thank you, Ria, for joining us. Let's now welcome Shrikant Chauhan of Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Interesting day today. What are the charts suggesting?
Good afternoon, Sonal. Good afternoon, Vivek. So yes, market is like showing a lot of volatility. It is exhibiting a lot of volatility, and it has reached to its equilibrium level. It is not crossing the level of 26,200. It is not breaching below the levels of 25,800. So based on this, I am of the view that the market is going to spend some more time within this range in case if there is any correction on the back of the expiry and all. there we should look for taking some long bets. On the dismissal of 26,200, eventually we are expecting market to move towards the levels of 26,500. So broadly, we are of the view that the undertone of the market is bullish. Ideal strategy should be to buy if there is any correction in the market in the near term. And on the high side, till the market is not crossing 26,200, we need to be a little bit careful while adding long positions close to 26,200.
Okay, Shrikant. So that's your view as far as the index is concerned. But individual stocks, what is it that you're liking? Any buy calls for our viewers today?
So today, Vivek, we are witnessing a lot of buying activity and interesting buying in all pharma companies. Pharmaceutical stocks, they are doing really well. They are forming some higher top, higher bottom sort of series, especially Aurobindo Pharma, which has made double bottom close to 1,050 sort of levels. And now it is reversing from those levels. Based on its overall formation, I am of the view that the stock is heading for at least 1,450, 1,500 in next few weeks. It will take some time, but it's a positional bet to buy at current levels with a target of 1,450. And we can keep a stop loss around 1,150 for the same. The other stock on which we are bullish is from the PSU basket, and that is Canara Bank. Here also, if we see the technical pattern of it, it is forming rising top, rising bottom since last almost 7 weeks, and it has crossed its all-time highest level close to 125 levels. So based on its overall formation, the stock is heading for at least 160, 165 in next few weeks. Here also we have a buy rating, and in case if there is any correction, then close to 140 or 138 levels, it's a buy.
All right, thank you so much, Shrikant, for joining in. So those are some technical names to keep an eye out on. With that, we'll slip into a short break. Dhruv Shringi of Yatra Online will join us next to discuss the recent management changes and a lot more. Stay tuned for that.
Welcome back to Midcap Radar. Well, one particular stock that's been doing quite well is actually Karnataka Bank. Last week, there was an interesting acquisition of a large chunk of shares by a noted investor, post which that particular stock has seen a stellar up move. Gaurav joins in with more details.
Well, yes, Karnataka Bank is in focus, and the reason being that Mr. Aditya Halvasia, he bought around 2% stake in Karnataka Bank worth 160 crores in the last 2 days itself. And if you look at Mr. Aditya's profile, he is chairman and MD of Cupid Limited, and at the same time, he also serves as a director at Tourism Finance Corporation of India. So just to give you a glimpse of what has happened is that he invested around 13% stake in TFCI back in March 2024, and after that, if you look at the stock performance, it has gone up almost by 50%. So that is something to highlight. Now, coming to the Karnataka Bank's overall financials and the overall status, we have already seen some kind of rejig happening in the management of Karnataka Bank since July 2025. In fact, recently, Mr. Raghavendra has been appointed as CEO, who was earlier COO at the bank from 15th of November. If you look at the another aspect to it, now coming back to what it has to do with the TFCI, ex-MD of Karnataka Bank is also serving as an independent director at TFCI, Mr. Mahabaleshwara, who was with Karnataka Bank from April 2017 to April 2023, joined as independent director in TFCI in June 2024. Apart from that, if you look at the numbers from Karnataka Bank, it was not a stellar performance to say, because in fact profit that declined almost by 5%, while loan book declined almost by 2% in second quarter. But if you look at the management commentary, they seem a bit optimistic, because they are expecting ROAs to reach around 1.1 to 1.2% versus what it was at 1% in second quarter. And at the same time, as per fourth quarter commentary, management had also expected advances to reach around 90,000 crores by the end of FY26. Apart from that, even if you look at valuation, there also Karnataka Bank actually looks attractive, because it is currently trading at just 0.6 times price to book, versus if you look at the peers like South Indian Bank, Karur Vyasa, City Union, all of them actually trading 1 time or higher than 1 time price to book value. So definitely on the valuation front, it looks like an attractive deal for Karnataka Bank. And at the same time, given that there was a deal which was happening for the last 2 days, the bank has gone up almost by 15% in the last 3 days itself.
Okay, all right. Thank you so much, Gaurav, for joining in. A big move on Karnataka Bank and some interesting updates as far as stake is concerned. But let's talk about the big stock or the big story for today. Yatra Online shares, they're declining in trade after CEO Dhruv Shringi has resigned as the CEO, while Siddharth Gupta is appointed as the new CEO. Let's get in Dhruv Shringi joining us now to take a few questions to understand what really happened here. Dhruv, good afternoon. Thank you so much for joining in. Well, you indicate that there are personal reasons for your resignation. We do get that, yes, personal reasons. But it is a very rushed resignation, and there is an immediate appointment as well. Could it have not been planned better? Because investors are quite taken aback. The stock is lower in trade.
I think there is maybe a bit of an adverse reaction to the stock than what we anticipated, but this is a fairly planned move. So I think the messaging saying that, I have resigned in a way is also misleading. Well, technically that is correct, but I'm also moving on to being the executive chairman of the company. The reason we made this move, and it's a very well thought through move, is because as a company, we are at our best in our history, right? From a profitability point of view, from a scale size point of view, the company is doing really well. The core business is performing very well. It's almost in an autopilot. So we thought it was the right time for us to get someone in who could take on running the day-to-day
Dhruv, we get that point, and in fact, Q2 was quite strong, and you had actually upgraded the guidance. What has taken the street by surprise is that, most of the changes that you're talking about have happened with immediate effect. Generally, in a process like this, it's telegraphed well in advance. The analyst community is aware, in a conference call, or generally, the analysts are made aware. So what prompted this sudden overnight decision to step away from the CEO role?
No, this is not an overnight decision. As you can imagine, someone of Siddharth's caliber who's coming into the company, this would be a well-planned, well-thought-through kind of discussion which would have happened over a period of time in shortlisting the candidate, having multiple rounds of discussions with him before we brought him on board. So this is a well-thought-through decision. And out here, the way we look at this is about putting in place the steps that we need to for the next phase of growth for the company. So while he's looking at one aspect of it, it'll free up a little bit of my bandwidth to start looking at other aspects of the company, from, let's say, inorganic growth opportunities to international expansion. We want to really see how do we double the company in size and scale over the course of the next 3 years. So keeping that in mind, this is more of a step to strengthen the management team as opposed to looking at this as a substitution.
So, Dhruv, what has happened here is that the reaction that you're talking about is because of the fact that this transition happened immediately. There was no lead period for transition from you to Siddhartha to take over as the CEO of the company. Yes, you're going to be the chairman, but CEO position is very important for any shareholder as well. And also the fact that it was not announced in the conference call that happened like as recent as 2 weeks back. And I think that's the reason why we are seeing that reaction as well. You did indicate that there will be a certain roles that you will take up as the chairman of the board of directors as well. If you can talk more about it, and what skill does Siddhartha bring to the table? The investors would definitely like to know about that as well.
Sure. So he firstly, has over 25 years of experience on the B2B side of things. As you would have seen, our business over the last 2 years has pivoted more and more towards the B2B part of our business. He comes with experience in companies like SAP, companies in metal, where he's led large teams on the B2B front. And I think he will do really well in terms of scaling up our B2B business and providing some oversight and guidance to the B2C part of the business as well. In terms of my own role, right, I look at this, from a more strategic perspective. There are multiple other avenues of growth that we need to look at in addition to the core part of the business, be it looking at, international expansion, be it looking at M&A opportunities, be it looking at how we work more closely with the government on the tourism side of things, right? Tourism is one of the key initiatives that the government is working on. And there are multiple opportunities being created within that for us to expand. So I think there are a number of areas where we will collaborate and work together on to be able to multiply the organization's growth potential.
So, Dhruv, in that case, the question still remains. You want to take up other roles. Why not give some breathing time for that transition to come by? Why make it so sudden?
I'm very much in the company. It's not that, I'm moving out of the company tomorrow morning. So there is a sudden transition. I'm very much around to make sure that from a transition point of view, all of this happens seamlessly. So that's the part that I'm maybe a bit, surprised by the reaction. Had it been a case that I was moving out and suddenly someone new was coming in, I would have understood the reaction. But given the fact that I'm as an executive chair, it's not even that I'm a non-executive chair, I'm an executive chair in the company. It's only supplementing the strength of the management team.
Right. Dhruv, we get that point, and the clarification that you're giving now, and the assurances that you're giving now is something that the street is clearly taking a note of. Dhruv, you mentioned a couple of points. Number one, you said that you will be looking at policy and you will be, number one, talking to the government about how to improve the tourism part. We get that point. The second point is, and you mentioned that a couple of times, you said that you are looking to expand both international operations as well as looking at prospective M&A opportunities. Do you have any acquisition targets on the horizon? What will be the likely size and what vertical will you be looking at?
So, if you look at our track record, right, once every few years, we have done an M&A on the enterprise side, on the corporate travel side only. Our focus remains squarely on that part of the business. The last one we had done was in September of 2024, and that acquisition is now fully integrated. So we will continue to evaluate opportunities on the same lines. There is no specified target as of this point of time, but it's more about creating the bandwidth to be able to look at those more closely. The other aspect which is there is looking at international expansion. What we've seen, at least in the Asian region, as we are targeting some of the larger customers, they have a footprint beyond India as well. So our steps, our thought process over there is to look at how do we put our own foothold into these other neighboring markets, be it markets like the Middle East, markets like Southeast Asia, where there is good growth potential and synergy between our existing business, existing customers, and their growth in the region.
Okay. So, Dhruv, you say you're surprised by the reaction. The fact is even the investors are surprised by this quick transition, right? And that's why you're seeing that that fall. The stock is recovering right now, but have you had a word with the institutions that own your stock? What have their reaction been to this? Or were they surprised too as well by this shift that is happening in the CEO's position? And secondly, what is your stake, personal stake in the company? What happens to that? Does it stay? Do you buy more? If you can give those specific numbers as well.
Sure. So, firstly, from a reaction point of view, I think the larger institutions have obviously understood, and we've spent some time explaining to them the rationale as well. And that's part of the reason why you're beginning to see some recovery happening. So it's not a sellout which is happening. I am also expecting that through mediums like yours, as we get the word out there and this clarification filters in, we will see improvement continue to happen in the stock. Because at the end of the day, the underlying business is performing well. This is a move which will only add more synergy, add more growth opportunities to the business. So I see this as a net positive. We are not looking at selling any stock. So from a personal standpoint, there is no sale, transition, anything of that nature being thought through, even remotely.
And what is your stake in the company in personal capacity?
Sorry?
What is your stake in the company in personal capacity? You'll continue to hold that?
Yeah, so I will continue to hold my entire stake. My stake comes in through the overseas holding entity, and that will continue to remain as is. There won't be any change of that.
Dhruv, and a quick guidance check. You raised the guidance to 22 to 23% on the top line, and you raised margin guidance as well. All of that on track?
So there's nothing that's transpired in the last, let's say, 2-3 weeks, which would make me think differently.
Okay. Well, thank you so much, Dhruv, for joining us. And there's been a very sharp recovery in the stock price, as you've gone ahead and given an assurance to the investors that you will continue to remain a part of the company and steer it forward. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, we just concluded the conversation, the very interesting conversation we had with the management of Yatra Online. Post the management commentary and the assuaging of concerns, that stock has seen a very sharp intraday recovery, almost a 4.5% recovery. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello, good afternoon. You've tuned into MF Corner on CNBC TV18. I'm Vinny Motiwala. With me is my colleague Sonal Bhutra as well. Sonal, good afternoon. And we always want to break down everything for our viewers, but this is something that is very important because when I started investing, I used to be confused between the difference of these two, that is regular and direct mutual funds, right?
So exactly that's what we are going to break down for our viewers today and touch upon the basics of mutual funds for the benefit of our viewers as well. What are the differences between regular and direct mutual fund plans, how different plans impact investors' return, whether a first-time investor should go with direct or they should stick to regular, what is the cost-benefit analysis. To understand this and more, we have with us Santosh Joseph, founder and partner at Germinate Investor Services, and we'll have Sandeepan Roy, CIO at Motilal Oswal Private Wealth, also joining us in just a bit. Santosh, good afternoon. Thank you so much for joining in. Well, you know, most new investors hear the terms direct and regular, but the conversation often stops at direct is cheaper. That's something that everyone just talks about. Beyond cost, what are some of the other factors that an investor should consider before choosing one over the other?
Hi, good afternoon to both of you. Good to be back. And I agree, this is a hot subject and many people want to know, and I'm sure many of the viewers also would like to know a simple answer whether direct is cheaper. Now, while that's a term that's getting popular, I think the beauty lies in the detail. Now, the minute you realize that direct is cheaper, and then you realize, what am I getting if it's not direct? The whole characteristic feature that you get in going for a full-blown service that is in the regular plan is that you got someone to help you through this entire journey, help you navigate. To begin with, the cost, the process of determining value is just beyond the cost of the fund itself. How do you determine value? You determine value by how you are able to select the fund, how you're able to do asset allocation, how someone is able to handhold you, guide you, what to select and what not to select. Sometimes we miss the most important thing, that if an advisor or a distributor helps you stay away from meddling with your own portfolio, that is not to redeem when the times don't look good, or to let your funds stay the course, or not to unnecessarily tweak or churn or change your portfolio. Now, these things are not priced in, not quantified, not validated. Therefore, it looks like that direct is cheaper, and without being able to put a intrinsic value to guidance, intrinsic value to asset allocation, even allocation of your monies to the goals that you have, that is aligning your money to the goals, is a very critical part of your journey towards building wealth actually and keeping wealth.
Absolutely. Thank you so much for that, Santosh, and thanks so much for joining in. We also have Sandeep and Roy now with us in the conversation as well. Sandeep, and good afternoon. Thank you so much for joining us. And obviously, you know, firstly, I'll take that first question with you as well. In terms of, obviously, when you look at it, it often stops at direct being cheaper. But what is the benefit beyond that for investors in terms of direct mutual funds or in terms of regular mutual funds? What are the factors that one should consider, if you would like to add anything to that? And overall, for someone who is investing for a long term, say 10 to 15 years, how can you know, the difference in terms of return be between regular as well as direct, in terms of cost difference also comes in?
Right. So let me take the last question first. In terms of the cost difference, if we assume there's an 80 basis points kind of cost difference between a direct plan and then regular plan, then it will be around, let's say, 20%, assuming a 12% kind of gross return over a period of 10 years, okay, which is substantial. You know, your 1 crore, let's say, goes to 2 crores, or it goes to 2.2 crores, right? So, or 2.4 crores rather. Okay, so that differential is substantial, but you also have to understand the other aspect, which is that of taxation. So let's say you're holding a regular mutual fund, regular code mutual fund today, and now you want to switch to a direct code mutual fund. But that will have a tax implication, right? You will have to pay, depending on the holding period, either a short-term capital gains or a long-term capital gains. So either it will be 12.5 plus sales plus charge surcharge, or a 20% plus sales plus surcharge. Now that, let's say, assume it's a long-term capital gain, so it's about 15%. So that cost, when you add to it, the break-even happens almost in about 8 years or so. So you have to be very sure that the mutual fund that you are investing in today, after doing the switch from regular to direct, you are going to hold on to it for at least the next 9-10 years. Only then will the benefits accrue to you. Because today, when you are redeeming or you are doing the switch, please remember it's a redemption plus buy plus an investment.
Okay, all right. You know, this is a question to both of you, but let me start with Santosh first, because advisory comes with value, whether it is behavioral guidance, asset allocation, we talk about rebalancing as well. Is it possible for an investor to quantify that value when deciding between the two options? Because while we can quantify the other part in terms of cost, what about these factors?
I think you rightly said that the most important value is not saving on the expense ratio. What we are able to see here is the difference that I'm saving between regular and direct. What we are not able to see is the value that the advisor brings to the table in handholding the client. And let's take a small example. If the client got worried in the last 1 year or 2 year or 3 year because of markets or valuations or just the way the markets have been sideways, one would exit or one would not invest in the markets. This is where the advisor alpha or the advisor role in generating wealth apart from costs come into play, which will just cover up the cost and you won't even know there was a cost. Coming to your previous question, on a 10-year, 15-year, 20-year basis, yes, there will be maybe a 1 or 1.5% extra CAGR return that you will make in a direct plan. But don't forget, you will miss out a lot more by not having the right guidance, the right handholding. Sometimes we forget that loss aversion or reducing the risk itself is huge returns, and it doesn't even compare to the costs.
Absolutely. Sandeepan, the same question to you. How do you see in terms of an investor, how should one quantify the value that comes in deciding between both these? And also, sometimes you often hear that argument that experienced investors should go for direct and beginners should choose regular. Do you agree with that, or is that a decision more complex than it just sounds like, oh, you can just pick this?
Let me, ask a question. Why does Roger Federer have a coach, or a Novak Djokovic, he has a coach, right? Why does the Indian cricket team has a coach? And more often than not, the coach is less skilled than the person who is coaching, right? Because that brings a very important perspective, which is a holistic perspective. Where you are going wrong, is he dispassionate? Because he's detached from you. So he's having a far more, I would say, top view of your performance, of your situation, than you can have when you are completely in the situation yourself, right? So that's one. And on the mutual fund, advisory side or direct quote side, why you need an advisor also is not just to do the fund selection. You also need an advisor to do the first step with the first principles. First principles is that of asset allocation and your strategic plan. What is the investment objective you're trying to achieve through this investment goal of yours or through this investment plan of yours? That entire thing, more often than not, you need guidance, you need handholding. And as numerous studies have showed that asset allocation is the biggest guiding principle between on the returns that you get, and not the instruments that you pick, right, at the end of the day. So if that is the case, then your journey starts from defining your investment objectives, basis your current situation and where you want to be. And that, I think you need an expert advice on, right? So that's the first step. And then comes the second step where I'm doing a fund selection, we are tracking them. And in today's world, obviously you are aware, there are so many changes happening even in the mutual fund space, right? Fund managers who have been in the same fund house for 10 years, 15 years, suddenly are shifting out, right? Either they're moving to another mutual fund or they're starting on their own. So how does an investor, an ordinary investor, keep a tab on all those things? And a fund at the end of the day is as good as the fund manager who's managing it, right? It's his own personality stamp, and especially if he's managing it for the last 5 years, 10 years or so. So there, you need advisors who can at least guide you, keep you updated, help you with all the information asymmetry that is there in this entire vast space.
Okay.
Apart from the financial planning.
Okay. Sandeepan, if you can quickly tell us, if somebody is already invested in regular plans, when does it make sense to switch to direct? And also, what are the implications in terms of tax costs if they do so?
Yeah. So as I said that if I have to give the main clause here, it's that whenever you are switching, again to repeat, it's a capital gains incidence for you. So you should be very, very clear that when you are switching or making that shift from a regular quote to a direct quote, you should be in that fund for the very long haul. Otherwise, the break even doesn't happen. When you have with surcharge, let's say a 15% tax incidence, to recover that 15%, you need to be with a 80 basis points or a 1% expense ratio differential. You need to be in the fund for the next 8 years. So that discipline, that that clarity of thought has to be there. Okay, but if it's an incremental investment and you are a very savvy investor who is completely hooked to the market, who knows what he is doing, then you can do direct. But if you are, if you are still in the first steps where your financial plan needs to be done, your investment objectives need to be set, your risk appetite, your disposition towards risk needs to be assessed, then it's always better to go through an advisor through the and not DIY.
Absolutely. Sandeepan as well as Santosh, thanks for the views coming in on a regular versus direct funds, how one should go about it as well, and when one should look to switch. But do wait on with us because we're going to slip into a very short break. On the other side, we want to put the spotlight on matrices and metrics that's such as absolute returns, CAGR, XIRR with our guests. So we'll continue that conversation. Do stay tuned.
Welcome back. You're still tuned into MF Corner. We still have with us Santosh Joseph of Germinate Investor Services and Sandeepan Roy of Motilal Oswal Private Wealth. Let's now understand some important metrics such as XIRR, absolute returns, CAGR as well for our viewers, because we keep seeing these numbers, but sometimes it's so difficult to comprehend when to look them, what to make of them when you are doing your portfolio review. Sandeepan, let me start with you. Let's make it very simple. How do you differentiate between the three in an easy way for our investors when they are doing maybe SIPs or lump sum investments? Tell that to us.
Yeah. So let's take a quick example because that will help to decode. Let's say you have put in 1 lakh rupees. In 3 years' time, it becomes 2 lakhs. So you have doubled your money. That's the absolute return, right? That from one point to the other, you put in 1 lakh, it became 2 lakhs. So you have gained 100%, right? If I have to look at CAGR, then it becomes 1 lakh to 2 lakhs in 3 years, about 25% CAGR, which means compounded annual growth rate is 25%. So which means you put in 1 lakh and then it grows every year by 25%, then it becomes 2 lakhs in 3 years' time. Okay, that's like giving you an annual rate. And now, if I have to do XIRR, things become slightly more complicated. We never do a lump sum investment of 1 lakh. Let's say we are an SIP guy. So we will be doing, 5,000 rupees per month kind of investment. And that then, over a period of time gives you the 2 lakhs. So instead of 1 lakh as lump sum, we have been doing an SIP. And that SIP has over the next 3 years given you a return of 3 lakhs or 2 lakhs. So that return will be slightly lower than the other two returns. And this will be XIRR because, see, even I am not able to manually calculate it. When I'm saying I'm doing 5,000 rupees per month SIP for the next 2 years, and hence I got, let's say, 2 lakh rupees when I invested 1,20,000, it becomes very difficult for me to do an actual rate calculation there. Probably it is 15-16%. Okay, but that's the XIRR calculation that comes into play, where your cash flows are taken into account, the time of your investment is taken into account, and any cash flow in or cash flow out is also taken into account.
Absolutely. Santosh, in all this, many people normally only look at absolute return and assume their portfolio has performed well or poorly on the base of that. Why can that be misleading, especially for a long-term investor on SIP-based investments that come in?
Well, as Sandeep very clearly explained, the absolute return is an absolute point-to-point, the amount of money you put and the value of the money it is today. The first things first that you miss out in absolute return is the time value of money, that how much time has it taken for the money to grow, and whatever money that you've grown, what does it mean over time? It ignores that. The second thing is that even though your absolute return may look big and bulky, but the minute the number of years are more, the returns drop. So absolute returns are good to give you just a macro point-to-point, but it fails in taking into account the time spent and the periodicity of the investments that have happened. And especially in a volatile market, absolute returns will also be misleading you to show you lower return than what it is, because when you're investing, especially in a SIP or even in a non-structured format with infrequent investments, your every investment get treated as a new investment, factoring for amount, the date of entry, and even for the time spent. Therefore, absolute falls short. You will have to move to either CAGR or XIRR to give you a better sense over time for the money invested.
Take that point. So XIRR is when you do not have steady flows or a lump sum flow. You are doing it at intervals, so it does take into account the time value of money as well to count your returns. Sandeepan, there are online calculators and platforms showing these metrics, but how can an investor know whether the number they are seeing is calculated correctly, especially for irregular cash flows?
Yeah. No, so there I think you need to also do some hard work. Because XIRR needs to be calculated in Excel, otherwise it is very difficult to compute manually, or intuitively. So do one simple exercise. At least take one entire cash flow of yours, put them all in an Excel where your inflows, put them as negative numbers. Let's say every month you are putting in 5,000 rupees. So put it as minus 5,000 and put the dates on the right column, and then when you are getting the final value as of today, let's say it's 200,000 or 2 lakhs, then put that as a positive value at the end and calculate the XIRR. It's a simple Excel XIRR function. So what you get, see whether it is the same as what the website is showing. More often than not, today's websites are automated. They will show you the right returns, but you should verify it also. If the calculations are more or less plus minus 1%, you are there. So it should be able to rely to that website for calculations.
Okay. Santosh, just a quick one. In terms of if an investor is reviewing their portfolio once or twice a year, what's the right framework or checklist maybe that one could have for evaluating returns meaningfully without getting lost in terms of the numbers there?
See, the numbers and the jargons can intimidate an investor, and let's also remember sometimes if they're doing it on their own, they'll be wondering, okay, now I'm doing my investments on my own, am I really making the money? The first things first, have a look at whether your fund is beating the benchmark. The second thing is, are you actually using the right measure? For example, many people, they will be in a multi-cap fund or maybe in a mid or small cap fund, but they'll be comparing their performance to Nifty. So you have to also compare apples to apples in this context. And the third and the most important concept is that you have to ensure that the returns that you are expecting to the return of the peer group of the fund. For example, if you're in a flexi cap fund or a mid cap fund, you want to check how am I faring against the broader market, which is the right market, a real comparison versus the peer group in that segment. So some of these tools are very easily available, and for this, even on Google you'll find the answers. But otherwise, there are fact sheets and there are so many websites that give you this data handy. So for someone who's managing this and wants to use a yardstick or a benchmark or a system, the first is to ensure that you're using the right benchmark. The second is to ensure that in the peer group you're at least in the top or the second quartile.
Okay, we take that point. Santosh and Sandipan, thank you so much for joining in today. These things sound very basic, but when you take care of basics, the other things take care of themselves. So it's very important to understand these metrics and the difference between direct and regular funds as well. Thank you for explaining that so well to our viewers as well. Okay, all right. With that, we'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
beyond market headlines. To understand the reasons for the day's movers and shakers and Get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
The Hang Seng is up almost 1%. The Taiwanese index is up 1.5%.
In a way, this actually increases or encourages formalization.
But 20-day is like, as they say, the Lakshman Rekha, and we shouldn't come very close to it and, of course, not break it. Markets have opened, so it's absolutely flat, 25,970, 25,980.
Our domestic consumption has been growing at more than 12%, in fact at 12.5%.
And of course, you will get a reset on the IT earnings as well, which is a significant portion because of the rupee depreciation.
We understand that the bids that are being spoken about are at a premium to the current market price.
And what a day it has been so far, right? Quite range bound. We saw some green briefly above the 26,000 mark.
We were about 60,000 crores at the end of FY20. That 5x would mean 3 lakh crores.
Now we have recovered around 85 points from the lows. Nifty is above the 26,000 mark.
It is quiet. I think it's one word to describe the market in the screen today. It is quiet. 20 points, 25,980 is where we are at. Brief bit of excitement, a flutter of excitement about 30-40 minutes back when the market went up 60-70 points, but it's cooled off once again. This is Closing Bell. We are coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, afternoon.
Hi, we're all in about a 100-point range.
Yes.
Since morning. The up and down is just in a 0.4 percentage point.
Well, that's right. Let's see whether or not there is a bit of a flutter towards the end of the trading session. Weekly, monthly, as well as weekly expiry plays out. And for the series, whereas flat as can be, which isn't a bad outcome going by what the global markets did.
Absolutely. I think indices somehow are hovering near highs, but stocks are anything but.
But at least today, the advanced decline ratio is positive.
Yeah, it is positive. Rima, flat markets are very tough for people who are people who want a little bit of excitement, a little bit of buzz, something happening up and down all over the. So we've not had flat markets for a number of years. I remember the last flat zone we had, a longish stretch we had, was from the highs of 2010 to right before the 2014 campaign.
So in the last 10 years, you don't remember a flat?
I think I remember that phase. I'll tell you when it was. It was 2008, January 2008. The Nifty went to 6,300. I was just out of college, so I remember these levels very well. And in September 2013 was when Mr. Modi was nominated as a Prime Minister candidate, where we hit that mark of 6,300. So, a lot of investors, whenever I meet them, they say 15-20% we'll get in mutual funds. I say, there was a period when the Nifty didn't go to those all-time highs for a good 6 years, 5 to 6 years out there. So sometimes that, time in the middle can be very, very frustrating.
No, it's because nothing is, you're so used to, habituated to something happening. But I don't think we are at that kind of a zone yet, because, it's just a few days, it's been a few weeks maybe, but, all kinds, we can use all kinds of adjectives to describe what's going on, but, you talk to anyone out there on the street, and generally there's a sense that maybe, we are around here, there's no real impulse up or down. Things are strong, but there's no real incremental trigger for the market to do very well. I guess at least at this point in time. Well, let me just quickly run you through what's lined up over the next 60 minutes or so. And I'll give you a sense of what we will touch upon here and what's coming up. So markets, of course, pretty much top of the agenda. Recovery from the lows, but we are around the 26, just under the 26,000 odd levels. IT stocks are coming under a bit of pressure. Real estate PSU banks are up. A spate of block deals leading to a surge in shares of Karnataka Bank. Gaurav will join in with what is behind it. And GE Shipping is... we spoke with the management, and we'll play out some sound bites. The other big trigger, geopolitically speaking, could be some peace between Russia and Ukraine. Looks closer now than ever before. And, it's got implications for the oil market, and that's essentially what we want to get to you. It's like a big what if, and who knows? We may one day, very soon, wake up to something, although it's not happened in the last 3 years. How should you position yourself in the last hour of trade? Mitesh is with us to help us with that. Mitesh, great to have you with us here. Thanks very much. What would you do? What's the recommendation?
Good afternoon, Prashant. I think the index is kind of moved up a bit, moved down a bit, and then back to where it started or where it closed yesterday. Not much of a direction movement happening. Possibly the last half an hour could bring in some action. So avoid the index for the timing. As I've also mentioned, my preferred buying zone is close to about 25, 850, 870, which we have not tested. So we'll just wait it out. On the stock side, though, a buy on HDFC Life can be taken with a stop below 759.5. For targets of 790, and Gas Authority or GAIL is a sell if it breaks 179.5, sell then with a stop at 182. Look for targets of 174.
Lots of single stocks where you are seeing great action. So Capillary Technology is one of the recent listings. It's a tech which enables loyalty programs for brands, including the Aditya Birla Group, for instance. So that's locked up in an upper circuit of about 20%. Recent listing, stock is done pretty well because the issue price, if I remember right, was about 550, 600, somewhere around that level. So that's done well. Physics Wala is seeing some buying. Bullion Brains Grow continues its uptrend. That's got a 3.5%, 4% kind of a gain. Restaurants brand Asia has been strong. Lots of banks on the gaining list, whether it's Federal Bank and IDBI Bank, buying visible there. Pine Labs has moved up to about 245. Again, one of the recent listings, issue price was 221. Stock is seeing some interest. So individual stock action continues to be quite there. There's lots of excitement. But let's talk about Karnataka Bank because that is one of the big movers. And Gaurav is here to tell us why. Gaurav.
Well, yes, Karnataka Bank is in focus, and the reason being that Mr. Aditya Halvasia, he bought around 2% stake in Karnataka Bank for a value of around 160 crores. Now, if you look at Mr. Halvasia and his profile, he is CMD at Cupid Limited, and at the same time, he also serves as a director at Tourism Finance Corporation of India. Just to give you a perspective, he invested around 13% stake in TFCI back in March 2024, and after that, if you look at the stock performance, it has gone up almost by 50%, and he has also raised stake almost to 18.5%. Another thing to highlight is that if you look at the TFCI, ex-MD of Karnataka Bank also serves as an independent director there. Mr. Mahabaleshwara, who was MD and CEO of Karnataka Bank from April 2017 to April 2023, he serves as independent director there in TFCI. Now, coming to Karnataka Bank, if you look at the bank itself, we have seen some rejig happening in the management. So, in the past few months, we have seen management changing. In fact, recently, Mr. Raghavendra, he was appointed as MD and CEO on 15th of November for the bank. And if you look at the numbers also, it was not a great show for second quarter at least. It was a steady show. Profit that declined almost by 5%. The loan book that declined almost by 2.5% on a year-on-year basis in the quarter itself. But going ahead, management seems to be a bit optimistic. They say that ROA is going to be in the range of 1.1 to 1.2% versus what we have seen at 1% in second quarter. And at the same time, if you go back in fourth quarter, that time management even alluded to the fact that advances can reach at up to 90,000 crores in FY26. Now coming to valuation, if you look at valuation of Karnataka Bank, it looks very attractive at 0.6 time price to book versus if you look at the peers like South Indian Bank, Karur Vyasa Bank, City Union Bank, all of them are trading at 1 time or above 1 time price to book. So definitely in terms of valuation, the bank looks attractive even now, but given that there was a change in trade, we are seeing a rally happening in the stock price. In fact, in the last 3 days itself, the stock has given almost 15% returns to investors.
All right. Thanks a lot for that, Gaurav. And Gaurav, I think just a week to go for your big day. So you've got 150 hours, mate. Get your act together. Thanks a lot for joining in, managing both the wedding preps as well as the analysis on the banking names. Well, let's get in Dharmesh Kant, Head of Research at Chola Securities, who joins in. Hi, Dharmesh. Good afternoon. What do you make of Karnataka Bank? I've heard a similar story, a few years ago. The street keeps speculating. Valuations in favor, a large investor coming in there, 2 large trades in 2 successive days. The stock has been absolutely on fire. 170 to 215 in a matter of 4 trading sessions. Your view?
Yeah, Dr. Nigel. I mean, yeah, very true. These stories keep on playing in and around Karnataka Bank, but none has materialized till now. So let's see how this goes about. And the valuation was the only thing which was sitting in favor of Karnataka Bank. So after this move, it is trading at around 0.6 times price to book. Before this move, it was 0.5 times price to book. But the business is not doing very well. So there was a degrowth in the loan book, and that is, very scary when you compare to every other, banking space seeing a growth coming to the play. So a lot depends upon how the which management takes shape and how they drive the business and how things are likely to turn around for Karnataka Bank. So, I mean, it's again, toss of a coin as to that extent. So unless the clarity is there, a tough call to take. But yeah, for brave hearts and opportunist traders, valuation does kind of a move, wait for a couple of days. If there's a dip, then one can add on. But definitely, if you are taking a punt.
Okay, all right, 25%, right, in the last 3 days. I was looking at what the stock has done year to date, zero, nothing. It's absolutely flat. After this 25% in the last 3 days, but I think pretty sort of reasoned views coming in from Dharmesh as far as Karnataka Bank is concerned. And of course, you heard Gaurav earlier as well. Now, the other conversation that we had earlier today, of course, is with Sandeep Pondrik, Secretary, Ministry of Steel, who told us that the government's decision on safeguard duty is expected soon. Remember, the imposition of that duty had kind of sort of expired early November. And Mr. Pondrik said that one way or the other, we will hear soon on this. And we, of course, spoke about demand, pricing, etc. as far as steel goes. Listen in to some of that commentary.
On the safeguard duty, as you know that there is a process which was conducted by DGTR. And on the recommendation of DGTR, the provisional duty was imposed, which was effective till early November, 6th, 7th November. After that, the provisional duty has lapsed. However, DGTR has also recommended a safeguard duty for 3 years, which is under consideration with the government. So we can expect a decision pretty soon. There have been decisions to relax some quality control orders on BIS standards for a specific time. So for some standards, we have relaxed it, suspended the QCO for 3 years. For some, we have suspended the QCO for 1 year. It's also, for example, that in specialty steel, since we don't have production in certain grades, and specialty grades have to be imported, so we have suspended the QCO for a year. And we hope that the domestic capacity will come by that time. So it's basically to balance the interests of both steel industry and the consumer industry both. Short term, there may be some stress on demand-supply ratio, and we may have more supply than the demand for next 3 to 4 years. But I expect that the demand will catch up with supply as we move forward. So to answer your question in last one line, yes, I expect that the demand will continue to rise between 8 to 10%. The steel prices right now are at quite low level. And as the demand increases in coming months, I would presume that 26 the prices would stabilize.
All right, Dharmesh, what do you make of the ferrous sector? They're saying that that safeguard duty will come in the near term, but, there has been some kind of taking the foot off the pedal. Because over the last many years, there's a lot of protection from the domestic steel industry, and that's helped because demand has been strong. China has been dumping in every country. So that protection measure was needed. He's saying it's coming, but it'll come soon. What's your view on these stocks? Some of them have corrected. Tata Steel is down 10% from the recent peak. I think JSW Steel as well has pulled back a little bit. JSPL as well. Larger names have pulled back. Even Midcaps have pulled back. You like anything from here?
Should come because that is very much needed as far as India steel sector is concerned. We have seen the volume uptick has been really good for the steel sector. My IP numbers advocate the same. Prices have been benign because of the international environment out there, and at the same time, input prices are quite low. So, be it petcoke or other inputs, they have been pretty benign. So the margins, there's definitely a trade-on if the prices have corrected for most of them. And in case the safeguard duty comes back into action, then our trade of around 10-15% can be there, because that is the correction which has happened from the top line. And we are entering into a segment where steel consumption is going to rise because of the pent-up infra spending by the government, which will definitely come into play. So the best, topics here is this JSW Steel and General Steel. So these are the two, counters which we like. Tata Steel is good, but because of its European exposure and many unknowns out there, we have been just avoiding that.
Dharmesh, stay on. Let's just quickly look at Yatra Online. Shares were in the red for a greater part of the trading session, but I think have gotten back into the green. The news here is that CEO Dhruv Shringi has resigned as the CEO of the company. Siddharth Gupta has been appointed as the new CEO. Now, earlier today, we had a chat with Dhruv Shringi, who is now appointed as the executive chairman of the company. Listen in what he had to say about the leadership change.
A fairly planned move. So I think the messaging saying that, I have resigned in a way is also misleading. Well, technically that is correct, but I'm also moving on to being the executive chairman of the company. The reason we made this move, and it's a very well thought through move, is because as a company, we are at our best in our history, right? From a profitability point of view, from a scale size point of view, the company is doing really well. The core business is performing very well. It's almost in an autopilot. So we thought it was the right time for us to get someone in who could take on running the day-to-day parts of the business. This is about putting in place the steps that we need to for the next phase of growth for the company. So while he's looking at one aspect of it, it'll free up a little bit of my bandwidth to start looking at other aspects of the company, from, let's say, inorganic growth opportunities to international expansion. We want to really see how do we double the company in size and scale over the course of the next 3 years. Firstly, has over 25 years of experience on the B2B side of things. As you would have seen, our business over the last 2 years has pivoted more and more towards the B2B part of our business. He comes with experience in companies like SAP, companies in metal, where he's led large teams on the B2B front. And I think he will do really well in terms of scaling up our B2B business and providing some oversight and guidance to the B2C part of the business as well. In terms of my own role, right, I look at this, from a more strategic perspective. There are multiple other avenues of growth that we need to look at in addition to the core part of the business.
Okay, so he will be looking at expansion beyond the core categories. In the interview, he also spoke about M&A. Overseas foray is something that Dhruv Shringi will now be looking at. And he went on to say that he will continue to hold his stake in the company. And this entire leadership change has also been explained to the other large institutional investors in the company. The stock had a big intraday spike when we spoke with the management exactly around the time. About 145, 150, and now it's settling, flattish, but a big intraday recovery. Dharmesh, do you think the fall, the initial fall, the skepticism surrounding the resignation and the kind of intraday stock price was warranted? I mean, how would you read this development at Yatra?
And the management interviews itself negated the development which is there as far as the negativity around it is concerned. And it's a natural progression which is happening in the company. So, nothing negative to take away from it as far as, the management setup and the future outlook of the management is concerned. And the people who come on board, they're with credentials. Let's see how they deliver out there. As far as the company is concerned, it has done a better job than compared to, say, is my trip planners or, say, even Thomas Cook, much better for out there as far as numbers are concerned. They have been on a growing course. But the problem with this space is there's hardly any moat in this space. Any new player with good muscle can come and disrupt the entire system, having the platforms in place. So, but that is the only worry, because earlier when Yatra was not there, my trip planners were there, or Thomas Cook was there, they were doing pretty well, and suddenly they are losing market traction and Yatra is gaining traction. So, but it's a very competitive segment. And that's the reason why we have stayed away from this entire space. As for long-term investing, trading pace can keep on coming on the table. Valuation-wise, again, a bit stretched, but it can come on this kind of a valuation, given the context of the last 2-3 quarters, the performance has been.
Great chatting with you as always. Thank you very much for joining in. But today is the expiry, and Nigel has now moved over to fill us in with the trends that he's seeing.
Well, looking at the market setup, we're getting into the last series of this calendar year and it's not looking actually very, very weak. And the reason I say that is the volatility index on the India VIX, that's cooled off yet again. Even in yesterday's trading session where we saw a bit of a slam dunk, the India VIX is still well behaved. And you like to see that from a bullish perspective. Now, the options data is quite interesting. There are two strikes that are very active. The 25,950 put, which is around the mark where we are at. The premium out there at the start of today was around 52 rupees. That's come down to approximately around 15 to 20 rupees or thereabouts. So those put writers, they're going to be counting on the 25,900 mark holding out. 25,950, you pull out 52 rupees from thereabouts. So around 25,900 is important. On the upside, that 26,000 call, well, the premium at the start of today was around 72 rupees. That's come down to around 2 rupees. So just punching in these levels, the broad range you get is on the upside, 26,070, which is a mark the bulls tried to move to earlier today. That is going to be a bit of a resistance. On the downside, 25,900. So that's the expiry zone that you're looking at. Few stocks that are in focus. It appears there is buying on HDFC Life. The stock is moving quite well. There's a good amount of open risk built up as well. And long rolls are seen on that particular one. While on Ashok Leyland, as well as on Bank of Baroda, there's a bit of a short squeeze that's taking place on both these two that's helping these stocks move up. So you have a broad range, 170-point range, and I think that will get respected today. If the 25,900 mark needs to hold out, we're seeing a bit of a 3 p.m. move that's coming about, but I think that 25,900 mark does get defended.
Absolutely. Well, it's a holding pattern, right? 5-point change, nothing very much. We'll see what happens. Nigel, thanks very much. Amit Gupta is going to be with us on the other side from PMS Motilal Oswal Private Wealth on the other side. Stay tuned. Coming up.
Welcome back. Let's get to a CNBC TV18 exclusive now. We learned from sources that the centre is weighing multiple options to replace the compensation cess on tobacco products. My colleague Timsy has the details.
Well, yes, as you rightly mentioned, sources have told CNBC TV18 that the government is studying multiple options to replace compensation cess on tobacco products, and the government is likely to announce this particular levy to replace the quantum of compensation cess on tobacco products in the upcoming budget 2026. The government is in favour of shifting this tax on tobacco outside the GST regime, keeping the collections out of the divisible pool. So both these things are the major parameters, keeping it outside the GST so that the levy on tobacco products under GST remains at 40% only, and also keeping the collections to themselves, that is with centre, so that it is not divided with the states. Now, some of the options that are there on the drawing board. Firstly, subsume it under the national that is NCCD, National Calamity Contingent Duty. Second is to introduce a new cess. And the third is to apply the tax under a different name and nomenclature, which is being debated highly upon. Currently, Finance Ministry and PMO are discussing these options on replacement tax as to what will be this replacement, how best this can be given a different nomenclature or a cess name or kept it under NCCD. And no final decision has been taken as yet, but yes, they are very clear in their mind that it has to be outside GST and does not need to be part of the divisible pool. Just to give a background, compensation cess on tobacco continues to remain in force till the repayment of back-to-back loans continues. NCCD is levied on specific goods, including tobacco products, crude oil, and the proceeds go to National Disaster Response Fund, that is NDRF currently. And compensation cess on tobacco products currently ranges between 5% to 290%. And this is levied in addition to the 28% GST. So the only quantum of 28% currently that is there in the GST system after the changes of 3rd September is basically only on these tobacco products, and that replacement is currently being debated upon heavily.
All right, Timsy, thanks very much for providing the full picture and the context there. So that's the story we're picking up. It's a source-based story at this point. Amit Gupta is with us from PMS Motilal Oswal Private Wealth. Amit, good to have you back after a while. Thanks very much for joining us. It's a painful-looking screen, and that's the feedback from everyone. I mean, people are scratching their heads, wondering what to do, where to find some ideas in. What are you doing, and where are you focused on? And you know, tell us a little bit. Tell us some interesting stuff you're doing. Large caps and all, we keep talking, but you know, anything interesting you're able to find from an absolute return perspective.
Yeah. So I think. First thing is there that when the rupee depreciates, you know, so we saw recently the rupee was coming almost closer to 90 levels. We have seen that as a result, the market also come under pressure. And this time, the broader market has taken that beating actually broadly. And if you look at the index perspective, it is holding mostly around 26,000. Because the banking and IT both had very compelling valuations, no doubt about this. So banking has not participated big time, and I think the mid-cap private banking, the PSU banking, in fact, some mid-cap IT stocks, I think they can come on the fore and they can start performing going forward in this consolidating market. So I think this is what we are also looking at. Yes, some kind of rebalancing has to be done in the portfolio, because if you had taken suppose real estate stocks before, because previously there was a thought process that after GST cut, we may start seeing the consumption play coming into picture, and real estate also is one of that theme. But actually commercial real estate is doing better, and as a result the REITs are doing better over there. But residential, I think the luxury segment is has more promise right now, and that's why you have seen some correction. So rebalancing definitely required in the market, because some of the chips are down. But I think the banking and IT can give you some kind of support, so you can look at some mid-cap ideas from there.
All right. Hi, Amit. Good afternoon. Good to see you. By the way, a bit of an expiry-related move taking place on the Nifty. Moves to the low point of the day, and the Nifty bank as well. Sharp decline. though that 25,900 mark, that's still getting defended. And that should be the case, really, by the time we wind up today, going by the options data. 25,900, important to defend today. Amit, among your picks, I think you're fairly positive on some solar companies. Debatable one, you have a very bullish argument and there's a very bearish argument that I hear as well. But you're bullish. So tell us the rationale.
So first of all, my sense, in fact, our sense is that if you look at the capital market companies, renewable companies, digital companies also, though with some volatility, I think, and EMS companies also, I think these are the, new compounders in the market. So they will come with volatility. You will have to face it. But yes, in your portfolios, they can give you good compounding if you look at little longer period of time. Now, coming to the renewable piece, as you were asking, so solar definitely, solar expansion is happening very significantly. Previously, we had very limited players, but now the players also are rising. They are coming on the boards also, getting listed. And I think solar as a piece, so if you look at initially only module manufacturing was there. So there was always a fear of China dumping in this particular area. But then the government came out with approved list of model manufacturers. That was a very good trigger. And that's why the local manufacturers had a good time. But now the module manufacturing also is picking up very large extent. So now the time is there. And this is where the stock picking should happen, that we need to look at in the value chain, which companies are expanding more into the solar, into the cell manufacturing. So cell manufacturing is the next piece which is going to pick up pace. Vari Energy, for example, they already have in excess of 5 gigawatt. It has been the leader in the market. They had a good capacity in module. Now they have increase in cell manufacturing. And our sense is by the month of June 2026, you will see another approved list coming out for cell manufacturers. And that is where if somebody has built in good capacity in that area, I think they will do well in the market. And not stopping here. Going forward, possibly in another couple of years, you will see another list going to come out for ingot manufacturers. So if somebody can work out on the ingots, and as per my understanding, Vari, they are working on and looking to have 10 gigawatt actually of setup in ingot also in another 2-3 years. I think they will also be the beneficiary of this. So it's a time now. In these areas, you need to look back into the value chain where there is more value. And I actually increase your setup, increase your capacities over there.
Got it. Okay, all right. Interesting one. By the way, as you gave us that answer, just pull up the chart on the Nifty as well as the Nifty Bank. Seesaw, big volatility out there. The Nifty Bank has fallen closer around, I think, 200 points in a matter of around 45 minutes or thereabouts. Massive decline is what we're seeing. Nifty at a very crucial juncture. You don't want that 25,900 mark to break decisively. You have a reference point at the 20-day MA, but the options data suggests that that mark should not get broken. Otherwise, you could see a further slide out there. Moving to Hormuz, he's joining in to put our spotlight on all the top movers at this hour. Hormuz, take it away.
All right, time for choppy days, but trying to find out some movers that are bucking the trend. And one that is decisively doing so is Karnataka Bank. It's the third straight day of gains for the stock. Now, in this 3-day up move, the stock has surged 23%. And even in this volatility, the stock is up 8%, holding on to those gains. And the last 3 sessions, today's volumes are the lowest among this 3-day losing streak. But of course, it's still going towards the close of the trade. 31 lakh shares that have been traded today, 20-day average of around 8.5 lakh shares, and the turnover that the stock has seen in the last 3 days is 30% of its overall market cap. So well over 2,000 crores, the market cap of around 8,000 crores as well. So as a result of this 3-day move, the stock is also trading above all of its key moving averages and has nearly turned positive for 2025 as well. Now, Kiri Industries is another name in the small cap space that is bucking the trend today. 12% higher on the stock, snapped a 3-day losing streak today. It's the biggest single-day gain for the stock in over a year. And after almost around 1 o'clock, there was a very sharp spike in the volumes that were seen on Kiri Industries today. Volumes as of now are the highest in 2 months, with 12 lakh shares that have been traded, most of which have been traded in the last couple of hours. And the 20-day average here is just around about 2.5 lakh shares. And as a result of this move, the stock has now convincingly moved above its 200-day moving average of 581. But it's been an underperformer so far, and out of the last 5 years, 4 of them have seen the stock deliver negative returns. And last one on the list is HEG, and this too has snapped a 3-day losing streak in today's session on very strong volumes at 6% higher today. 57 lakh shares have been traded. The 20-day average is around about 25 lakh shares, so double of its 20-day average. The stock has now moved above its 100-day moving average of 517 and has extended its gains in the last few minutes and has moved above its 50 DMA as well, which is at around 524, and as a result of which the stock has turned positive on a year-to-date basis.
Thank you very much for that. Those were some of the buzzing stocks. Back to chatting with Amit on the show. Amit, Urban Company, any thoughts on that? It exploded on the day of its IPO. It's at 135 now. Issue price was 103. But I remember on day one itself, there was about a 60-65% pop. Then the stock continued to rally on, hit 200 rupees. And since then, there's been a bit of a downward slide. 135 now. At what point does Urban Company start looking attractive?
So my, biggest worry in this company is, though I like the digital companies, but it's sort of phygital because they are sending a lot of people actually for working into the customer's hand. My biggest worry is that some of these customers actually, they create their own customer base. So you are creating a platform and giving the opportunity for others, and others actually they are creating opportunities for themselves. So this is a worry that they have to sort out this particular thing actually in the company. And that is where actually we are not looking at this right now. There are better digital companies actually available in the market currently, which have seen correction also. And that is where I think we need to focus more.
Got that. Amit, we'll leave it there. Thank you very much for joining us. Good speaking with you, and thank you for joining us here this afternoon. 25,882 now is basically where we find ourselves at. I'm just looking, where is the 20-day for both the Nifty and the Nifty Bank as of yesterday's close. Let me just pull those levels up quickly. I think for the Nifty, okay, still opening up. 25,852 is the 20-day.
Yes.
About 30 points away as we speak. Yeah, 30 points away. And for the Nifty Bank, I don't think we are there yet.
No, it's
we're basically
500 points away.
Yeah, still some distance away for both. Actually, the Nifty is closer, the Nifty Bank lesser so. We'll take another quick commercial break here. We'll come back in just a bit from now. And Nimesh is going to join us with dealing room chatter, what he's picking up from the street. And of course, we'll have some technical trading ideas as well. Stay tuned.
Welcome back. Well, for the time being, the bulls have at least managed to defend the 20 DMA, moving closer to around the 25,900 odd mark, but the expiry-related factor is definitely at play. Good time to go to D Street Chatter. Nimesh joins us to tell us what is he picking up. Nimesh, take it away.
Hi, Nigel. As you rightly pointed out, a bit of expiry-related factor playing out in the last few minutes of trade. Otherwise, it's been a quiet trade, pretty much range-bound, not much in terms of action on the either side. Even from a flow perspective, today's flows will have a bit of an impact of the expiry as well. Outside that, I understand there is a small MOC buy basket at a leading Friday, so that's something to talk about. Clearly, from a sector point of view, financial stands out, and within that is the NBFCs which are outperforming, and that's backed by some bit of institutional bids as well. So that's one space, whether it's a private banks, NBFCs, in general, financials have done well today. This particular series stands out in terms of big underperformance in the broader market stocks, massive price corrections and price damages in many mid-cap and small-cap names. Again, with no sights of any potential US deal in the very near future, maybe that pressure will continue. Today, there are some signs of selective outperformance in broader markets, but need to see whether that momentum continues. But the big takeaway for this series was the massive underperformance of the broader market stocks, and looks like that's not ending so soon if there is no deal as far as the US deal is concerned.
Yeah. Now, the other complication is not complication, but there's a head of state visit, right?
Yeah.
Russian President Putin is here. I think is it next week or the week after?
Yeah.
And then there's Thanksgiving holiday in the US. So will Thursday Thanksgiving holiday?
Thursday is a holiday and Friday is half day.
Yeah,
Friday is
so
half day.
basically,
we are working full day both.
And then you got Mr. Putin here. So I don't know. We'll see.
Tough.
But Nimesh, in terms of individual stocks, what's on your list?
So the first on my list is ASK Auto. There was a large block, 4% equity got changed hands today. I understand the promoter entity was a seller in today's block, essentially to meet the minimum public float norm, and some domestic mutual funds were buyers. So disclosures, if there is any, would be interesting to track in ASK Auto. The second name is Tarsen Products. This is interesting. Big move in that stock. In the intraday, it's up 13-14%. There was a clean out trade, is what I understand. Block of almost 22-23 lakh shares, and after that, you've seen a big up move in that name. Essentially, I understand the biggest FII holder there was a seller in today's block, and there were multiple buyers. And this is the fund which I've been highlighting last week as well, that because there is a merger of this particular fund into another large fund, there is selling pressure in many mid-cap names, including today's case of Tarsen Products. But if you look at this chart of this particular stock, zero domestic holding in the last 3 years has been a massive underperformer. The stock has fallen from all the way 800 to now $200. So a bit of recovery after the clean out trade today. So that's the second name. The third name is IFL Finance. A big move in that stock as well, backed by FI buying. I understand the delivery volumes will be quite high, and the city is anticipating some corporate development as well. Potentially could be some fundraising around the corner in IFL Finance. And the last is CG Power. Under pressure today, there is selling flow, and also the fact that they've lost one of the big contracts, that's added to the pressure as well. So while the stock might have recovered briefly, but there is selling for sure in CG Power today.
Tarsen's, the high was actually 915.
950,
wow.
Yeah.
Nimesh, that fund rebalance, is that over or is that ongoing? Still happening?
It is still happening, Prashant. So my sense is they've done, so the list what I had was nearly 38 odd stocks across mid-caps. So it's mid-caps, largest mid-caps, some FNO names as well. They have been selling out or looking for blocks. So today, Tarsen was a clear example. They sold in a block and then you've seen a big reaction. But my sense is it's not completely done with all those 38, 40 stocks which they want to exit because of the merger with a larger firm.
Okay, all right, Nimesh, thanks very much for that. Those are individual names to be kept on the list. And of course, a bit about the market, what's happening in the Intel there. 70 points lower, 25,890 on the Nifty. Just short-term trading ideas. Mitesh is with us, back with us. Mitesh, anything you'd recommend?
Yeah. ITC is something, which is slightly on the negative side. So STBT here, keep a stop at about 402 half. Look for 396, 395 kind of target. And IDFC First Bank is on the positive side. It's given a good correction in the last few days, now bouncing back from support levels. So keep a stop at 78.20 for target around 81, 81 half.
Okay. Okay. All right. Well, keep an eye out on the bottom of your screen. There seems to be another large trade that's in the offing, and I think it's on Vishal Mega Mart. The promoter entity, Kedara Capital, is looking to sell stake in Vishal Megamart, and I think it's mentioned that it could be happening at a bit of a discount. Yash joins us to fill us in with more details on all of this. Yash?
Well, Nigel, that's exactly what we are picking up from our sources. It's a large block deal which is expected to happen from the promoter entity Kedara Capital in Vishal Megamart. The size of this block deal could be as big as about 13% stake being sold by the promoter entity Kedara Capital. The initial indication that we're picking up from the bankers is that the demand is not very readily available and there could be a higher discount when it comes to sale of this 13% coming in from Kedara Capital. Kedara Capital, through its SPV, which is Samayat Services, owns about 54% stake when it comes to Vishal Megamart, and post this particular block deal, they'll be left with about 41% stake is what we've been given to understand. In June 2025 as well, Kedara Capital had sold about 20% of its holding in Vishal Megamart. That was again through a block deal, and that happened at a price of about 115 rupees a share. The stock has gained about 16% from that point. So, of course, a large block deal in the offing from the promoter Kedara Capital in Vishal Megamart. We've written to all parties involved in this transaction, that is Vishal Megamart as well as Kedara Capital. A response from both is still awaited.
Okay, all right. Yash, thanks very much for that. You know, for Kedara, which is basically the promoter of Vishal Megamart, the IPO of Vishal Megamart was one of the largest, sort of in a way, cash-out events for Kedara. I think there's one more private equity player in Vishal Megamart. So actually for both, it was a $1 billion plus each kind of cash-out event for both of them. But they still have 54 and there is still supply which has come to the market. So 135 or so on the stock.
It's a 62,000 crore market cap company. It's,
yeah,
you know, for again a value retailer, but pretty large.
Yeah.
All right, let's also get in Anand Tandon on the show now. Anand, Vishal Megamart, the stock is down well despite the supply overhang, I mean, compared to the issue price. Do you have any thoughts?
Not something that I covered.
Okay. Can you tell us something, you know, that's caught your attention over the last couple of weeks, some stock that you like, a theme that's emerged interesting?
Well, the only themes are the ones that are the continuing themes, except for the fact that, you know, Indian IT, which was actually a counterplay against AI, has suddenly picked up some steam, largely, I would imagine, not because of anything that they have done, but because, as I said, it's a counterplay against AI. So if AI goes down, Indian IT goes up. But that's a very short-term way of looking at it. I think broadly the challenge with the companies remain. And the other interesting area is the power situation, because if you look at what's happening globally, you know, China has added more renewable capacity for power than perhaps India and US combined till date in the last 9 months. And China in the last 9 months has added as much as India, twice India and perhaps 1.5 times US has done so far. And that means that the AI costs keep coming down for the Chinese companies. So therefore the challenge remains, you know, where are we headed as far as the IT companies are concerned? If you have looked at, for example, the latest release from Google on anti-gravity, that to my mind will flush out a lot of relatively junior programmers from the Indian ecosystem. So there are lots of interesting things, not necessarily positive for the Indian market.
You know, there was a contra note which Ambit came out on technology where they're saying the competitive landscape for Indian IT is changing, it's shifting. So earlier, you know, whenever there was a tech transition, you know, maybe the powers shuffled at least amongst the IT companies. But now you've got more companies competing for the same pie. So GCCs is one, and that's been mushrooming and growing, exploding, in fact, for the last couple of years in India. But the other one is generative AI native startups. And Ambit says they're scaling at an unprecedented speed. Cursor, for instance, has achieved 1 billion ARR in less than 2 years. Lovable is another one, 100 million ARR in 8 months. Claude Code, 400 million plus ARR in 5 months. And there are domain-specific, you know, startups as well, like Symphony AI for BFSI, Path AI for healthcare specific. So according to Ambit, that these generative AI startups are also now competing for the same work. And the kind of scale and speed at which they've scaled up, it's something, you know, we've never seen before.
You've given me the perfect segue, okay. Because I spoke with the founder of, co-founder of Cursor.
Oh.
Yeah, Aman Sanger is one of the co-founders of Sanger. Imagine this, 3-year-old company, last round values the company at $29 billion US. 4 founders, 25 years old, right? I can't repeat that enough. So we'll play out the full interview later today evening at 5:30 p.m. But just want to tease this out. And we'll play out 2 specific bits. One, of course, is I asked Aman what is the advice for IT services companies, Indian IT services companies. And second, what is the advice for founders who are looking to build in software using AI? Let's take a listen.
It's hard to predict exactly how things will evolve. I think these IT services companies will need to figure out how to, like there's 2 paths one could take when you introduce AI and AI coding. One is the path of these people are more productive, so let's get the same amount done with fewer people. And the other path is these people are more productive. Now we can tackle a lot more than we could before. And the former is a means of cost savings, right? So you can increase your margins as a company. The latter is a way of increasing revenue. And I do think that companies should focus on the latter. They should focus on finding ways to get more revenue, do more than they could before. You will see companies that focus on the other part, and you will see, bad things happen there. But I think the companies that will succeed will focus on growing revenue, and then not just keeping the same number of software engineers, but actually expanding that. One thing that we learned pretty early on and had to actually unlearn was a lot of the traditional startup playbooks didn't quite make sense. And so there's this, the way that people like to build startups in a lot of the 2010s was following this lean startup methodology of like really searching for a difficult problem, a burning problem that a lot of customers faced, and then trying to find a solution for that. I think we've started to see a lot of saturation there where if you're just trying to find this kind of net new hard problem, it's just hard to do because there's so many companies, so many people working on startups. It's way more popular now. And the thing that worked for us wasn't like trying to find a really hard problem and then build a solution for that. It was actually kind of working backwards from AI is going to be this transformative technology for coding. How can we make ourselves much more productive? It's almost like a solution in search of a problem. And you kind of see that same thing playing out with some of the most successful companies for the last 5 to 10 years. If you look at OpenAI or Anthropic, right? It's focusing on the technology first. And I'm not saying you should focus on the technology first. What I'm saying is sometimes it doesn't make sense to listen to kind of the standard advice. And the only thing that matters when building a company is thinking from first principles about what actually makes sense to do.
Welcome back. Well, we're getting some bazooka moves in some of these names, particularly from the financial space. Shriram Finance is at, a fresh 52-week high. Karnataka Bank bursting away, now up close on 10%. So big move out there. IDFC First Bank as well is moving up. But for the Nifty, we're seeing their expiry-related factor that's playing out. Anand Tandon is still with us. Anand, one sector that's seeing a lot of interest is these banking and financial institutions. A lot of interest out there. Big deals taking place, whether it was with regard to Samman, you had Federal Bank, RBL Bank, and there could be a couple of them in the offing as well, if what I've heard is correct. And I expect that to happen maybe in the next month or so, within the next 1 month. Your view on this financial theme and, anything you like, if you could name a couple of stocks?
Obviously, this is a sector which has been showing growth, will continue to show growth for the foreseeable future. More importantly, if you expect to see liquidity remain benign and perhaps a further interest cut, even sectors which were not doing so well will actually start doing well. Obviously, in a high liquidity situation, it is the smaller companies which begin to do well, which are otherwise constrained in a tight liquidity condition. So you should be looking at NBFCs like you mentioned, and some of the smaller banks perhaps outperforming in terms of the near term. That said, it is not as if risks are not there, and therefore, it would be wise to take a prudent mix of large and mid-cap. Among the NBFCs, clearly the ones which are looking at sectors like auto, etc., will do better because that's the place where the expectation of sustained demand is coming through on the back of GST cuts, where clearly they have been the biggest driver for local growth. But beyond that, I would still say that a wise mix of large and mid-cap is what you're looking for. It's obviously difficult to gain which particular bank or NBFC is going to go and do a deal unless you have some privileged information, which I don't. Therefore, I can't name any particular company. Companies like Karnataka Bank, despite the kind of movement they have made, are still trading at below book value. And of course, that is somewhat justified because of the low ROE, but with the management indicating better performance ahead, perhaps people could be playing on that as well.
Anand, very quickly, have you participated in any of the recent IPOs? There was PhysicsWallah, Grow, Pine Labs, Lenskart, so many of them. And if you haven't, but account of various reasons, are there any companies that you have kept on your watch list? For instance, maybe you like the story of Lenskart, but you're just waiting for a better entry point.
Well, first of all, as a rule, I don't buy IPOs, largely because I find that the behavior of companies change when they go public, and then you have to watch them for a year before you get in. More importantly, they're also always priced to perfection and then some. So you might want to look at performance over a period of time. But there is a difference between having companies like Lenskart, etc., which are consumer oriented and are trading at fantastic valuations, versus companies like Pine Lab and so on, which are a little more infrastructure oriented and therefore have a more sustained earnings path ahead. I'm not commenting on the valuation of any of them, but I would prefer that you look at companies where there is a greater pathway to growth and not just on the basis of narratives.
Yeah, point taken, we'll pay attention to some of that. By the way, there's a listing tomorrow, which is Excelsoft, which is going to be listing tomorrow, that is Wednesday. Markets, by the way, will end about 80-90 points lower. And IT a bit under pressure, but of course, basically giving back some of the gains from yesterday. Real estate did well. If you look at the Nifty real estate index, the Nifty PSU bank index did well. So those are pockets of green in that sense. Adani Enterprises, Trent, Tata Motors passenger vehicle, the top three movers to the downside on the Nifty. Hindalco, Bharat Electronics and State Bank of India, the three top gainers on the index, Hindalco, SBI and BEL. Lots of movers as far as the broader markets are concerned. And by the way, the market breadth flipped, right? 1600 up, about 1500 lower. So more up than down. But even without it, volumes are basically on stocks which were higher. Capillary, the recent listing, big gains. Grow ended strongly. Karnataka Bank, 25% in 3 days, including today's move. Orient Electric, HEG, Tarson's, Nimesh pointed that out in D Street Chatter, Craftsman Auto, big move, Kiri, Pine Labs, and so on and so forth. So enough and more movers. And as I said, on the downside, you'll struggle to find volumes, maybe 2 or 3 names down 3-4%, which had some volume on it. Otherwise, not very much to say about a session like today. More holding pattern and a bit of a break coming right at the end. That's the trading session today. It's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thanks very much for staying with us. Markets forward will pick up on all the action. Anand Tandon still with us. We'll get you a technical view as well. Stay tuned.
A last hour fall sees the Lal Street end flat on monthly expiry. Nifty and Sensex end 0.25% lower. Nifty fails to hold 26,000 and Midcaps outperform the blue chips.
Yatra Online skids 6% after CEO Dhruv Shringi resigns due to personal reason. In a conversation with CNBC TV18, Shringi says that the CEO change was planned and that would unlock new growth opportunities. The stock recovers.
Short in the arm for Dr. Reddy's after the EU drug regulator gives its approval to market its drug denosumab. The stock is up over 1% and also the top Nifty gainer today.
The stock of restaurant brands Asia, the owner of Burger King franchise in India and Indonesia, jumps after CNBC TV18 reports that the promoter Everstone Capital may sell its 11.3% stake and exit the QSR player.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to get up for the next trading day. I'm Sonal Bhutra and with me today is my colleague Vivek Iyer. And Vivek, it was expected to be a volatile day. That is something that happened, especially during the last hour of trade. We did see that fall from the highs of the day as well. So Nifty ended with a cut of 70 points. We did have Bank Nifty, which was absolutely flat with some negative bias, but it was the mid-cap side of things that looked really good. In fact, the advanced decline ratio was in favor of declines by a small margin, and this has been a problem point for the market, right? The market breadth, but that today supported the mid-cap moves. PSU banking index did really well, 1.4% higher there. We did have the pharma index also higher in trade today, but the Nifty realty index, that was the top gainer with gains of around 1.6%. But yes, some profit booking in IT and also FMCG, which did not support the market.
That's right. Good afternoon, Sonal. Like you mentioned, expected to be a volatile trading session, especially in the last half hour of the session, where I saw high rollover activity is when you did see the Nifty take a significant tumble. What also underperformed today was the entire PSU pack. So all of the PSU stocks today, especially the OMCs, were something that did see selling pressure throughout the day. Names like HPCL, BPCL, all of them did end the day with significant cuts up. But moving on, here's the lineup of what we have in store for you today. We start with the top movers and shakers of the day with Hormaz Fatakia. The top stocks that were in focus today are Yatra, after the CEO resignation, and talks about Everstone exiting restaurants brand Asia. And also in focus, major oil marketing companies. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. Well, now on to our first segment of the day. Hormaz joins in from the big wall with the top movers and shakers of the day. Hormaz, over to you.
Third straight day. The last hour jinx refuses to leave the bulls, and that was the story of today's session as well. But one pocket that bucked the trend, as you all mentioned, was the PSU banking space. All the constituents of the index ended with gains in today's session, led by Indian Bank, led by Bank of Maharashtra, and the smaller names as well, with Canara Bank, Bank of Baroda, even SBI ending the day with gains in today's session. Some of the digital-oriented names didn't do so well in today's trade, be it Tata Com, be it Swiggy. Some recovery from the lows of the day, but still losses of anywhere between 1 to 3% in today's session. A segment that bucked the trend, and convincingly at that, were the new listings. And Grow, after some very choppy moves, was up 5.5% today. Capillary, a new listing as well, 15% higher on that stock. Pine Labs continues to move higher, and Physicswala too, seeing a bit of buying interest emerging from lower levels in today's session, gains of 5%. And lastly, stocks that ended at a 52-week high in today's session. Despite the volatility, Aditya Birla Capital was up 4.5%. AU Small Finance Bank did well, as did Federal Bank. So some of the smaller financial names contributing to the gains. Can't say the same for a lot of the larger ones.
Okay, some interesting names there. Thank you so much for joining us as always, Hormaz, and taking us through those stocks which were buzzing in trade. Let's take the discussion forward. I am now joined by Siddharth Rai Mangla, Senior Research Analyst at Stockbox Technology, and market expert Anand Tandon. Gentlemen, good afternoon. Thank you so much for joining in. Siddharth, let me start with you. Of course, volatility is expected on the last day of the monthly expiry. What are the charts suggesting now? Will we see an up move from these levels?
Hi, Sonal. Good afternoon, and thanks for having me, first of all. See, Sonal, after what we saw yesterday, there was a weakness in the second half yesterday. So it was very important for Nifty to go back above 26,000 in the first half itself today and spend some time in order to get back the momentum. But it did not happen, and the weakness started coming in from there itself. It just got accelerated because of the expiry effect, and as Nifty came around 25,950 and spent some time there, a lot of unwinding took place in those put options, put writing positions. So which is why we saw this accelerating below 25,900. I do think that now the doors have opened for further downside towards the next important levels, which we should be looking at are 25,750 and 25,700, and because those are the next important supports from here for Nifty. So a little more downside can be expected in Nifty. The index does not look very good, at least as long as we are below 25,950 on the index.
Well, thank you so much for that, Siddharth. Well, now moving on to a stock that recovered significantly, and that was the CNBC TV18 impact. Yatra Online, remember, started the day with a 6% fall after its CEO, Dhruv Singhi, resigned, citing personal reasons. However, the stock recovered by the end of the session on the back of the fact that the management joined us on the channel earlier and assuaged investor comments. Mangla Malu is here with all the details.
Well, Yatra was in focus today, opened lower as the management changes actually surprised the street on the negative side. The CEO, Dhruv Singhi, actually tendered his resignation for personal reasons with effect from November 24th, which is with immediate effect, and the company went ahead and announced the replacement as well. Siddharth Gupta has been appointed as CEO with effect from November 25th, which is today. Now, Dhruv Singhi has also been elevated and appointed as Chairman Board of Directors, but it was the suddenness of this which actually caused the street a lot of surprise, as a result of which the stock ended lower. We spoke to the management. They said that, this was a planned move, and going forward, the appointment of Siddharth actually allows the company to go ahead and expand their B2B vertical, whereas Dhruv himself will be looking at opportunities for the company's growth beyond the core areas, as well as look at some M&A along with international operations as well. There was a smidge of a recovery post the commentary coming in from the management, but thereafter, still, the stock ended largely lower.
Okay, all right. Big recovery from the lows for Yatra Online. Let's get an Anand Tandon on this conversation. Anand, do you like Yatra Online, or do you like the peer, something like an Ixigo, which has been getting some funds as well?
Well, I don't like to comment on individual stocks, but generally the travel space has been doing well. Ixigo, of course, has performed exceedingly well. The challenge in most of these kind of companies is to find margins which are sustainable. Don't forget, companies like Yatra are still struggling with single-digit EBITDA margins, and that is something, because of the kind of business you are in, that will continue with the competition coming through. The question would be, where are you going to protect those margins from? That said, this is probably an area which is perhaps a little less expensive than many of the other online plays that we see in the market. So from that point of view, given the fact that the growth trajectory is fairly good, you might want to be somewhat exposed to this area.
Take your point completely there, Anand. The other stock in focus today was Restaurants Brands Asia, the owner of the Burger King franchise in India as well as Indonesia. Remember, yesterday, just prior to market close, we had reported that the promoter Everstone Capital was looking to sell its complete 11.3% stake and exit this particular QSR player. In fact, what we understand from our sources is that number one, Everstone Capital reinitiated the process to completely exit the stake. This was after they had put the plans to go ahead and do a divestment at the end of last year. Now, this was on the back of the fact that there was soft interest that Everstone received from a large family office of a listed company in India, as well as a few private equity players. We understand that bids have come in at a premium to the current prevailing market price, and we also understand that when you're talking about this particular deal, in case it fructifies, it's important to remember that it would trigger the open offer as far as the stock of RBA is concerned, given the fact that this would be a management change. We reached out to both Everstone. They refused to comment, as well as Restaurants Brand Asia, who are yet to respond to our queries. But Siddharth, if I could bring you in, if you've looked at the charts of Restaurants Brand, it has been a significant underperformer, as well as its peer, Jubilant Food. Any preference in that particular space?
Yeah, sure, Vivek. See, if we talk about restaurant brands, it's consistently, as you said, it has been consistently underperforming for the past 2 months. Right now, if we purely talk about the structure tells us that around the base of 60 rupees, it has a very strong support. So if anybody is looking to, take a position in this counter, we'll have to wait for a while. We have to wait and watch how these things turn out, these updates turn out, and if the stock manages to give us a substantial turnaround from the these levels and probably go back above the 67, 68 mark, then definitely we can start seeing a turnaround in these counters. But for now, it's a complete avoid.
Okay, complete avoid. That's on Restaurant Brands Asia. Anand, anything from the QSR space, and what's your take on the sector overall?
Well, obviously, the sector has had somewhat muted gains in terms of recent performance. You know, the year-on-year kind of same-store sale growth that we were witnessing, at least some of the companies, has seemingly tapered off. So the question really is, when will that return and what can cause the trigger? It is not immediately obvious, but most analysts, if you look at what they are looking at from the management's perspective, seem to indicate that the second half, you might find that some of the companies will be reporting slightly better growth. And from that perspective, this is a sector which could be a little interesting, more importantly, because if there is pressure in terms of earnings, in terms of consumption demand locally, this could be a little less affected because we are looking at the lower end of the demand curve, not really the premium end. Overall, it is still winding through the various, the overly ambitious valuations that it was working through. Perhaps it may take a little more time to walk through, but this is a space which still, I think, has a reasonably long road ahead.
Okay, all right. That's the take on QSR coming in from Anand. But the other sector which was on our radar is oil marketing companies. There was a downgrade that came from Investec. The brokerage has turned bearish on OMCs. All the three stocks have been downgraded to a sell. And the target price have come in at 330 for BPCL, HPCL at 425 and IOC at 145. They now prefer Reliance Industries to play the upcycle that we're seeing in the refining segment, and that's why they prefer Reliance over these oil marketing companies. We did see oil marketing companies see a surge because of higher refining margins in the last 3 months. These stocks were up around 20 to 25%. This is because Singapore GRMs, they have more than doubled in the last few weeks to $13 per barrel. However, Investec says this is only a part of the upcycle that we are talking about. While yes, diesel cracks are higher, this is something which is impacting diesel marketing margins as well. They were last week at levels of 4 rupees per litre, but because of the surge that we've seen in diesel cracks, there is an impact on marketing margins which have now turned negative. So despite crude being soft, the inability to move prices so much has led to negative marketing margins for all these oil marketing companies. And if diesel cracks remain elevated for these companies going forward as well, this is something which could pose material earnings risk, and that is something that Investec is worried about and bearish on the stocks as well. Anand, have you had a look at these names? What do you think of the oil marketing space and generally oil PSUs?
I don't understand the analysis. If you are looking at the retail price not changing and the fuel price falling, it doesn't matter how you break up between marketing and refining margins. The profitability of these companies don't change because finally it depends on what's the price at which you're buying crude and what the price you're retailing at. And I don't see the retail prices having fallen anywhere substantially. That said, obviously there will be ups and downs, but broadly, if you are looking at a situation where crude falls, a pure refinery will benefit better. And Reliance besides has multiple triggers. So to that extent, I would argue that buying Reliance is a good option, but not necessarily because of its OMC business, but also because of its retail and other businesses which are likely to be spun off and therefore can create value.
Okay, Siddharth, when you're talking about the charts, Reliance actually has outperformed the Nifty as far as the YTD performance is concerned. Do you see further strength for it from here on? And what about the OMCs? Do you feel that today's fall has probably started a downtrend or it could recover?
Yeah, sure, Vivek. See, definitely the other OMCs like BPCL and HPCL, they definitely look weak for now because there's been a sharp fall for the past 5-6 sessions consistently. And even now the next important supports are straight away at like more 3 or 5% more downside from here is particularly possible in the next 3-4 sessions. So OMCs are a complete avoid for now. Reliance is an except. Reliance definitely looks a buy because 1500 has acted as a very important support. And in fact, even in the last couple of weeks, the supports have shifted higher for this counter. I do think that this will be one heavyweight which will be taking the whole index on its shoulders. So Reliance is clearly looking a buy right now. The other OMCs, BPCL, HPCL, they are a clear avoid.
Okay. Anything else from the PSU all space, Siddharth, which looks interesting, maybe on the downside or the upside?
Yeah, definitely. Sonal, I do think that the PSU banking space is very attractive right now, and this is going to be one place which will be carrying the banking, index as well upwards in the future. SBI is very attractive, and I do think we'll be seeing the levels of 1,000 in the upcoming days in this counter. So SBI can be bought right now, even in the spot. The spot is trading around 930, 984, 983. Ish, we can buy it here. The stop loss will be at 970, and as I said, the targets will be above 1,000. The first target being 1,020, the second target being 1,040.
Okay, Anand, I want your view on this particular space as well, especially when you're looking at PSU banks. Do you think a large PSU like SBI can continue to outperform, which had a very good H1 FY26? Can H2 also be equally good?
I don't see why not. I mean, it is after all the granddaddy in the industry, and if the growth happens, then they are one of the few companies which have the ability to lend industrially. Most of the other banks in India either don't lend if they are private sector to industries, or if they are public sector, don't have the balance sheet to be able to lend to large projects. So assuming that you have a company like SBI, the size of the balance sheet will enable it to look at lending to very big projects without facing any constraints. That said, we are not looking at very strong credit growth so far. I mean, it has improved a little bit, but it still remains somewhat timid. If the credit growth were to go up, a company like SBI would be very well positioned.
Okay, all right, Anand and Siddharth, thank you so much for joining us today with your take from the fundamental side as well as technical levels on the Nifty and individual stocks as well. With that, it's time for a short break. When we come back, we'll get to the top corporate voices along with the key market events to watch out for on the other side of this very short break.
Welcome back to Markets Forward. Well, it's now time to take stock of all of the big corporate voices of the day. In a CNBC TV18 exclusive, Steel Secretary Sandeep Pandrik has said that the government's decision to safeguard duty will be expected soon. Speaking to CNBC TV18, Pandrik said that the domestic consumption growth has dropped to 9% this year. However, he expects demand to rise between 8 to 10% going forward.
Up next, Vijay Nirani, Managing Director at TrueAlt Bioenergy, says the company is in advanced discussions with Sumitomo for a partnership on a sustainable aviation fuel plant. He says the project will be funded through a mix of equity and debt, with TrueAlt targeting a 50 to 51% stake in the joint venture. The company also plans to set up a plant with 10 crore litre annual capacity for sustainable aviation fuel, which could add over 2,000 crore rupees in revenues. He adds that while all units are now operational, the firm may not deliver 50 to 55% growth this year due to shutdowns.
Embassy Development says that it expects steady growth going forward. With the new labour laws coming into effect, MD Aditya Virwani told CNBC TV18 that the impact on labour costs would be in the low to mid-single digits, adding that the company has enough margin cushion to absorb it. On growth, he says 2 projects have already been approved by RERA in Q3. He also noted that the balance sheet remains strong, supported by the 1,300 crore rupees loan raised from Kotak in Q2.
And before we wrap, we bring you some key market events to watch out for. Gaurav is standing by with the key events to focus for tomorrow's trading session. Gaurav.
Well, yes, From the global market, if you look at the US market, we have got a few key data points which will be released tomorrow. First is the GDP data, then we have got initial jobless claims data, crude oil inventory is also something that we will be watching out for, and core PCE price index, that is also something that we will be watching out for. Apart from that, US bank regulator is going to finalize the relaxed leverage requirement for the banks, so that is also something that will keep the market on leash. Other than that, from the Indian market, watch out for HCC, IFL Finance and JNK Bank. All of these will have board meeting tomorrow where they will consider fundraising. Other than that, let's also watch out for Infosys, because tomorrow is the last day of 18,000 crores of share buyback that they had declared earlier. From the IPO market, now Excelsoft will get listed on the in the market. Remember, the IPO size was worth 500 crores and the issue price was at around 120 per share, and the issue was subscribed almost more than 45 times. Lastly, NTPC Green. Now, this one company will be in focus, and the reason being that tomorrow is the day when 1 month lock-in period will end and around 69% of the equity will be floated. And lastly, let's also watch out for HDFC AMC, because company will be traded as X date of their bonus in the ratio of 1:1, and PFC tomorrow is the last day where they will where the company will have X date before their dividend. Remember, the dividend is 3.65 rupees per share. So let's watch out for all these companies in a trade tomorrow.
Well, thank you so much, Gaurav, for joining us and highlighting all the key events to watch out for in tomorrow's trading session. Well, with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Arundhati Ramanan and these are the headlines that we're tracking for you this evening. Sensex closes over 300 points and Nifty drops below 25,900 as market fails to hold any recovery on monthly F&O expiry. Midcaps managed to buck the trend. US President Trump will visit Beijing next April after a phone conversation with Chinese President Xi Jinping. Cites his relationship with China as extremely strong. Beijing says that Xi told President Trump that Taiwan's return to China was an integral part of the post-war international order. Ash from Ethiopia's volcanic eruption enters Indian airspace. Arrival and departure of few international flights at Delhi and Mumbai airports cancelled. DGCA issues an advisory, asks airlines to avoid affected region. Steel Secretary Sandeep Poundrik says a decision on safeguard duty is expected soon. Expects supply to outstrip demand over the next 3 to 4 years. That's an exclusive. Union Labour Secretary says a committee will be formed to fix the floor wage based on which states will decide the minimum wage for employees under the new labour law regime. Expects the increase in threshold for layoffs to encourage workforce formalization. Government considering multiple options to keep compensation cess on tobacco products alive in the post-cess regime. Sources say options include creation of a new cess or subsuming it under the existing mechanism. No final decision just yet. In a rare move, Apple cuts dozens of roles in its global sales division, says they want to eliminate overlapping roles. Apple has traditionally avoided large-scale workforce reductions. US President Trump signs an executive order to launch the Genesis mission, aiming to supercharge AI innovation through partnerships with academia and tech companies. Compares the urgency and ambition of the mission to the Manhattan Project, which led to the development of nuclear weapons. Delhi's overall air quality improves but remains in the unhealthy category. All private and Delhi government offices ordered to ensure at least 50% of their staff work from home. 6 people killed in Ukraine's capital Kiev ahead of peace talks between US and Russian officials in Abu Dhabi. Ukraine's President Zelensky is also likely to meet US President Trump at the earliest to discuss the peace plan. India lodges a strong protest with China after a woman born in Arunachal Pradesh was detained at the Shanghai airport for over 18 hours. India has repeatedly rejected China's claims over Arunachal Pradesh, calling it an integral part of the country. Let's start with the day's market action. Dalal Street failed to hold on to any recovery on monthly F&O expiry. The last hour of trade dragged the Nifty below that 25,900 mark. Midcaps relatively outperformed the blue chips. Bank stocks witnessed a sharp fall ahead of the close. Prashant Nair joins us now to analyze the day's market action. Prashant?
Well, there was selling pressure which came towards the end of the day. For the most part, it was kind of a holding pattern session, with the market in a very, very tight range of about 20 to 50 points on the Nifty, that is. And then, of course, there was a bit of a flip and there was pressure on the downside. And the final closes up on your screen. The Nifty Bank, market breadth at no point looked like it's going to we're going to see very dramatic. It was always close, a little more to the downside than to the up. The mid and small cap indices up on your screen. Sectors which moved, real estate and PSU banks did better, relatively better, that is. And, of course, IT services saw some profit booking coming in. Now, I'll start with large caps, Nifty, right? Adani Enterprises, Trent, Tata Motors Passenger Vehicles were the 3 names on the Nifty which did lost the most. And the losers, Hindalco, BEL, State Bank of India were stocks which actually went the other way. Broader markets now, and a lot happened here. So Capillary, 3 days in the listed space, big gains today. It's done quite well actually from the listing price. Grow was up 6% and a lot of the move came in the last 60 minutes of trade. Karnataka Bank 25% in 3 days now. Orient Electronics, HEG, Tarsons, Craftsman Auto, Kiri Industries. There was something like a Pine Labs which did quite well. Tourism Finance Corporation was up about 7%. Stylum Industries, a transaction which is yet to happen. We've reported on here at CNBC TV18, went up about 6% as well. So that's the biggest volume-led part of the market, which did quite well. On the downside, you had a few names. Zota, which has done so well over the last few years, 4% cut coming through. VIP Industries was down about 4% or so. And Rustomjee was down about 4%. But volumes very thin, very, very thin on the stocks which were under pressure in the broader market. But listless, sideways, and a bit of a break in the last hour coming through today.
Right, Prashant. Many thanks for those details. From equities to the currency market, rupee weakened marginally after seeing modest gains in today's session. Negative cues from the domestic equity market and falling crude prices weighed down the currency. This as the Reserve Bank intervened after the rupee hit an all-time low of 89.49 last week. US President Donald Trump has said that he will visit Beijing next April after a phone conversation with Chinese President Xi Jinping. The US President said he has also invited the Chinese leader to the US later next year. The call comes after the two presidents agreed to a trade deal framework when they met in South Korea last month. In a social media post, President Trump said, and I quote, "There has been significant progress by both sides to keep our agreements current and accurate." According to the Chinese Foreign Ministry, President Xi told Trump that Taiwan's return to China was an integral part of the post-war international order. CNBC's Elaine sums up the phone call between the two leaders.
Beijing also said that Trump stressed that the U.S. understands that the Taiwan question is very important to China. And according to the Wall Street Journal, President Xi was the one who made the outreach for this call, citing people close to Beijing and calling it a rare diplomatic overture from China. And Beijing does view Taiwan as its own territory, while Taiwan's government rejects Beijing's sovereignty claims. And the U.S. has been governed by its approach to Taiwan, which is the one China policy. So Trump's readout on Truth Social, though, did not mention Taiwan, and this omission is telling as well. And they did both acknowledge talking about Ukraine, and Xi Jinping said he hoped, quote, various sides would narrow their differences and reach a fair and binding peace agreement. But again, both Taiwan and Ukraine being discussed here, both highly sensitive issues, does make this call unusual.
That's the latest on the call between Trump and Xi Jinping. Tech giant Apple has announced that it has cut dozens of roles in its global sales division. Affected employees have been given time till the 20th of January to apply for other roles within the company. The company has said that the move is a part of its streamlining strategy with an aim to eliminate overlapping roles. Rima Tendulkar joins us now with more of those details. Rima, take us through the company's plans.
So, Apple is not known for large-scale layoffs. So, this move is very rare for a company like Apple, which has tended to avoid major workforce reduction. They've seen it as a last resort. Last time when we had Apple laying off was in 2024, and that was also more of a strategic call. It was employees working on Apple call. So it was an alignment or realignment of underperforming sectors. So unlike what we've seen in big tech companies, especially from 2022 onwards, we haven't seen that in the case of Apple. So the question is, what triggered this round of layoffs? Now, Apple says to connect with even more customers, we are making some changes in our sales team that affect a small number of roles. We are continuing to hire, and those employees can apply for new roles. So Apple is confirming that, yes, they're letting go of people. But these layoffs appear to be positioned as efficiency measures rather than cost-cutting amid, economic pressures. Remember, Apple is actually expecting very strong revenue growth in the December quarter. So they have guided for about a 10 to 12% revenue growth in the current October to December quarter, which would imply the top line would be closer to $139 billion. So it could also be a bit of a strategic shift in the way Apple approaches its sales. So some analysts point out that maybe they're looking at greater reliance on third-party resellers for those segments rather than in-house direct sales. And plus, one of the affected sectors was government and education, the sales division at these two. They were anyway suffering due to prior constraints like the government shutdown, budget cutbacks, so even before the Apple's restructuring. But, the fact is that the recent layoffs have surprised because many of them were long-tenured employees, some with 20, 30 years at Apple, including, the key government sales team, which was working with U.S. agencies like the Defense Department.
So rare job cuts there at Apple. Thank you so much for those details, Rima. Now, US President Donald Trump has signed an executive order establishing the Genesis mission, a federal initiative to accelerate AI-driven research. Rachna Dhanrajani joins us now with the details. Rachna, tell us more about this project and why is it being compared to Project Manhattan?
Right, what the White House has launched with the Genesis mission is not a routine science program. This is Washington stating very clearly that the next major global race in technology, security and industry will run through artificial intelligence, and the United States wants to set the pace. The new executive order directs the Department of Energy to create a single national AI platform that can speed up scientific discovery across almost every strategic sector. The comparison to the Manhattan Project is intentional. Back then, the country pulled together scientists, labs, production sites, and classified research under one mission. That's exactly what Genesis is also attempting to do. Here's what Genesis involves. For the first time, America's most powerful supercomputers, secure cloud AI systems, robotic and automated labs, and decades of government scientific data will be connected through one unified platform. This platform is meant to do far more than just analyze information. It is meant to run experiments, test scientific ideas, simulate materials and energy systems, and design new technologies and automate entire research processes in areas like fusion, biotech, semiconductors, quantum science, and critical materials. In simple terms, the government is trying to build a national AI engine and plug the entire federal scientific ecosystem into it. Now, the timeline shows how urgent this effort is. The Energy Department has 60 days to identify at least 20 national challenges where AI could dramatically accelerate progress. It has 90 days to list every supercomputer, storage system, and high-speed network that can support this mission. And in 270 days, the Donald Trump administration wants to see a real demo of this platform that it can produce results that traditional research cannot do. This comes at a time when global competitors, including China, are investing heavily in AI-driven science. So for USA, it is not a minor policy shift. It seems like a major reorganization of the country's research engine around artificial intelligence and a clear sign of how seriously the United States is taking the global technology race.
Right, Rachna, many thanks for those details. And speaking of AI, Anthropic has unveiled its new AI model called Cloud Opus 4.5. The company has said that this model will excel at coding and assisting users with complex tasks. This marks Anthropic's third major model launch in the last 2 months. The company has said that users who will benefit from this model include professional software developers, financial analysts, consultants, and accountants. Ash clouds from the eruption of a volcano in Ethiopia has disrupted international flights to and from various parts of India. The plumes of ash swept across the Red Sea to reach Delhi, Gujarat, Rajasthan, Maharashtra, Punjab and Haryana. India's aviation regulator has asked airlines to strictly avoid affected areas. Several flights bound for West Asia have been cancelled or delayed. Madhya Mujawar is here with the details on the suspended flights. Madhya?
Well, a volcanic eruption in Ethiopia has sent a massive ash cloud, like you were saying, into the upper atmosphere. So strong winds in the region are pushing this ash eastward into air routes that connect India with the Middle East and European countries. So the ash clouds that originated in Ethiopia started flowing towards Yemen, Oman, Arabian Sea, Western India, and then climbed towards northern India. And as per ATC sources and as per advisories issued globally, they are now flowing towards the Himalayas and China. The height at which these ash clouds are is between 25,000 to 40,000 feet, and flights generally fly at 35,000 feet. So the DGCA also issued an advisory last night for pilots, flight dispatchers and air traffic controllers to guide the pilots so that they avoid these clouds to stay away from any turbulence. It has had some impacts on flights, not a major, but few international flights have been cancelled. So at Mumbai airport, since midnight, 6 international arriving flights and 5 international departing flights have been cancelled, and in Delhi 7 international flights including arrivals and departures have been cancelled for the day so far, and some flights have also been delayed. Now the clouds might even evaporate and disappear and move away from the Indian airspace towards the eastern airspace, but as of now this is the update that we have from our sources.
All right, Madhya, many thanks for taking us through all of those details. Now, Tata Motors has relaunched its iconic Sierra in India with an introductory price of 11.49 lakh rupees. The launch featured the ICE-powered variants. However, an all-electric version will be launched later. India and the European Union are set to finalize a free trade agreement during their annual summit on the 27th of January. According to PTI, the trade pact is set to be a living document which can be reopened even after it has been signed. Commerce Minister Piyush Goyal addressed the Confederation of All India Traders and urged them to organize a Swadeshi Mela to showcase indigenous trade and innovation. Minister Goyal also said the world is eager to engage in trade pacts with India and provided an update on the progress in negotiations with various countries, including the United States.
आज के दिन अगर मैं गिनाऊं, US, EU, ओमान, न्यूजीलैंड, ऑस्ट्रेलिया का एक सेकंड फेज कर रहे हैं। कल ही मैं आया हूं इजराइल से, कल सुबह इजराइल का FTA के टर्म्स ऑफ रेफरेंस फाइनलाइज कर लिए, अब शुरू करेंगे बातचीत। चिली में बातचीत चल रही है, चिली, पेरू में बातचीत जारी है, जोरों से आगे बढ़ रही है। ब्राजील सहित जो मर्क्यूसर के सब देश हैं, 4 या 5 देश, उनके साथ अब जल्दी शुरू करेंगे FTA की बातचीत।
On that note, it is time for us to head into a short break. But coming up next, India lodges a strong protest with China after a woman born in Arunachal Pradesh was detained at the Shanghai airport for over 18 hours. More details on the other side. Stay tuned. Welcome back. You're still with us on Business 360. India has lodged a strong protest with Beijing after a woman born in Arunachal Pradesh was detained at the Shanghai airport by authorities who declared her Indian passport invalid. The woman alleged that the authorities detained her for 18 hours and called Arunachal Pradesh a Chinese territory. Beijing has often attempted to reinforce its claim over Arunachal Pradesh through diplomatic and administrative provocations. This includes China's long criticized practice of issuing stapled visas instead of stamped visas to residents of Arunachal Pradesh. Parikshit Luthra is here with all of those details. Parikshit, what are the authorities saying?
Well, the Indian government has issued a strong démarche and launched a strong protest with Beijing over this incident. They have said and communicated to Chinese officials that this Indian citizen from Arunachal Pradesh was detained on ludicrous grounds. Arunachal Pradesh is an indisputable part of Indian territory, and residents of Arunachal Pradesh hold an Indian passport. They cannot be detained in this manner, and this violates international conventions when it comes to civil aviation. What officials also pointed out that this could cause unnecessary obstruction to the process of normalizing relations that is on between India and China currently. Now, this has a very familiar playbook. For the past many years, China has always maintained that Arunachal Pradesh is South Tibet. It's a part of Chinese territory. They've said so in standard maps, named villages in Arunachal Pradesh as well, issued staple visas to people from Arunachal Pradesh, refused entry to athletes and people from Arunachal Pradesh into China. But this could be perhaps the first known case of an Indian national from Arunachal Pradesh being detained while transiting China. In this case, there was no visa issued by China. This was a case of transiting from China. For the moment, authorities are treating this as a one-off case. What we need to now see is that could we see more cases of people from Arunachal Pradesh being detained while transiting from China? That will be the key to see if there is any kind of escalation from the Chinese side. But for the moment, it is being treated as a one-off case. India would like to focus on the process of normalizing, stabilizing the economic ties, but also warning Beijing that if things like these will make us lose confidence in the normalization process.
I was traveling on my holiday from London Gatwick to Japan via a transit in Shanghai. And basically, I went past the e-gates, happily queuing up for the security gates to transfer onto my next flight onto Osaka in Japan. And one of the officials from the Chinese immigration came over and singled me out of the queue, basically said, look, India, took my name and something and took me out. In fact, when I tried to question them and ask them what was the issue, they said Arunachal is not part of India, very clearly. And they said, you should apply, and started mocking and laughing and saying things like, you should apply for Chinese passport. You're Chinese, you're not Indian.
Russia has launched its deadliest strike on Kiev, killing 6 people. This comes amidst reports that US officials are meeting Russian delegates in Abu Dhabi for peace talks. Ukraine's President Zelensky could also meet US President Trump in the coming days to discuss the peace plan. Onto a CNBC TV18 exclusive, the government is considering multiple options to keep compensation cess on tobacco products alive in the post-cess regime. Sources tell CNBC TV18 that the government's options include the creation of a new cess or subsume it under national calamity contingent duty. Timsy Jaipuria has more. Timsy, what options is the government considering?
Well, that's right. What we are told by sources is that the government is currently studying multiple options to replace the quantum of compensation cess levy on tobacco products. And the government is likely to announce this particular levy to replace compensation cess on tobacco products in the upcoming budget 2026. And just to give a background as to what is the thinking behind this and what is it in the mind of the government, well, sources shared that the government is in favor of shifting the tax on tobacco outside the GST regime and keeping the collections also outside of the divisible pool of revenues, which is shared amongst both centre and the states. So centre is very clear that the levy that will be introduced, the collections from that should be solely with the centre. And some of the options as to what could be this replacement on tobacco products after the repayment of the back-to-back loans is firstly to subsume it under NCCD, that is National Calamity Contingent Duty. Second option is to introduce a new cess, again, which will be outside the GST, and that will be with the centre. And thirdly is that to apply a new tax under a different nomenclature. And what sources say that this third proposal could be the most possible one, that there could be a new different name given. No cess, no NCCD, and there could be a third name given to it. However, currently, Finance Ministry and PMO are discussing these options. All these 3 options are on the drawing board as to what could be this replacement tax on tobacco products, and no final decision has been taken as yet.
All right, Timsy, many thanks for those details. Now, air quality in the National Capital Region has marginally improved, but continues to hover in the unhealthy category. All private and Delhi government offices have been ordered to ensure at least 50% of their staff work from home. As per reports, a high-level meeting chaired by the Principal Secretary to the Prime Minister directed all states in the NCR to accelerate the shift to EVs. The meeting also flagged that about 37% of vehicles in the NCR still belong to the outdated emission norms. It's not just Delhi that is going through an air pollution crisis. Though less severe than the capital, Mumbai too has been reporting poor AQI, posing health risks, especially for children, senior citizens and pregnant women. CNBC TV18's Santya Gora reports that the BMC has started taking dust control measures to improve the air quality.
Hazy, blurry and dense with smog. That's Mumbai's skyline. Since early November, the city's AQI has jumped sharply. Weak winds and rising construction activity are the primary reasons.
When winds remains either very light or they becomes easterly or southeasterly, so that time it happens, and this is the present case, yes.
Mazgaon, Devnar, Worli, Andheri Chakala and Malad are some of the worst affected areas. The BMC has enforced the Graded Response Action Plan, GRAP, in these areas, curbing construction, banning open fires and garbage burning and stepping up dust control measures. BMC says it is monitoring the situation at local level. If an area or ward will record very poor AQI for 3 consecutive days, BMC will implement GRAP and take similar steps in those areas as well. As every year, poor air quality is triggering health concerns.
A lovely day in end of November, but it's spoiled by the very poor air quality, and the visibility is pathetic. I mean, I don't even know, like it's like almost like a smog.
You know, this unrestricted construction, every third person is being allowed to demolish a building. So where are the regulations?
अभी 3-4 दिन से बहुत खराब लग रहा है. Pollution तो कभी ऐसा भी लगता है वॉकिंग करने के लिए आ रहे हैं वो ठीक है, लेकिन ये pollution जा रहा है तो थोड़ा ये हो रहा है.
Construction is another key factor responsible for poor air quality. Along with the misting and deep cleaning of roads, BMC has issued stop work notices to 59 construction sites. The Met Department says easterly winds are expected to remain weak for the next few days, meaning pollutants will not be dispersed quickly. However, Mumbai will see some relief once slightly stronger westerly winds appear. How long this relief will last, however, is up in the air. Pardon the pun. In Mumbai, with camera person Raju Kamble, this is Santya for CNBC TV18.
And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
Welcome to the Sanjeevni Newsline. For years, liver cancer was thought to be a disease of heavy drinkers. But doctors say that assumption is now outdated. A growing number of liver cancer cases are being diagnosed in people who hardly drink alcohol. Young professionals, even fitness enthusiasts. Experts say the real culprit today is metabolic dysfunction associated with steatotic liver disease, or MASLD, previously known as non-alcoholic fatty liver disease. According to studies, nearly 1 in 3 urban Indians already shows fatty changes in the liver. The cause? Modern lifestyles, high-calorie diets, long sitting hours, and low physical activity. Even mild fat deposits in the liver can silently progress to inflammation, scarring, and eventually cancer. Doctors warn that skipping alcohol doesn't mean your liver is safe. Early liver disease often has no clear symptoms, and signs like fatigue, stomach discomfort, weight loss, or jaundice typically appear only when the disease is advanced. The good news is liver cancer is preventable. Maintaining a healthy weight, exercising at least 150 minutes a week, managing diabetes, and cutting back on sugar and refined carbs can dramatically reduce risk. Vaccination against hepatitis B also plays a key role, say experts. Oncologists, in fact, point out that the liver has an incredible capacity to heal, but it takes awareness and consistency. The bottom line, liver cancer today isn't just about alcohol, it's about lifestyle. Awareness and early checks are the best protection, say doctors.
Hello and welcome to this very special interview that we have in store for you at CNBC TV18. Joining us is Mr. Sanjay Kaul. He's MD at Gift City. Mr. Kaul, hi. Thank you so much for joining in, taking time out for us. When we look at Gift City, I understand the initial period is a launch. It's a vision to begin with, and then it's a launch, and then there are some teething problems, and then you see it start taking shape. In 2025, at where we stand, where would you say, where does Gift City stand right now?
Let's think of it this way, Gift City was a vision of the Honorable Prime Minister when he was here as the Chief Minister, way back in late 2000, 2007-8. And someone had a vision that we could have something like a Dubai or a Singapore or a Hong Kong here. It took its roots at that point in time. That's how many years back? 18 years back, And it starts from there. The seed is sowed at that point in time. And today, I think you went around the city, you saw it?
I did.
Lots of buildings which are coming up, lots of buildings which have come up. It's a national project, a dream which India saw, the Honorable Prime Minister saw at that point in time, the gateway to the financial markets of the world. And that's where we are today in 2025.
The PM, since you mentioned that, also had a vision that this place would make us the price setters when it comes to various international financial instruments. Are we there yet?
We understand the Financial Services Center. We have a regulator. Regulations came in 2021. That's when the operations actually started, Across various sectors, we have the capital markets, we have the funds, we have ship leasing, aircraft leasing, banks. We have two exchanges. We have the Bullion exchange, the third exchange. Now, when you talk of price setting, we need to first understand that entities come in first, start their operations. Basically, transactions happen here. Now, if you say price setting, I wouldn't call it as price setting per se. It's operations happening out of here. And I would see it in this way, we need to be there where the operations happen, and that's what is happening. If you talk in terms of price setting, we have the Bullion exchange where we have precious metals, gold primarily at this point in time. In the future, other metals will also come in. The effort there is that we would ideally want to be the benchmark where the prices would be set. That's what we look at for the future.
The Bullion exchange, and I'm going to take a leaf out of what you said, clearly has done quite well. When I look at the numbers in the last couple of years have been immense. A huge jump is what we've seen. What is the vision with the Bullion exchange going forward? I do understand, and there have been conversations around this as well, that primarily all gold that comes into India at some point in time in future would come via IRBX.
Some point in time in the future, that is what the vision is. At this point in time, we have the SEPA gold which is coming in, the agreement which we have with the UAE. That's the gold that is coming in at this point in time in a consignment mode. That is how it is being done now. Any new regulation, any new operation which has not been done until now in the country, obviously need to start with baby steps. That is what we are doing now. As we go in the future, the idea is, of course, complete transactions happen through this exchange. That's when we have absolute transparency, number one. Number two, make sure that the gold coming in is ESG compliant, which is very important, which I don't think many countries do that. And of course, we send benchmarks for the price. And that's what is the larger vision. All the gold trading happens through the exchange is what we would ideally want to happen.
Mr. Kaul, it is said that Gift City, with the kind of vision that it came with, whether it has been about taxes, regulations, and more importantly, evolving regulatory framework is what perhaps makes it most important.
Yes, I would say that is one of the features which we are proud of, A regulator that is forward-looking. Normally, when you talk about regulation and being forward-looking or being friendly to your stakeholders, normally doesn't go hand in hand. And of course, a regulator cannot afford to be seen like that. But yes, our regulator, the regulators which we have here, is absolutely different. Very professional is the word I would use. The regulations come in. Initially, at times, you have the sandbox approach, where we try it out on a smaller scale. And the regulations come in. We see how it works in the real-time world. if required, based on stakeholders' inputs, the tweaking is done. That I think is one strength which we have, and I would say that is the strength. Regulations evolve. It's not that you make a regulation and just sit tightly. No, it's done. No. It evolves depending on what the stakeholders want and what other financial centers globally are offering. That's how we work here.
Mr. Kaul, the other thing that I'm assuming you will always be talked about is the competition or the on how the other international hubs perhaps seem to be doing, whether it's Hong Kong, Dubai and Singapore, with that kind of conversation always going in. And the point being that we have seen GIFT City actually climb ranks when you look at the index overall, but still a long way to go.
I see it slightly differently. Why do I need to compete with someone? I need to create my own space. Maybe 5 years down the line, I should be, when I say GIFT City, we should be in a position to say that if this business has to happen, we need to be in GIFT City. If you say that I need to be competing with Hong Kong, which is there since last n number of decades, it would not be quite correct. I need to create my own space, and that's where we are, and that business has to come in here. Say, for example, if we talk about aircraft leasing, at this point in time, it's done out of just 2 centers. Why can't it be that it should be done only from GIFT City? I would want to do something like that, or maybe global treasury operations. Why can't we do it? Why can't, when we say that if it has to be a global treasury operation, it should be GIFT? That is how I see it, because let's understand how are we placed geographically also. Middle East on one side, the Western world on one side, or the Eastern, Southeast Asia, where we have Hong Kong or Singapore, and we are bang in the middle. Why shouldn't we be leveraging on that advantage? Plus, of course, the geopolitical scenario at this point in time, we should be leveraging on it. And saying that, do I compete with the Hong Kong, compete with the Singapore? No, there's enough space for everyone. We need to create our own identity. We need to be, if it comes ease on doing business, I would say, I would ideally say that this is the place where you go. You can do it very easily. In terms of the quality of life, this would be a good place to be in. A holistic thing, That is what I would aspire for ideally.
Okay.
And of course, yes, if it's the Indian diaspora who's doing business, I'll say come and do it in GIFT City.
Okay.
Yeah, obviously, that's what I would aspire for.
We are also talking, while we are looking towards an ending of an year, let's take a step back and take a look at on how GIFT City has evolved over the years. If you can share some numbers with us, since you said 2020 and 21 is when we saw the regulatory framework come in, how have we seen GIFT City evolve since then to now? How would you say 2025 has been as a year for you?
Looking back, when I mentioned 2021 is when the regulations came in place. If we look at the numbers, it's in the first year approximately 100 odd registrations were there. That's the time when entities, people are just getting to know GIFT. Last 1 year, the traction has been very good, primarily because we have been out there telling people, educating people as to what has GIFT got to offer. One, second, also the regulations. People have to know about it, and that it's coming into the market. At this point in time, it's around 23,000, around 1,025 entities that are registered across various sectors like banks. There are 35 banks, of which about 18 are foreign banks. The combined asset holding size of all these banks is close to $101 billion US dollars. That's a good number, I would say. If you consider it's just, we are growing. It's not that these branches were there when in 21. They're just evolving, coming in. Last quarter, we had 105 registrations last quarter. So we are growing very well. Services like insurance, reinsurance, funds, we have matured enough. The regulations are really good. We can, when you say how do you compare to Dubai or Singapore, I would say we are at par, if not at par, better in certain sectors, which makes people come here. That's how we see it.
Oh, well, yes, there are various banks and funds and brokerages and even consulting companies which now have offices in GIFT City. How are you now envisioning 2026 going forward? I have seen a lot of infrastructure come across. I mean, that is one part of this. More in sense of financial numbers. higher trading numbers as well. Are you looking at growth, all of that continuing the way it has been in 25 to continue in 26?
Yes, the BFSI sector would grow as it is growing now at a much better rate.
Okay.
But our focus would be primarily, the GCCs, the Global Capability Centers, which we have not focused, we have not been focusing to that extent what we should have been doing, because the tier 1 cities are already chock-a-block with, everyone is or was going there. They are looking for tier 2 cities. Somehow they didn't understand that we are there, where they can open up a global capability center, and now they're all out in the market saying that we are also here. That's something which is in the forefront of, if you ask me, the next 1 year. Advantages are, one is if we see the cost efficiencies, we are about 15 to 20% lesser than other tier 2 cities.
Okay.
Quality of life is much better than the tier 1 cities. You have lots of pluses as compared to tier 1 cities. So we're going all out to bring in GCCs, and initial response has been very good. It all comes that had we known about this place before, earlier we would have come in. So people are coming in. People are showing real serious interest. That's what we'll be looking at next in the future.
Welcome back. You're with us at CNBC TV18, and we are in conversation with Mr. Sanjay Kaul. He's MD Gift City. Mr. Kaul, another thing really is about the specialized talent. What is your strategy when you're looking at attracting and retaining it?
Talent, again, I would see it in two components. One is what are the indicators? We have more than 1,000 entities which are already here, many more coming in. And these entities require specialized skill sets. They have people working there. It's not that they don't have people working there. So they are getting people from wherever.
Okay.
It can be locally or from people who are willing to relocate. That's very important. Now, let's talk about the local talent. Around Gift City. Now, Gift City is not in an island anywhere. It's between Ahmedabad and Gandhinagar. It's a continuum. We have institutes like the Indian Institute of Technology, the IIM, NID, NIFT, IIFT, just to name some of the ones which are famous. And others like the Gujarat University, which all are of a very good quality. Travel down, see the larger catchment area, you have Baroda, you have the MS University. You spread further, you have Rajasthan and Madhya Pradesh, Indore, where you have an IIM. You have in Rajasthan also have IIMs. So in the catchment area, we have sufficient number of students who are skilled. Within Gujarat, let's not go too far. Within Gujarat itself, we have about 4 lakh students who are enrolled in the Gujarat Technical University. These are technically qualified students. So the numbers are there.
I will move from talent to talk about companies now. And Gift City serves as a launch pad for Indian firms to go global in some sense, and then as a landing pad for the foreign companies to come in and explore India. How is Gift City doing that, and how are you looking at the growth within that space?
Now, it depends on which sector you're talking about. You have the banks which come in, you have the fund managers, you have the capital markets, insurance, reinsurance, all of them work differently. What is important is, in this whole ecosystem, how easily you can have the cross-border financial transaction. At the end of the day, it is, how smoothly, how seamlessly funds flow across boundaries. And the regulations of the regulator, the latest one, the global access thing which has come in, it's really very proactive. It's client friendly. It's also friendly to the people who are using it. So those kind of mechanisms, which gives you access to play in the global markets, to invest in the global markets seamlessly through broker dealers or subsidiaries of the exchanges which we have here. That's being done very seamlessly. It's matured quite a bit. It's going on well. I would say that is one thing which would draw in companies. At the end of the day, it is how smoothly can transfer your funds, or how smoothly funds can move around. And I think that's the most important thing that has come in.
Going forward, and maybe even before I go to that, I was going around Gift City, and yes, there's a lot of green space hub that you seem to be creating around this place. So whether it comes to sustainability, innovation, technology, ensuring enough green around the place, how is that being developed right now, and what really is the target onto that?
Sustainability.
Is that the core of Gift City, the way I've seen it?
I would start with the infrastructure that we have. We need to understand that you talk about carbon footprints, etc. From where do they come in from? It's the amount of energy that is used. Now here, I think you went around the city and we saw that we have centralized cooling systems. We have an automatic waste disposal system. We have centralized waste collection, waste disposal, and everything centralized through a single duct, which we call the utility tunnel. Now, all that contributes to the efficiency. Electricity, the operation costs are about around 20% less than what you would have outside this jurisdiction, where these kind of systems are not there. That's itself, I would say, sustainable. The construction that happened here, we are very stringent. All the buildings that come in have to have the LEED standards. We are very clear about that. So you walk into any building, it would any day be better than the kind of construction in terms of sustainability, much better than what you would see outside this place. Greenery, of course, there's a lot of greenery. If you see around, we are very conscious about that. We have green spaces which have been left behind, which have been earmarked. We have a central park which is about 30 acres, which is coming up very well. That's a huge, the lungs of the city. Yeah.
Mr. Kaul, as we move ahead into 2026, what is every person brings in their own vision and their own near-term priorities? What is Sanjay Kaul's priorities now going into 2026? What is he doing that ensures that while Gift City continues to be entrenched in India as it is, and then is global in benchmarking or in nature?
Next 1 year, like I mentioned, I would want to see more institutions coming in terms of the number of people working here. The larger the number of people come in here, our ecosystem grows. And people should understand that, at least if not others, at least the diaspora should understand that this is the place where we should be doing business for, instead of maybe offshore jurisdictions. And I would want them to be here in larger numbers. That is something which we'll be pursuing very aggressively in a very systematic way next year in 26. Of course, GCCs, as I mentioned. And ease of doing business, of course, we are proud of saying that doing business is very easy here, but even then, I would want, we are creating that single window clearance systems, not only for the regulatory aspect, but also connecting to the people, the entities who come in, the employees, to the social aspects of life also. You come to my center and then you have my back end connecting to you, where is the school for your kids, where is it a hospital, where small things which makes lives easier for them. So basically making it a convenient place to live in and work.
Okay.
That's very important. These are the 2-3 things which I would be pursuing very vigorously in the coming years.
It's usually said that numbers bring names and names bring numbers, so it's always a vicious cycle like that. You already do have some very, very big names. Is it the numbers that you're eyeing now?
Yes, of course, I would want numbers to come in here. Yes.
And what are the challenges that you see that you have on your table? These are the 3 things I need to work on first. What are those things?
Challenges are...
Gift City gives us huge opportunities, but there are some challenges, clearly.
The only challenge I see is that people out there don't really know what Gift City has to offer. There are some, misinformed notions that there's no talent available here. And when I'm talking about talent again, the attrition rate is lowest here. In the entities that work here, if we talk to any of them.
So would you say a first task cut out for you is to clear these perceptions?
Yes, and also about the social infrastructure that, it's the middle of nowhere, which I say, you are in Ahmedabad and Gandhinagar.
What about attracting global capital? How is work being done in that direction?
Like I mentioned again, global capital, the capital markets are, we already have the global access regulations which are there, that's maturing, that's quite mature enough. So once the pipeline, we have lots of entities who want to come in. So pipeline is, I wouldn't say chock-a-block, but then there's enough to fill in the pipeline. So it's just that we need to bring them in comfortably. So capital will come in.
How are you putting out 2026? And would you say the near-term and the longer-term vision seem to be converging right now? This is what you've spoken to us about. The next 1 year is what you're working on. There also is a target that by 2030, all that work that is being done around in Gift City perhaps would start nearing completion.
Yes, in terms of infrastructure, we are targeting about 62 million square feet is what is our project to the planned constructed area. At this point, it's around 20-odd million square feet for which the planning has been done and developers have started working on it. It's 5-odd million where it's already constructed and occupied. So ideally speaking, 2030 is when we have all these buildings. I wouldn't say complete 62 million, depending also on what kind of entities come in, but they're looking at something around a lakh of people working here by 2030. So that itself is an indicator that everything else will develop accordingly. Yep.
And you don't want it just to be a business hub, do you? I mean, I do hear that you do concerts here, and there's some fun stuff that keeps happening around in Gift City.
It's not about just offices,
All work and no play.
It's Gift Cities. You have residential properties. We have at this point in time about 1,100 flats which have been transacted upon. We have new apartments coming up, and these apartments are good. We have a club here. We have sports facilities which are going to come up, which will have a golf driving range, the pickleball, soccer field, the smaller one.
You go out and enjoy all those things?
I would be doing it, yeah. I enjoy sports, yes. We have an event arena where we would have concerts happening. That happens on a regular basis.
Final question then, Mr. Kaul. What are the couple of things that are absolutely on your priority that you would want to ensure that you fix it in 2026?
Social infrastructure.
Okay.
That's important because, like I mentioned before, people keep talking about it. That's something which you would be focusing on a lot. Bringing in business, like I said,
is there a target therein?
The BFSI is coming in. GCCs on the business side will be the GCCs which I'm going to be pushing very aggressively. We'll be traveling wherever we have to travel. We'll be doing that to bring in GCCs. We'd also be targeting the diaspora and telling them that you need to come and do business from here. That's also very important because see, at the end of the day, why should someone of Indian origin do business out of a financial center which is not in India, when you can do the same thing which is in Gift City, So I think these three are something which...
Are you putting a number to all of these things as well? Are there targets? Are there timelines for this?
See, putting numbers...
These are the kind of number of companies that I want. This is the number of business that I want.
No. I would see it at the end of the year in terms of the percentage, the growth rate. Yeah, I would not want to put a number to it. Number is a standalone. It doesn't reflect anything, It's a growth rate which I think would be more important.
And we will keep an eye on that. Mr. Cole, as always, thank you so much for joining and thank you for that conversation.
Thank you.
Thank you.
My
Appreciate
pleasure.
your time. Thank you.
Hello and welcome to News Center. The big story we are tracking: in an unprecedented move, the Supreme Court has ruled that criminal charges against the Sandesara brothers can be dropped if they pay the full and final 5,100 crore rupee settlement. This after Nitin and Chetan Sandesara's lawyers said this is about getting rid of all proceedings and not an admission of guilt. On several occasions in the past, the brothers have rejected these allegations. Meanwhile, they have paid 3,508 crore rupees so far and have been asked to pay the rest by the 17th of December. Let me break it down. The Sandesara brothers were accused of defaulting on bank loans worth 5,383 crore rupees. Their one-time settlement was originally set at around 6,761 crore rupees, but after negotiations, CBI agreed to settle at 5,100 crore rupees. Some fear this could set a precedent, letting big economic offenders away by just writing a check. Joining us now to take this forward is Vijay Agarwal, Supreme Court advocate. Mr. Agarwal and Advocate Aditya Pratap are also with us on the program. Vijay Agarwal, if I can come to you first, does this set the right precedent? Now, we're talking about a huge economic fraud. To let go of people in this manner, the government lawyer, by making this proposal in a sealed cover to court, saying that if 5,100 crores is deposited, then the case can be put to an end. Is this the right way forward? Because it's quite possible that other economic offenders, fugitives, may take the same recourse in future.
See, the judgment very clearly says in Roman 7, and it is para 12 of the judgment, that this judgment will not be used as a precedent. This is your first answer. That this judgment cannot be a precedent because it is specifically, emphatically stated by the Supreme Court that this judgment cannot be cited as a precedent. This is one. Two, if you ask me my personal view, I consider it a very, very welcome step. And it is not as if that it is being decided now. See, there are two kinds of offenses. One is an offense against the property. One is an offense against the body. Recall Union Carbide case. In 1989, 4 judges bench Supreme Court had said that the criminal proceeding will not continue. But then it was reviewed by the Supreme Court by 5 judges bench in 1991. And they said that Supreme Court under Article 142 has the power to quash, but they did not quash it in the facts of that case because there was the loss of life. But somehow I feel that when it is an economic fraud and the bank's money have been taken away, so the banks are running after. So if ultimately the person is settling, and this is the practice world over, in India also, they call it plea bargaining, but that is for the smaller offenses. So it should happen. And can I tell you, every day we see the compromise settlement happening, even in rape cases. Initially, the girlfriend comes and says, oh, my boyfriend is not marrying me. I want to lodge a rape case. The boyfriend goes to jail. And later on, the boyfriend marries, and then they run to the court that please quash the case.
Okay.
And you know,
let me just get in. Mr. Agarwal, I'm going to bring in the other panelist on our show, and I'm going to return to you. Aditya Pratap, does this make way for fugitives like Vijay Mallya, Nirav Modi, Mehul Choksi to take a similar plea in future?
See, first and foremost, to begin with, the Supreme Court has clearly held that this case will not serve a precedent. Now, in principle, I do not agree with the stand adopted by Mr. Agarwal and the reasoning given by him. However, when we take a larger view, Supreme Court is faced with the dilemma of recovering money out of the cold. We are dealing with a case of a fugitive economic offender who has literally fled India and gone to a place like Nigeria. So Supreme Court is also seeing it from the pace that we have to literally recover the money out of the cold. Now, if you look at the settlements which have happened in NCLT, look at the steep haircuts which banks have taken, 80%, 90%, almost the entire amount has vanished. So if the Supreme Court is of the opinion that the settlement amount offered is at least a decent consideration, something which is recoverable, then probably, in principle, I would agree with the wisdom of the Supreme Court, because if you look at the history of these, because see, this is a case of a willful default. The case of the Sandesara brothers is of people who have vanished with public depositors' money, and I say the accountability acts should not only be on the Sandesara brothers, but also on the officials of the public banks who allowed such loans to happen in the first place. Now, so what happens is, Supreme Court, because the Sandesara brothers apparently have filed a petition, and you know, like in law, because in law, whenever financial disputes happen, we lawyers do tend to take a slightly pragmatic stance, because lawyers as such are not recovery agents. Now, obviously, like ultimately the banks can invoke the recovery proceedings, but when you look at the other proceedings where 90% haircuts are taken, probably the Supreme Court is of the opinion that a certain fair amount, not fair, but at least a certain respectable amount can be recovered by way of this. Because remember, we are dealing with the case of an offender who has literally funneled the case into offshore jurisdictions, from where tracking and getting bank account holders' money back probably might involve exponential difficulties. And of course, so on these points, yeah, so which is why, even though probably I do agree that they need to be punished. In fact, not just them, I believe that the corrupt bank officials who facilitated such loans ought to be punished.
Aditya, just stay with us. My final question to Vijay Agarwal. Mr. Agarwal, what I'd like to understand from you, you've represented Nirav Modi, Mehul Choksi in the past. Even though the Supreme Court has said that this is not a precedent, but considering the government has made a plea and made a proposal in a sealed cover, would you somehow try and take the same recourse to end the criminal cases against them?
I don't think my clients whom you referred, my current clients or ex-clients whom you referred, after so many years of litigation, they are left with that kind of a money. And my colleague said that if the whole money is being recovered, it can be settled. So in a way, he is agreeing that if the whole money is getting recovered, it should be settled so that the banks ultimately get the public money. So what is the interest in just prosecuting them? And tell me in which cases? Now we are saying, though, the case is over. What has happened in Nirav Modi case? The case has not even started. What has happened in Mehul Choksi case? Case has not even started. What has happened in Vijay Mallya case? Case has not even started. So you want to keep the case hanging in your drawing room and you say that, okay, now we have a painting on the wall which is useless. So it will keep, it is in a photo frame. But ultimately nothing happens. So I said it is a welcome chat. If the banks are getting money, there I am agreeing that the bank should not be taking a haircut or a smaller haircut. So if the banks are getting their total money, public money is coming, you do not have the infrastructure and the courts enough to try a person. Trial takes ages. In a 2G trial took 7 years where I represented. A day-to-day trial, it took 7 years. So where is the trial? In Mumbai, trial doesn't even
Vijay
start.
Agarwal, Aditya Pratap, I've completely run out of time, but thank you very much for joining us on this program. But clearly, this will be a legal debate going forward. I'd like to shift focus to India's new labour law regime, which is now in place. 29 colonial-era laws have been repealed or rationalised into 4 new labour codes. The central government will be fixing what it calls a floor wage, taking into account minimum living standards across geographies. The states, however, will have the power to fix the minimum wage rate, which shall not be lesser than the floor wage fixed by the centre. India right now has only a benchmark when it comes to what we call the national wage rate with no legal binding. Santya Gora joins us now. Santya, give us a primer on wage rates in India.
So India does not have a central uniform minimum wage. However, there is something known as the national floor wage of 178 rupees per day, which is a benchmark set by the Government of India under the Code on Wages 2019. However, this is only a benchmark and has no legal binding. The national floor wage is simply recommendatory and indicative in nature. And although the central government periodically revises the variable dearness allowance, that is VDA, an important component in the formula, these revisions also remain non-statutory. The Anup Satpathy Committee in 2019 had recommended a higher national floor wage of 375 rupees per day, but wasn't accepted by the central government. So who controls and fixes minimum wage rates in India? The power lies with the states. The rate depends on several factors, including the development zone of a state, the industry, the skill level of the worker, and the type of occupation. For example, in Uttar Pradesh, the minimum wage for an unskilled worker is 11,021 rupees per month. In neighbouring Bihar, the minimum wage for unskilled workers is 11,128 rupees per month. However, the parameters are different in Maharashtra, which is divided into 3 zones as well. And here's where it becomes a complex understanding. The minimum wage for unskilled workers is 13,635 rupees per month in Maharashtra in Zone 1, 13,039 rupees in Zone 2 and 12,440 rupees in Zone 3. In Andhra Pradesh, the minimum wage for unskilled workers is 13,248 rupees per month in Zone 1, 12,498 rupees per month in Zone 2 and 12,248 rupees per month in Zone 3. In Jammu and Kashmir, minimum wage for unskilled workers is 8,086 rupees per month. In Delhi, minimum wage for unskilled workers is 18,456 rupees per month. Labour unions are unhappy with the lack of clarity surrounding the new floor minimum wage. The Labour Secretary told us yesterday that a committee to fix the floor rate will be formed soon.
Floor wage was there earlier also. However, it was not mandatory. It was an optional kind of a floor wage which Government of India used to fix at regular intervals. Now, as per the new course, the floor wage is going to be having a statutory backing, which means it's mandatory and no state should fix their minimum wage below the floor wage. The floor wage would, as you said, look into the minimum living standards, and there would be a committee of experts that would be deciding on what should be the floor wage, and these would be periodically revised upwards.
It's time for a short break, but coming up on the other side, India has lodged a strong protest with Beijing after a woman born in Arunachal Pradesh was detained at the Shanghai airport by authorities who declared her Indian passport invalid. We discussed that and more on the other side. Brahma Chalani and also former diplomat Anil Trigunayath. Welcome back to News Center. To another big story that we are tracking. New Delhi has lodged a strong protest with Beijing after an Arunachal Pradesh-born woman was detained at the Shanghai airport. This after Chinese authorities declared her Indian passport invalid. The woman alleged that the authorities detained her for 18 hours and called Arunachal Pradesh a Chinese territory. She said she was mocked during the detention and asked to apply for a Chinese passport. Sources told CNBC TV18 our consulate in Shanghai has taken up the matter, and this is not the first time that Beijing has reinforced its claims over Arunachal Pradesh through diplomatic and administrative provocation. This includes China's long criticized practice of issuing staple visas instead of stamped visas to residents of Arunachal Pradesh.
I was traveling on my holiday from London Gatwick to Japan via a transit in Shanghai. And basically, I went past the e-gates, happily queuing up for the security gates to transfer onto my next flight onto Osaka in Japan. And one of the officials from the Chinese immigration came over and singled me out of the queue, basically said, look, India, took my name and something and took me out. In fact, when I tried to question them and ask them what was the issue, they said Arunachal is not part of India, very clearly. And they said, you should apply, and started mocking and laughing and saying things like, you should apply for Chinese passport. You're Chinese, you're not Indian.
All right, to take this forward, we're now joined by Brahma Chalani, Strategic Affairs expert, and also Anil Trigunayath. Brahma Chalani, how do you see this? Do you see this as a one-off, or could this be an escalation over the kind of behavior that China has shown the people of Arunachal Pradesh?
This is the latest in a series of provocations by China. Every now and then they do something new to provoke India, knowing that India will only respond by submitting a démarche, a diplomatic protest. In fact, every time we submit a diplomatic protest to China over a Chinese provocation, I'm sure the mandarins in Beijing laugh at India's démarche, because this is what the Indians do. They respond to Chinese provocations by submitting démarche. That's all that India does, and that is the reason why China feels emboldened to continue with its provocations. We are unable to respond in kind. For example, if they're going to be doing all these things in relation to our people from Arunachal Pradesh, for example, shouldn't we at least minimally give staple visas to Chinese residents of Tibet? After all, the Chinese residents of Tibet are living in Tibet only after Tibet came under Chinese occupation. So at least we can turn the tables on Beijing, but we are most reluctant to do anything. So what happens is that every now and then, China ups the ante, it provokes India, and India responds in a very similar fashion.
All right, Anil Trigunayat, if I can bring you in at this point, how do you think India should treat this at a time when we're trying to normalize and stabilize economic ties with Beijing?
Well, as you know, the sovereignty and territorial integrity are supreme as far as India is concerned. But this particular incident, which has happened, has repeated again. And as Dr. Chalani said, frankly, earlier also, when the team was supposed to go from India, they said, we can't do, you don't need any visas. So they keep provoking India in this particular sense. I don't know if it is a part of their policy, because if you hear their spokesperson, she said they acted as per the rules and laws. So that means that is very much the case, that anybody from Arunachal Pradesh passing through China or visiting China will continue to face these problems. And I fully agree, although we have very strongly protested, which has been the normal diplomatic channel of doing so. But if we wish to escalate, we will have to continue to find new ways of providing them equal kind of a pain as they have been inflicting on Indian citizens from Arunachal Pradesh. Now, this is something that is absolutely requires a harder line. But on the other hand, India and China both on the broader scale are trying to normalize ties, trying to take them forward under a very, very difficult global situation. And that is the reason that this will continue to attract greater attention. And I'm sure that Indian government will continue to take it up in other discussion forums or the channel of communications that we have, apart from the one-time immediate action that was taken by our consulate in Shanghai, as well as the Ministry of External Affairs.
Right. How do you see the timing of this, Mr. Chalani? Because we often hear of staple visas. We hear of athletes from Arunachal Pradesh being denied entry into China. But perhaps this is the first known case. Is there a message to it? Also, the Chinese Foreign Ministry spokesperson has denied harassment of this Indian national from Arunachal.
If detaining a female for 18 hours at Shanghai airport is not harassment, what is harassment then? China is one of the very few places in the world, probably the only country in the world, where a transit passenger, an international transit passenger, coming from outside China and passing through a Chinese airport to go to a third country has to go through immigration. In no other country am I aware where a transit passenger requires to go through immigration. So first, this is the strange practice in China. Second, we talk about India and China being engaged in normalizing ties. But it's interesting that that effort at normalizing ties does not deter China from provoking India. This is only the latest in a series of provocations by China since Modi and Xi Jinping decided, when they met on the sidelines of a summit, to try and normalize relations.
Right.
So the question is, why is it that only India feels restrained? Why is it that China continues to up the ante against India? This is something we need to think about. And most fundamentally, I think, and this is the key point, that Tibet remains at the center of the India-China divide. Look at any issue between India and China, territorial disputes, diplomatic tensions, feuds over river waters, all center on Tibet. And yet, India is so reluctant to even spotlight, to shine a light on Tibet as the core issue between India and China. We can do it in ways that does not require or does not amount to renouncing formally any of our previously stated positions on Tibet. So we need to find ways to reclaim our leverage.
Right. So clearly, this is messaging by China that it's not given up claims on its core issues, and they also want to test India's stand while both sides are negotiating how to put the relationship on track. We've run out of time, but thank you very much, Brahmachalani, Anil Trigunath, for being with us. Let's shift focus also to the passenger vehicle segment. Tata Motors Passenger Vehicles has relaunched its iconic Sierra in India with an introductory price of 11.49 lakh rupees. The launch featured the ICE-powered variants. However, an all-electric version would be launched later. Speaking to CNBC TV18, Shailesh Chandra, CEO and Managing Director at Tata Motors Passenger Vehicles, said that the company is eyeing a double-digit growth this fiscal year.
Actually, you named the cars and you will see that there was a missing piece in the portfolio, because the way we have designed our portfolio that, say, once a customer buys the car for the first time, maybe a Tiago, for the whole life cycle, whole life, the customer has an option of upgrading in the same showroom, which is the Tata showroom. So you have a full continuity that we have tried to give right from Tiago to Harrier Safari. But this was the missing link, which was the mid-size SUV, which Sierra very well fits in and gives the portfolio continuity that we wanted. So it will bring very different customer set. It is a segment which has been growing fast. It has grown big in size. Nearly 40 to 45,000 cars get sold in this segment. So it has actually plugged a big gap, and it has come with a very, very differentiated offering at a very, very compelling price. So it has a big role to play in our portfolio and gives us bridges the discontinuity that otherwise we had in our portfolio.
What are the initial volumes for the Sierra that you're looking at?
So I would not like to specifically talk about the volume. Of course, we have planned for certain production. It will go through the ramp-up phase. But just to give you some sense, today we would be in SUV segment about 16-17% market share. We hope that with Sierra, our market share in SUV segment can go up to 20% plus, say 20 to 25%, anywhere between that.
What is the market sentiment right now post the GST cut and the festive season, Mr. Chandra?
Yeah, I think, somebody asked me, how you would summarize 2025. I think the summary is clear that GST has been the biggest highlight of 2025. That really, switched the sentiment of customers towards positivity from otherwise where we were seeing that under pressure. And you have seen in September and October, the growth of the industry was 5% and 17% respectively. Whereas in the first half of the year, it was a decline of 1.5% or so. Also in November, we see that the growth might be double-digit growth. So 3 months we have seen post GST that the growth rates have been in double-digit, and therefore I hope that the sentiment continues going forward. And I feel optimistic that H2 can be a double-digit growth, but overall at a year level, it might be still a single-digit growth, say 5% plus minus 2.
All right. I would ask you about growth targets for Tata Motors in FY26, if you can give us some color.
In FY26, I can only say that we are definitely eyeing a double-digit growth. But in the first half, our growth rates were not that great. But in quarter two, if you see, we were 10% growth. But in second half, we expect that we will be able to garner double-digit growth also. So let's see at a year level where we land.
Okay. Will there be an EV version of the Sierra ever?
Absolutely. We are committed to bringing Sierra EV. It should come sometime in the next financial year, in the first half of next financial year.
Okay, and my last question, the fact that you're bringing back the Sierra shows that nostalgia works. Customers have a certain image in mind of products that they've seen on the roads, and it really works for companies to bring back those brands to life. Could there be more such experiments in the offing? You've often been asked, Mr. Chandra, about bringing an off-roader. Is there something in mind that you may want to bring back from the past?
No, first, the first part of your question, we are privileged as Tata Motors to have some brands, from the past which have been assets, which have been emotions in the, among the customers in the market, and therefore, it is an opportunity for us to nurture those brands, to get those brands back in their new avatar, which is relevant for the new age customers. It's definitely an opportunity, and this is the start of that. Hopefully, we will be able to further experiment going forward. No concrete plans about it, but it's an opportunity, big opportunity for us. As far as Sierra is concerned, it is made on the Argos platform, which is AWD ready, and we are committed to bringing AWD on Sierra in ICE.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Meet Aman Sanger, the 25-year-old co-founder of Cursor, the AI tool that's redefining how the world codes. In just 3 years, Cursor has rocketed past $1 billion in annualized revenues, an evaluation north of $29 billion. NVIDIA's Jensen Huang calls Cursor his favorite enterprise AI service. Google's Sundar Pichai says he's used it himself, vibe coding a web page with Cursor. I catch up with Aman to decode how Cursor is rewriting the future of software engineering. Hello and welcome. All of us have heard about AI writing code. Well, I have with me somebody who is actually doing this at scale. I'm talking about Cursor, which is an AI-powered code editor. And it's not a small company. It is actually a very large company, started in MIT by 4 founders. I have one of the founders. I'm going to introduce him in just a bit. Now, in 3 years, has hit an annualized revenue run rate of $1 billion. At the last round of funding, it's valued at about $29 billion US. Aman Sanger is with me. Aman, great to have you with us here.
Thanks for having me.
Thank you very much. You know, our audience is finance and, stock markets. I'm sure lots of engineers who use your product also watch us. But for the uninitiated, Aman, tell us what Cursor really is in simple, non-technical layman terms.
Cursor is an AI coding platform. We offer a suite of tools to make developers far more productive, to make it easier for them to ship software, to review software, just speeding up the entire software development lifecycle.
Okay, so I've heard, before we did this interview, I sat down, watched lots of YouTube, but a lot of the technical conversation, right? So this is used by software engineers to write code using AI. So it essentially helps to write software? Is that?
Yes, it helps them write software, and it also helps them review software and review code changes. Okay. So both in the process of writing code that gets merged and then catching issues in potential code that's been written.
And it preempts sort of, does it help you write code? It's like, I heard this one term, like a co-worker looking over your shoulder, smart co-worker, and helping you sort of write code really fast.
Yeah, it's like a mix of a couple different things. The most popular part is you can hand off a task to Cursor, and it will go and complete it. Right. So one example might be you have some button you'd like to add, right, that has some functionality. You can just ask Cursor to do that, and it will implement it for you. It'll take a first pass at it. So the most popular part of Cursor is what we call agent. It is a coding agent that you can hand off a piece of work to. There are other facets like what you described, where it's also acting as a coworker looking over your shoulder, and then as you're typing in some code, it will then predict what you're going to do over the next
like
20. It's kind of like autocomplete, but almost on steroids. It's not just predicting what comes after your cursor, but it's predicting the next overall edit, and then it will jump to other parts of the file and edit those as well. Because with coding, it's really interesting compared to writing, where often you're doing these repetitive things that are super, super predictable. So by looking over your shoulder, if you had another programmer doing this, they could just predict the next 5 minutes of work for you.
So I know nothing about coding. Can I write code using Cursor?
You can. So we are focused on building tools for developers and raising the ceiling. But in doing so, we found that it actually lowers the floor and has let a lot of non-technical folks, people who aren't programmers, build pieces of software and participate in the software development lifecycle.
So the underlying engine which allows Cursor to run, is it one of the large language models, or does it run on all large language models? Or you need to choose one? How does it sort of?
We use a mix of the different large language models, right? So this would be Claude, OpenAI, ChatGPT, Gemini, Grok, and then our own Composer. And you can choose which one, or we select one for you, and we'll often select the best one for you to use, and then it will go and complete the task at hand.
Let's go back 3 years, right? It's 3 years. You started this while you were studying at MIT.
Yes, right around when we were finishing at MIT is when we started the company.
Along with 3 of your sort of friends in MIT at that point.
Yes, we knew each other quite well, and we're pretty confident we wanted to start a company. The initial version of what we started actually looked quite different. We worked on building a co-pilot for mechanical engineering, in fact, instead of software engineering. We had seen the success of something like GitHub Copilot, and we're all ML researchers. And so we thought we could train models to do the same thing that GitHub Copilot originally did, where GitHub Copilot was the first company that did that autocomplete that I was describing, but do the same thing for mechanical engineering. Ultimately, the idea didn't work for a number of reasons. The primary one being there wasn't enough data on the internet of mechanical engineering, while with code you have open source software, and so you've far more data that you can train these models on. And then we weren't mechanical engineers, so we didn't have as much intuition as to how to build a good product there. And so we came back to coding, and the thing we'd seen was over the last year, GitHub Copilot really hadn't changed. Everything was roughly the same. The only thing that changed was they used a better model subbed in by OpenAI, and the models were getting much, much better at coding.
The large language models were getting
these
much faster and better.
Much better coding. And we thought that the future of coding wasn't just going to look like what GitHub Copilot was doing with this extension that was just doing slightly better autocomplete. We thought you had to reimagine the interface and redefine what software development looked like. And so that's why we decided to start working on Cursor and why we made the decision of building an editor to start out with.
You know, a lot of our audience is young audiences who are starting their careers, or even those who are in college. We always get this thing, does it make sense to study software anymore? Or you think, I mean, how do you answer that? I mean, is that a legit question to begin with?
I think that it is up to the universities to figure out what a good computer science curriculum looks like. I don't think it exactly looks like the computer science curriculum that made sense over the last 5 to 10 years. The thing that you should teach people is probably the principles. Like, people should know what code is, how code works. But like the details of software engineering might matter a bit less, and instead biasing more towards teaching people to kind of learn how to learn how to pick up new skills, learn how to adapt, because we're going to see this really rapid progress in the next 5 to 10 years where what it means to be a software engineer is going to change very, very quickly.
I mean, we are shooting right here in IIT Bombay, and you know, computer science program is still the toughest to get into. I mean, it's still the coveted #1 program, right? So, is that going to change, or you think, I mean, it still will be as coveted as you go forward? It's just that, I mean, as you say, the programs have to evolve to teach what is relevant now and not what they were 3 or 4 or 5 years back.
I think if computer science as a program evolves to be still something that teaches the practice of building software, rather than what exactly it looks like today of coding the way that people code today, I think it'll still be very much in demand and very popular. What you're going to see is, as the cost of producing software and as it becomes easier to produce really, really sophisticated software, the demand's just going to increase significantly. So I expect there to be this kind of modified version of what computer science looks like, what building software looks like, and that to be a very popular discipline to learn.
You know, here in India, we have a very large base of software engineers, right? We have a very large and successful, I mean, 3-decade-old software services industry. But it's often, I mean, there's always this hand-wringing that India doesn't have AI in that sense. I mean, you know, foundational AI companies. I mean, you're sort of scratching at the edges of it in some ways, trying to service these large companies, most of them, of course, based in the US. What's the future for IT services, traditional IT services here in India as you see it, Aman? I mean, companies essentially which were writing code earlier, there was a large labor arbitrage, moved to more digital kind of work, and now, of course, there is AI in that sense. So companies, clients are figuring what to do, and will work increase, or you think it's going to be tough times for the traditional IT services in India?
It's hard to predict exactly how things will evolve. I think these IT services companies will need to figure out how to, like, there's 2 paths one could take when you introduce AI and AI coding. One is the path of these people are more productive, so let's get the same amount done with fewer people. And the other path is these people are more productive. Now we can tackle a lot more than we could before. And the former is a means of cost savings, right? So you can increase your margins as a company. The latter is a way of increasing revenue. And I do think that companies should focus on the latter. They should focus on finding ways to get more revenue, do more than they could before. And you will see companies that focus on the other part, and you will see, you know, bad things happen there. But I think the companies that will succeed will focus on growing revenue, and then not just keeping the same number of software engineers, but actually expanding that.
You know, the linearity between the number of people that you have in Indian IT services and the revenues, I mean, that broke away a long time ago. But with AI, I mean, I agree, productivity goes up. maybe revenue growth may even pick up actually, right? But the number of people, and just to use an example, and this is what someone told me, you have Cursor has how many employees now?
We have about 250 employees.
250 employees?
Yes.
And if you were listed, you would have a market cap of $29 billion. There's an Indian IT services company, a large one, been around for decades, has a market cap of $28 billion. It's got about 250,000 employees. I mean, how does that, from a person point of view, not revenue point of view, but from a person point of view in terms of how much is possible with lesser and lesser number of people. You think in that sense AI is going to be deflationary for Indian IT services?
Yeah, I mean, I guess there's two parts there. I think Cursor is a different kind of company. But going back to the decision ahead of these companies, like I think Cursor worked this way because we crafted it from the start to be a place of really high talent density where we could hire a handful of people that were like exceptionally productive. And we're not like letting go of people as these tools as we become more productive from Cursor getting better and better, right? We are going to keep hiring, keep expanding. So for each of these companies, the decision is not like start over and become Cursor. It is what do I do in the future, right? The decision is, do I reduce my workforce or do I increase it? Do I focus more on increasing the total amount of things we can do or focus on doing the same amount with less, right? So like companies will face that decision, not to start from scratch and build Cursor. And in that decision, it's not obvious what the correct choice is. I think it probably is focus on doing more.
see.
Just a quick word for people who are watching, and I think in India, startups are not a new thing. I mean, they've been, but the pace is increasing. Access to capital is getting much better. Nothing like the US in that sense, but just your learnings along the way over the last 3 years. What has worked? What has not worked? For the audiences who are watching, who want to start companies, I mean, obviously, not all that you've done will fit for them, will work for them. What should they take away from your journey?
Yeah, one thing that we learned pretty early on and had to actually unlearn was a lot of the traditional startup playbooks didn't quite make sense. The way that people like to build startups in a lot of the 2010s was following this lean startup methodology of like really searching for a difficult problem, a burning problem that a lot of customers faced, and then trying to find a solution for that. I think we've started to see a lot of saturation there where if you're just trying to find this kind of net new hard problem, it's just hard to do because there's so many companies, so many people working on startups. It's way more popular now. And the thing that worked for us wasn't like trying to find a really hard problem and then build a solution for that. It was actually kind of working backwards from AI is going to be this transformative technology for coding. How can we make ourselves much more productive? It's almost like a solution in search of a problem. And you kind of see that same thing playing out with some of the most successful companies for the last 5 to 10 years. If you look at OpenAI or Anthropic, right? It's focusing on the technology first. And I'm not saying you should focus on the technology first. What I'm saying is sometimes it doesn't make sense to listen to kind of the standard advice. And the only thing that matters when building a company is thinking from first principles about what actually makes sense to do.
So for you, in that sense, I mean, it was clear, and I think you started the company before ChatGPT came out, late 22, or I mean before?
Yeah, it was a bit before ChatGPT came out.
But you already had some of the models, etc., which were out, and I think there were some papers which suggested what's coming in that sense, right?
Exactly, yeah. One big motivation was reading scaling laws, and this was a paper around 2021, and it basically said if you throw in more data and more compute, models will get better in this kind of predictable way. And we saw that there are several orders of magnitude to go at that point in time for coding.
You think this is as transformational AI, when we, I mean, it's of course a lot of things, but it's as transformational as the internet itself? I mean, internet is created from a financial market point of view, trillions and trillions of dollars of wealth. You think AI will do something similar?
I think it is possibly more impactful. It is directly for all white-collar productivity. It is a means of, if you have someone working on a computer behind a screen, making them more productive because you can have models that do pieces of that work. So I think it's going to be probably one of the most transformative technology waves in the last several hundred years, in fact. And I do know there's a lot of hype and talk of, okay, is this a bubble?
I was going to come to that.
I know, yeah. There is frothiness. There are places where I don't think the numbers make sense, but what you need to look at is where's the real demand, right? Where is there real revenue coming in? People using these products, seeing productivity gains. I think like the coding space is one clear area for this. And like if you look at a lot of the other leading companies, right, like ChatGPT, that's real revenue from consumers that actively want to use this product.
So no bubble. I mean, it gets used. By the way, the consensus is there is no bubble. I mean, at least from mainstream research houses, etc. When they all ask the question, is this a bubble? And they all say no, it's not. And I think that perhaps is.
I think what we see for coding is going to happen in all other parts of white-collar work. It's happened first for coding because coding is much easier because there's so much more data, like I described before. There's so much data that you can train on the open internet. And then the nature of how these models are trained further with reinforcement learning is much easier to do on coding than it is in other domains because you can just run tests to see if something is correct. You can't quite do that for writing, let's say. But I do think we're going to figure out how to get better and better at other parts of white-collar work. It'll just take a lot longer. And then you'll see the same thing that's happening in coding in every other facet of white-collar work.
Aman, we've spoken about how computer science is taught is going to change, and I think you talked about that. Let's just go one step lower. Again, a lot of our audience is, young parents, and there's a lot of anxiety here, especially about the future of education itself, right? The world is not as open, for one. That I think is also playing in the minds of many. What should young kids learn? What should? That's a broad question. I know. I don't know how you're going to answer that, but I just wanted to ask you that.
Yeah. I don't know if I have a fantastic answer there, but one skill that I think matters a lot that parents often overlook is autonomy, teaching kids to be more autonomous or have higher agency. I think in the world of AI getting better and better at things like STEM and handling kind of these smaller scope tasks, you don't want kids who are excellent at just kind of following instructions, right? And kind of checking boxes, just like doing well on tests. You want your kids to be really good at really ambiguous, hard, kind of poorly scoped problems, right? The biggest example of this is give the problem that we have to face is build the product that works, build the company that works, right? To do this, there's no set of instructions. You have to kind of figure out a lot of things on your own, and you have to act for this really long period of time. So if kids can get better at being autonomous at an earlier age, I think that would be really helpful for their growth.
I mean, let them explore essentially. Do not. Does specialization, I mean, be a generalist in that sense, or?
This is not even a recommendation in the kinds of things that they learn. It's more just like you want to make sure maybe you don't coddle your kids and they're just always going from one thing to the next. Like they should have maybe their own motivations. They should be able to like take some really hard, ambiguous task and just solve it fully on their own.
And my question is not so much about people who want to study computer science, but do you think, I don't know if you're young yourself, but do you think tools like ChatGPT, etc., have made kids poorer learners? Because I mean, everything is
yeah, I do worry a lot about the education system not being robust to AI and AI getting better. Already, I think these models will be able to, even at an MIT level, at like some of the hardest classes, pass all the tests, do all the homework, do all the problem sets. And so, yeah, it's unclear what needs to happen, but I think the status quo just doesn't work because ChatGPT is this perfect homework cheating machine at the moment.
So, in a way related to what we discussed, when you hire, you only have 250 people at Cursor, right? But you will hire more, you will, what kind of people, what kind of qualities do you look at when you hire at Cursor?
Yeah, there's a couple. One is just let's focus on engineering research product, which is the domain that I'm mainly focused on. People with technical excellence, right? So we want people who really know some domain. In the case of research, they should have some indication of being like an excellent research scientist. In the case of engineering, like, do they know a lot about maybe the lowest levels of the system? Can they describe in detail some previous thing that they built and really impress us and kind of shock us as to how good they are technically? I think the other aspect is what I described earlier with autonomy and agency. Like, we give people really hard tasks, right? You need to build this feature that makes people more productive, makes people in the team more productive. That is a super hard, ambiguous task. There's no textbook or set of instructions for achieving it. You need to figure out on your own.
Which is you give a problem and how they approach it and how much they put into it. Is that what you mean?
Yeah, it's like, can they handle poorly defined tasks, right? Can they execute on a really ambiguous, poorly defined task? Right, it's not just like write some code that does X, Y, Z, and then it follows the spec. It is build a better version of Cursor effectively, but maybe a bit more scoped. And then the last one is people that care, because we're fortunate to be working in a space where engineers are building for themselves, right? It's the product that you use probably most day in, day out. And so people that are passionate about pushing the frontier of coding and making themselves more productive, that's another aspect.
How much of what you're building is using Cursor?
It's all using Cursor. That's the greatest thing. Every day you're getting in and you're using Cursor throughout the workday, and then you're pressing refresh, and then you get a better version of Cursor. So it's kind of magical.
And out of those 250 people, how many are engineers, like technical people?
Yes, so
technical people.
Probably 80 to 90 are engineers, and then across like product research, engineering design, I think it's about 100.
Just one last thing, and I think we addressed this in a little bit. If there was like one or two things you'd like to tell to budding founders here in India, what would that be? I mean, I think it's become much easier to start companies, and I think you said what you should do, which is not look for a problem and then try to solve it because there's too much competition, but try to, in a way, invent the solution and come up with something, and then maybe it's the opposite of what most people try to do.
It's actually like not even that, because it's don't listen to advice and just think from first principles, right? There's no real textbook for starting a company. You should just think, ignoring everything from scratch, what makes sense.
Well, I think a poorly defined problem, as you said, right? How can you do it?
Exactly.
Aman, it's a real pleasure to talk to you. Thank you very much. 3
Likewise.
years and long way to go. Really appreciate it.
Thank you.
Thank you.
And you can make out my situation given how fluent a speaker she is and a public orator she is. So, but thank you everyone for joining us today. Maybe I'll just use a little bit, few minutes to just contextualize why I am here, why HSBC is here, and what we are hoping to achieve, etc. So, I think first of all, for those of you who don't know, I think HSBC, just by sheer nature of our organization, has to be one of the most inclusive organizations in the world, right? We are present in 50, 60 countries. If you go to any floor of any of our offices anywhere in the world, you will find multiple nationalities there, right? So if you look at our board, especially in the context of future female forward, almost 50%, actually 50% of our board has women members. Our CFO, group CFO, one of the most high-profile women in the business of finance globally, is a woman of Indian background. So, you know, you're talking about women and then somebody from India here. So I think I would like to believe HSBC globally, HSBC historically has stood for inclusion. Inclusion as conventionally understood was more in the context of geographies and nationalities and just being open to all kinds of cultures and all kinds of thought processes. I think then coming to what we are trying to do in HSBC India, I think this was on the back of a chance conversation between Shireen and myself, and I think this was more than just about 3 years back or so, and I think it would be very apparent to anyone running any organization that unless you are an organization that is able to attract the best of women to join you, right? You are not going to be able to do justice to whatever opportunity you have, whatever brand you have, whatever financial muscle power you have, whatever products you have. So as mentioned earlier, yes, we are doing it because it's the right thing to do, but we are also doing it because it's also the selfish thing to do. We want to make sure that when young women, or not just young women in the context of inclusion, all women, when they are looking for a bank to work for or a financial services company to work for, they increasingly see HSBC as the natural place to try and try their careers, because we want to make a statement here. Similarly, not just from an employee perspective, even from a customer perspective, right? Increasingly, gone are the days when the dad and the brother used to run the banking accounts and everything else, the wife or the sister, etc., would just sign up the checks, which is what used to happen in my house. I think my mom just signed checks not knowing why she's signing, but this is how it used to be. But now it's different, right? So your employees, your customers, not just individual customers, in the corporate world, the number of fund managers who are women, the number of treasuries that women are running, the number of finance chiefs that have women. So you really, really want to make sure that even those stakeholders see you as a progressive, liberal, inclusive organization. So there was some thought to what we are doing here. Now, going forward, I think and breaking it into a slightly macro context, HSBC is an important part of India's financial system. I hope most of you are aware of our background, of our presence, of what we do. But we obviously want to contribute in a bigger way to the India macro story, at least, right? And I think the call that the country leadership has of being an advanced or a Viksit Bharat by 2047, I think universally it is now acknowledged that it is not going to happen unless the workforce participation rate changes. I think Shireen referenced the changes in the labor laws and the fact that there is now a law which mandates equal pay. And we were discussing earlier, in factories, my friends who run factories, they actually have 2 rate cards. A man gets 200 rupees and the woman gets 130 rupees or whatever per day or something like that. So I think, or the fact that now you have to guarantee safety, and once you guarantee safety, you provide accommodation and things of that nature. So apart from it being good for society, representative of HSBC globally, HSBC in India, and to our stakeholders, employees, customers, I think we also want to play a little role, hopefully through such partnerships, through such conversations, through such ideation, through such recognitions, such that we play our small role as the country moves towards its ambition of becoming an advanced country. And if such conversations, as someone mentioned, if 7% of the audience goes back more convinced, then I think this investment has been more than worth it. With that, thank you very much once again.
Thank you, Mr. Dave, for grounding us in the real economic stakes and possibilities of closing gender gaps. Your commitment continues to shape this platform in meaningful ways. Moving on, our first conversation tonight goes straight to the business case for diversity. To guide this conversation, once again, please welcome Shireen. And joining her is someone who has operated at the highest levels of international diplomacy and defense. She led NATO partnerships, managing one of the world's most complex multilateral relationships. She knows what many are still catching up to. Diverse teams don't just perform better on paper, they win in the real world. Ladies and gentlemen, please welcome Marissa Gerards, Ambassador of the Kingdom of the Netherlands to India, Nepal and Bhutan. Ambassador, thank you so much for joining us here at Future Female Forward. I had the privilege of being invited to the ambassador's residence, where they had put together a wonderful group of women to really exchange ideas and stories, and I thought it would be wonderful to actually bring you on to Future Female Forward to hear exactly that from you. The Netherlands figures, Ambassador, as far as gender parity is concerned, at least in the EU, quite highly. I mean, in the 2024 rankings, you're behind Sweden and Denmark. And I want to understand from you, from your own experience of being a diplomat, of working your way through various roles that you've played, what holds women back, and what do you believe women need to do, but more importantly, what do you believe organizations need to do to dismantle the structures that hold women back?
Well, thank you very much, and thank you very much for inviting me. It's true, you joined us when we were talking about women on board, and we invited 6 very influential and powerful women like yourself to talk with us and the audience on what the situation is actually in India. And that was such a energizing and interesting meeting that we became friends, I think, straight away.
We have.
And so let's talk a bit about these kind of issues, because it's something of a global point of attention, let me put it that way, where I think we made huge strides during decades, and I'm a little concerned nowadays on are we going to actually get there to this parity that we're all striving for, or are there pushbacks at this moment in time? But let's maybe talk about that a little bit later to see that trend as well. For us, for the Netherlands, yes, I think we're high in the ranking. I think the Scandinavian countries are still beating us, but it's something that's very important for us. I think Scandinavian countries here and there led the way, like Norway, for example. Already in 2003, they had a quota for board members of companies who were listed for the stock exchange. And at that moment in time, I remember that there was a little bit of this hesitation, like, well, do we need that? I mean, it should be merit-based. And I was absolutely convinced that it is merit-based, that it's very important and good to have this quota, because you have to break this ceiling first and then prove, like many said, you said it yourself, and I think also the CEO of the bank said it, it's not only fair, but it's also selfish, because it's also better to have women on board.
Right.
So they absolutely convinced me that for a certain moment you need this quota in order to break the ceiling. And that's also what's happening now in the Netherlands. On the supervisory board, we also have a mandatory quota right now, and that's helping a lot. I think we're at 33% right now for the supervisory boards, but still at 17% for the executive boards. So it does help, and they're doing really well. I think you mentioned some figures there on the outcome, actually, of these kind of shared boards that we have nowadays.
No, I agree with you, and I think I was in the same camp as you, debating whether we actually needed quotas or not. But the data actually tells us the story. Till we had the market regulator SEBI bring in mandatory quotas, we didn't actually see the needle change. And so I think, at some points in time, you do need more than just a gentle nudge to get people to do what is the right thing, and we're now seeing that materially change. But Ambassador, in your experience of being part of different roles in your capacity at NATO to here now as the ambassador of Netherlands to India, what have been some of the biggest lessons that you've learned in terms of well-intentioned policies that don't necessarily always work and in fact have the adverse consequences, and the policies that may seem simplistic but are actually most effective? What are some things that you've seen that have been very, very effective in the workplace, as well as things that you've championed and shepherded in your various roles?
Well, I think if I speak for diplomacy, if I speak for my own company, the Ministry of Foreign Affairs, it's absolutely helped that women were teaming up, and that they were actually demanding, and that they were actually exposing, when you could see each and every time that women were not posted equally as men. And when they were posted to ambassadorships, it was not always at the most important countries, if I can put it that way. So I think women really demanded that, and they also demanded some explanation why not and what was behind. And I also saw when I was, climbing up in the ranks, and I was at the table where these decisions were being made, where very often it was only me and one other woman in a committee of 9, I could see how the reasoning was actually excluding women very often for certain positions. Like, well, this country, maybe it's too dangerous for a woman to post her there. Or for this woman, well, her man just made a career step, so maybe she cannot leave now, or she has small children. And we, the two women, would always say, well, ask her about it. Offer her the job. She can make, she can do the reasoning.
She can make the decision.
She can make the decision herself. And even the man didn't mean, it was not, it was out of good heart, maybe even that there were, I'm not even sure, but tell them, offer them the job, and they can make their decision. So it was interesting to see that. And I think at a certain moment, you need a little bit of clout. If you're one woman in the boardroom, if you're one woman at the meeting table, it's hard. But if it's 1/3, it already helps a lot. And even better, I think, 50-50.
Well, there clearly is power in numbers. But, to the point that you made, that the decision-making, the exclusion starts at the decision-making, at the start of the decision-making process itself, where you're deciding for the woman, she has children, or will she be able to travel, or so on and so forth. But I want to also flip this to a conversation that I recently had with a woman leader who said that very often women tend not to raise their hands as well. One, because, there's the perfection penalty. You think you're not good enough for the job. And two, the judgment and scrutiny often hold women back from asking what they rightfully believe is owed to them or is deserved to them. Have there been instances where you've raised your hand and said, well, no, I can do the job and it should come my way?
Well, yeah, I do remember as well the moments, because very often when you start your career, you're chosen by men to be their deputy. And that's how you go through the ranks, and that works very well. I very much remember the moment when I was actually offered a job and accepted it, where I was actually more in the place of a man and where I could feel the pushback. This was being the Deputy Director General for Political Affairs. That was very much seen as that's the part of the security part of the House. And I was the first female Deputy DG in that position, and very much so at NATO. We were only with 5 women at the decision-making table, the North Atlantic Council.
And only 5 women?
5 women, 25 men. And that is, where really, this is really about life and death. These are decisions that are very important for all of us that are taken at that table. But I could feel then for the first time that I was in a chair where lots of men in my ministry thought it was actually theirs. And there I think you need a strong, straight, posture. Remain always kind, but always be firm as well. And I think at that table, I think it was most interesting of all for me to see how diversity can work. And not only diversity of men and women being at one table discussing these kind of interesting and very important issues for us, but also diversity in background. Because I could see that many people at the table were for their whole life they have been working in security issues. And so the lens through which they looked at certain subjects was very kind of narrow. And I could see that I'd lived in Brazil, where I worked as a young diplomat. I served at South Africa as an ambassador, and just haven't seen the world and the West and NATO from different perspectives was already a kind of diversity that was also needed at the table, I think, where you could bring in other perspectives. So I think diversity is not only men and women, but it's also different backgrounds, different upbringing, sometimes different ethnic background, especially in Europe, where we have so many people who come from other places and who are now part of our society, who I share my nationality with as well. To have them also at the table, at the decision-making table, I think it's not only fair, but let me quote the CEO, also we're selfish, it also makes the decisions better, I think, and our society more integrated, more inclusive.
Speaking of better decisions, do you think if we had, instead of 5 women at the NATO table along with 25 men, if we had a more balanced equation, the world would be in a better place today?
Well, I don't know. I don't know if that's true or not, because I don't think if the outcome would be so 100% different, because I can also see nowadays sometimes when women are at very high positions or are the prime minister or are the president, that not always they make such different decisions, because I think to get to that position you need a certain kind of compromising nature as well to actually reach that position. But still, I do think and I do believe to have that diversity, it does make a difference. It does make a difference. I absolutely believe so.
I do think that it does make a difference as well. But, I want to talk about something that you alluded to, that we're seeing a pushback. And we're certainly seeing a pushback in the US, for instance, at this point in time. And the worry or the concern is that we're, in fact, going to retreat. We're going to move further away from the global goals of achieving gender parity. I mean, if you go by the World Economic Forum, anyway, it's 100+ years before we get anywhere close to gender parity. And the worry is that we're going to step back even further. What concerns you about that today?
Well, I'm terribly concerned about it. On the whole global trend, what we see, the global trend of populism that we see, of very, easy answers on that people and electorate doesn't know anymore what's true, what's a lie. This is all blurring the whole international discussion. And then on our subject of tonight, where we see that diversity is suddenly a swear word, or inclusion is suddenly something that you seem to be ashamed of, and where laws are being adopted that it should be taken out of policies of companies. And it terribly worries me, because I think this is what we do need. What we need inclusive societies also for peace and stability of our societies. So it does worry me, but also, I mean, I don't know if he is as notorious, I should maybe say this, Mr. Tate, is Mr. Andrew Tate with his millions and millions of followers. And it terribly worries me that there are so many young boys who are following this, who are, you know, it's so toxic what we see on social media that I think there's really a pushback and that we need to stick together. I'm very happy that we have an audience here of men and women, that we have a CEO who's visionary and who's actually promoting and supporting these kind of evenings, because I think it's in our joint interest to make sure that we have a peaceful and inclusive and stable society.
No, you know, so how do we reclaim space, Ambassador, and how do we reclaim space at the table? How do we reclaim voice at the table to ensure that there isn't a retreat, that there isn't a pushback? Is there anything that you believe, I mean, of course, the need to act together is important, but anything else that you believe specifically at this point in time that both at a government level, at a policy level, as well at a corporation level, that we need to do and prioritize?
Yes, well, I think we should look for people who feel the same way, men and women. I think it works much better if you work together with men and women, and that we actually will not shy back for this kind of push of finding almost, using words of inclusion, of diversity, and not shy away. Just be firm and tell our truth as well. And look for discussion, look for debate, and try to understand also where the other reasoning is coming from. What's their fear, you know, where does it come from, this trend? I think I always believe in debates. Maybe that's why I became a diplomat.
Yes,
that's the only way forward.
It is the, I hope it's the way forward, but you know, your experience here in India and what you've learned, what you take away from the India experience that you could perhaps incorporate in the way that you operate in the Netherlands, and similarly, experiences from the Netherlands that you believe India can perhaps learn from.
Yeah. Well, I think, first of all, I'm really impressed by India, and I'm very much impressed also by the women that I meet here, because I do realize also when we're looking up the numbers of women in the boardroom, but also percentages women going to university, you know, everything, I feel that I'm a little bit privileged from my background. It was a bit easier for us. So I admire the women that I meet even more, that I meet here in this country. And yesterday I had a small interview by my Minister of Foreign Affairs together with the ambassador in Uganda, because today is actually the first day of the 16 days of activism. This is the UN campaign that's fighting violence against women. And for 16 days they will give extra attention to this huge problem around the world, everywhere. And so our minister was talking about the problems in Europe and in our own country. They were asking me about India, we were talking about Uganda, and he was also asking me the same question. What can we learn from India? What's happening in the country where your post is in? And I said, well, I saw many, I share the concern because I see it's a big problem, but I can also see that there are lots of very good and creative ideas. The one telephone number, 118, where women can call and they will be helped straight away. I see this pink booth of the police, where women can go, where they will meet female police officers, the pink buses in Tamil Nadu that are free for women to travel on, that you give them their own compartment in the metro, because that will help women to be safe in transport, but also as a government, I think, as a society, you send the signal that you don't accept this kind of violence against women, that is actually against the law, like what you did also with your labor laws of equal pay. Even if it's not implemented everywhere yet, I think it's a signal of what society, what the rules are, and what you accept and what you don't accept. So I thought it was very creative, and I also spoke to so many people. Kiran Bedi, your first police officer, who was once invited to our residence, and she had this great story, and also her campaign on good boys, where she said we should invest in our boys, you know, to teach our boys as well what's acceptable. Yeah. Thank you. This is for her. I will tell her that her. So, and you see, so there's so much happening in this society that gives me a lot of hope and a lot of energy as well. So I could see that my minister was also energized, and he concluded this small video saying, well, I got some really good ideas here.
Well, that's good. That's good that the India experience energized your minister. But, I want to understand from your vantage point on the priorities that Netherlands is making. I know health is a big area of focus, and that is something where you've actually done much better than your peers as far as gender parity is concerned. But some of the other areas that the Netherlands is focusing on to bridge the gap, so to speak.
Yeah. Yes, I think in many of these different items where you rate how gender parity is coming along. I think health is one where we're really doing very well. But actually on economic participation, not so good, and which is kind of interesting. And the fact is that many women work in the Netherlands, but most of them work part-time, like 2 or 3 days. And it's partly because I think our childcare is not so well organized at this moment. It's very, very expensive. But also, I don't know, it's something very interesting. I saw that we even dropped quite some
yes.
places.
15 places.
Yeah, how about that?
Yes.
I was also shocked by it, so thank you for making me Google a little bit and finding out. I was also shocked by it. And because I think if you want to be really at the table, you should work full-time. And of course, full-time doesn't mean 80 hours a week. I think sometimes we're too harsh on ourselves. You just mentioned it, that we're such perfectionists, that we always doubt ourselves, that, come on, go for it. Get your priorities right. Also spy a little bit on how women do or how men do it. I thought it was very interesting to be at meeting tables and very often realizing that I did read all the documents for the meeting. And I knew because they were saying things that didn't make sense. But
not in the document at all.
Not in the document at all. But instead of being totally upset with my male colleagues, I thought maybe I should copy a little bit of their strategy and sometimes just do it a bit more flimsy and be at the meeting table. But
have you done that?
I've done it. Now and again I've done it because sometimes you have to balance things in your life and instead of shying back and think I cannot do it because I want to do it always 100%, it's better to copy a little bit, but of course have your priorities right.
Yeah,
have your priorities right.
Yes, it does require some smart maneuvering and some smart juggling. But, if you were to look back at the time that you spent when you were in university, trying to think about what career you would possibly want to take forward, and the concerns or the vulnerabilities that you dealt with then, as someone who's now spent the last 2 decades, 3 decades in public service, what would you tell your younger self? And what would you tell all young women who are looking at getting into the workforce today?
To be far more confident. To be far more confident. And also I tell all of us here in the room, please your girls that you're raising, give them that confidence from the start. And I had great parents and they made me confident, but still I could see in hindsight that me and my brother, that you get a different upbringing, that you get more rewarded as a girl for showing a lot of empathy, for example. And my brother was rewarded for being always out there and energetic and being wild and loud and, and I was being rewarded for being sweet and empathy and, so I think also we can, fire up our girls a little bit at home already to reward them for loud behavior and energy and go out there and so yeah, let's try to do that and also raise our boys to
raise the men to have a little bit more empathy as well.
Yeah, raise the men to have a little bit more empathy, to also do some house chores. And
yes, shared responsibilities is a big one, and I think that all women will unite with you on that one. But is there a particular story, I want to end by asking you that, Ambassador, of you're used to walking into rooms with only men. Is there a particular story that you sort of have tucked away in your mind that exemplifies what so many women like you have to endure, have to go through, and how you dealt with that situation and held your own?
Yeah, well, what happens quite a lot of times when you're at a meeting table is or men stealing your point. That happened a lot to me. I don't know if others would say. It does happen, eh? It does happen. And it also, and instead of being upset with the man who steal your point, I thought, let's see a little bit how they do it. And what's my mistake here? What's my mistake here as well? And I thought it was also a matter of timing, to let the man talk first a little bit more and then time your proposal a little bit later so that they cannot steal it and that you are part of the discussion. I can see men smile and laugh here. Huh? They recognize it. Yeah. So I think we women, you know, we should study them a little bit to see how it works. But this is one that I really remember. And you can do better if you practice a little bit.
So timing, get your timing right, and attack at the right moment. So that's part of the strategy as well. Finally, Ambassador, before I let you go, you know, of course, India and Netherlands are working closely together on a whole host of issues. As Ambassador, you've been here since 2023 now. What's been the sort of biggest success story of the partnership so far?
Well, I think the biggest success story is that we're really strengthening the cooperation. We're waiting for your Prime Minister Modi to go to the Netherlands to actually announce this strengthened partnership so that we can do really more. And what's been a great success for me is to see all the people-to-people contact and to see how much is happening. And, you know, the longer I'm here, the more I see. And we live in a very dangerous world at this moment. And I think we need trusted friends. So I also feel that my experience in NATO is helpful to explain a little bit what it is and what's happening in Europe and how upset and scared we are of the war in Ukraine, but also for me to explain to Europe that here from an Indian perspective, the world looks different and that you have other things to worry about and what your reality is. And again, I think dialogue, debate, it's always the solution for everything. So knowing each other, seeing things from different perspectives, in the end, I think we are all looking for peace and stability. I truly believe that. And that's where we have to find each other. So being an ambassador in India is a great privilege.
Well, Ambassador Gerard, thank you so very much for joining us here at Future Female Forward. Appreciate your time and appreciate you being here with us. Ladies and gentlemen, a big round of applause for the Ambassador of Netherlands, Marissa Gerard.
Thank you, Ambassador Gerard and Shireen, for the candid and very... So let's take a moment to applaud the initiative and everyone who's carried it forward. On that note, I'd like to invite our distinguished signatories to join us on stage. Shireen Bhan, Managing Editor, CNBC TV18. Hitendra Dave, CEO of HSBC India. Marissa Gerards, Ambassador of the Kingdom of the Netherlands to India, Nepal and Bhutan. Nirika Holkar, Executive Director of Godrej and Boys. Ajay Sharma, MD and Head of Banking, HSBC India. We've got Rajesh Variyar, President, Global Operations and Chairman and Managing Director, Cognizant India. Mona K. Khandar, IAS, Principal Secretary to the Government of Gujarat. Ladies and gentlemen, a huge round of applause for all of them. Pooja Sharma Goyal, Founding CEO, the Udeti Foundation. Sanjeev Bikhchandani, Co-Founder of InfoEdge. Harita Gupta, Head of Global Experience, Sutherland. Neha Mathur, Chief Human Resource Officer, Urban Company. And Ritu Arora, CEO of CIO, Allianz Investment Management Asia Pacific and India Advisor to the Allianz SE Board. Ladies and gentlemen, a huge round of applause for all of them. Keep the applauses going, please. Request you all to kindly sign the charter.
They think they can stop me, but can you stop the river? Every time you shut a door, I will find me a window. I'm the fire you can't douse. I'm the girl in the mirror. Every time you shut a door, I will find me a window. I'm the fire you can't douse.
Mr. Dave, please request you to kindly come on stage.
This is my time to shine, taking back all that's mine. This is my time to shine, taking back all that's mine. This is my time to smile, all that I know I can. This is my time to smile, all that I know I can.
A big thank you to all our signatories. With your leadership, the path to peak becomes clearer for thousands of women across the country. Ladies and gentlemen, once again, a huge round of applause for all our signatories here. Our next segment brings together leaders who are shaping how India grows across industry, finance, public policy, and global investment. This is the conversation where we stop admiring the problem and start challenging the molds that have held us back. Because breaking molds isn't about disruption for the sake of it, it's about questioning assumptions that have gone unquestioned for too long. It's about rewriting systems that were built for a different era, a different workforce, a different India. It's about opening doors that were never meant to be closed in the first place, and then ensuring that they stay open for the women who come after. And building futures, that's the real work. That's where intent meets execution. It means designing companies where women don't just survive but thrive, where policies reflect the reality of women's lives, not outdated assumptions about them, where opportunities aren't favors but rights, where strategy wins over habit, data trumps comfort, and ambition defeats incrementalism. Tonight's Leaders Forum sits at the intersection of all of this. These are not voices on the sidelines. These are the decision makers. The ones who control budgets, set strategy, shape culture, influence policy, and move capital. Their decisions ripple across industries and shape the country we're becoming. They know what it takes to dismantle outdated structures because they've done it, and they understand what it means to build for the next decade, not replicate the last one. Ladies and gentlemen, please put your hands together once again for Shireen Bhan. Requesting our speakers to join us. Mona K. Khandar, IAS, Principal Secretary to the Government of Gujarat. Ajay Sharma, Managing Director and Head of Banking, HSBC India. Ritu Arora, CEO and CIO, Allianz Investment Management Asia Pacific and India advisor to the Allianz SE board, Sanjeev Bikhchandani, the co-founder of InfoEdge, Nirika Holkar, Executive Director, Godrej and Boyce, and Rajesh Warrier, President, Global Operations and Chairman and Managing Director, Cognizant India. Over to you, Shireen.
Thank you very much, Shruti. Ladies and gentlemen, what a fabulous panel we have. And may I just say, we've achieved gender parity, at least as far as our panel is concerned. Please do take a seat. It's wonderful to have each one of you here with us. You know, we're talking about policy changes. We're talking about what governments are doing, both at the level of the center as well as at the state government levels. We're also talking about what organizations are doing to drive change. And we have a wonderful panel here with us. Mona, if I could start with you. You know, before I talk to you about the wonderful work that you're doing with the semiconductor policy and all the other changes that you're bringing about for the government of Gujarat, ladies and gentlemen, I want to first talk about the fact that you made it to number 7 as far as the UPSC examination is concerned. I mean, how in God's name did you crack that?
It was actually not only that at that time I stood 7th and topped among women candidates, but I was the first topper from Mumbai, because Mumbai is not so much into civil services. So it was actually a tough job, because you don't have the environment. But no, when you are committed, you try to find out what resources you have around. So making the best use of that and being like, well planned and doing everything in a planned and strategic manner. And doing a lot of hard work, of course. Without that, it is not possible. But in a planned manner, that hard work in a planned manner.
And success was there for the taking as far as you're concerned, because you worked strategically towards achieving that goal of getting into the IS. But now that you're part of the bureaucracy, and so much of what we hear about the bureaucracy is often, that it's mired in controversy, it's mired in lethargy, it's mired in inaction from the inside. How do you look at being able to change the system as an insider? How have you been strategic about that?
This is, I think, this is a very strategic question, I must say. But this is actually, a challenging part of it, especially when you are a workaholic person. Because, the way government functions and the way private sector functions, there is a marked difference. Government has to take care of several constituencies. They have that sense of timing, because we are a democracy and we have an election. And when you are workaholic and when you are perfectionist also, you want to do everything as per the right time of deliverance. But like matching the two, matching the right time so far as being politically correct is concerned, and also taking care of so many constituencies, your own colleagues. There are several communities that you are dealing with. There are several stakeholders. I mean, one has to really plan it very, very well. If we know the negotiations, it is
Give me an example. Give me an example of a negotiation that you strategically won over with your doggedness.
So I'll give you a recent example that I was working on a very important space tech policy. And now that is being done by it was done by my department. Now there were several other departments, one being industry and mines department. So first of all, know that sense of competition is there not only with one department but several others, because you all are vying for a limited public finance that one has. Secondly, it's very important that when you announce the policy, it has to be implemented successfully. So one needs to have a plan, like how you are going to implement. And for that, one needs to do a lot of background work. Find out who all are interested in investing, what are the startups that would like to come forward, and what is the skill set one is having, and where one has a strategic advantage, what are the low-hanging fruits, what are the short-term goals, medium-term goals, and long-term goals. So these are something very, very important. And in fact, a couple of other states were also working, but I mean, you need to convince to all these people and that we could do, and Gujarat became the first state to announce. And it made such a big kind of impact and such a big news. Then next day, the other state who was working on it, they also announced, and then there was, you know, a tussle
competitive federalism in full display.
Yeah.
In full display. I'll come back to you in just a second, Mona. But, you know, Sanjeev Bikhchandani, let's talk about what the data is telling us. From your vantage point at the data that Naukri has access to, you know, we do have more women coming into the workforce, perhaps not as many as we would like. But what are you seeing today in terms of trends?
Okay, just a couple of data points. So our company, InfoEdge, has 40% women. Now, that may look like a good number, but it was 50% 10 years ago.
It was 50%. So you've actually declined.
It's gone down. Now, I asked the head of HR why. So, do currently, reason number one is that there are businesses that have grown like 99 acres, where in the sales force, women don't want to work because they don't want to go and meet brokers, and sometimes brokers misbehave, and we respect that. So we don't take women there. I mean, if you want to, fine, but by and large, no. So that has grown. So usse auratein kam hui hain. The second is the companies become more and more tech. Now, as the companies become more and more tech, you're hiring more engineers, okay? And there, again, the percentage of women is lower. Okay. Now, 40% is decent, but the trend from 50 to 40 is not good.
Yeah.
Now, that's trend number one. Trend number two is there are 40% women, but if you take the top 50 or 100 people in the company, it's 15%. Okay? So I asked, now, if you probe why, it's the same reason. There's a lot of product tech people in the top 100, 150, because the companies become more product tech, and there aren't enough women. Okay? Now, our head of HR is a woman, is a female. So it's not as if there's a bias in the hiring, okay, against women. It's just that there aren't enough of them in product tech, in senior positions in industry where you can hire from. Now, so, you know, you dig further and you get data out. So I've got some data.
Yeah, please pull out the data, because the data does not lie. So let's understand what is going on there.
So I am Ahmedabad, 25% women, 75% male. This is up from 15% in my batch, but it's still 75% male. Yeah? You remember?
I remember. It was even lower than mine.
Are you batchmates?
1 year senior. He's 1 year senior. I am Bangalore, 60% male. I am Calcutta, 64% male. I am Lucknow, 70% male. I am Indore, 70% male. I am Kozhikode, 40% male. Basically, you've got to get more women into those places where 20 years from now, 15 years from now, your senior management will come from.
Yeah.
Right?
So you've got to build out the pipeline is the problem.
That's the problem. Look at the
Something
IITs.
interesting Kozhikode is doing then.
Yeah, that's because Debashish Chatterjee, who's the director, took interest.
And also more recent, you know, it's
No,
not...
the director took interest. He would say, I want it this way.
Okay.
That's it. Otherwise, see, if you go purely by the CAT scores, you will not be able to get that ratio. He simply said, I want more women. That's it. And IITs, all the IITs, now this is IT ka data ChatGPT say, so it's approximate, 80% men.
Yeah.
All of them. Right? You will, if you're not producing enough engineers from the top colleges who are female, you will not produce 20 years from now enough tech heads and CTOs who are women. It's as simple as that. Now, nobody's saying that, I'm not saying that reduce the seats for men.
Yeah.
I'm saying, har jagah 200 seats badha do, and those additional seats should go to women. You will fix the ratio. And this is a long-term fix. See, in the short term, individual organizations like HSBC or our company, or any progressive company can fight and get more women. But until there are more women in the overall talent pool, it will not change at a systemic level. So your best colleges have got to admit more women.
Have got to admit more women, and you're saying create more seats and...
Yeah, don't reduce male seats. The moment you have a zero-sum game, there's conflict.
Yeah.
Just increase seats and give them to women.
Well, you know, that's one of the problems that we need to address as well. But Nairika, let me come to you now and talk about the fact that the Godrej Group has, at its very heart, had inclusion as part of the culture. But you're also in the manufacturing space. You're in a diverse set of areas. What is the biggest constraint? What is the biggest challenge that you see that the workforce is facing today when it comes to women specifically?
Yeah, I think that today, especially in manufacturing, in terms of the number of women, and I think a similar point, the number of women engineers that you have in the pool to choose from are not a lot. And I think because engineering has been a male-dominated sector in a manner of speaking, and also in terms of the physicality of, let's say, the shop floor. I think there is an implicit assumption that it is male-oriented work because of the physicality of it. And I think breaking that down, and I think technology in some senses has helped to, for us to relook at the shop floor, because it's not all about brute force, it's a lot about precision, it's a lot about process rigor. And there are many roles even today, whether it's ranging from precision engineering to procurement to design. I think there are many more women than there used to be. Are we good in terms of gender parity? The answer would be no. And I think...
What is the ratio for you currently?
It's very low.
Yeah?
It's close to 11%.
11%. So that's very, very far from being able to get to gender parity. But are you prioritizing this, Nirika? What are you trying to do differently within the organization to move the needle from 11%, even close to, say, 15 to 20%?
So a lot more focus in terms of, I think also STEM, women getting into STEM, having also closer partnerships where the doctoral dissertations, etc., come and have an industry, let's say, playground to be able to match intellect to real-world problems. And I think also in terms of flexibility, and you touched upon it earlier, there is being a manufacturing company, face time is very important, and also being present. And I think for women that automatically eliminates a lot of people from being able to do that. And I think also a lot of cultural bias, whether we like it or not, is there. Whether it's coming from your own parents or in-laws or husbands in terms of expectations in the home. And also, again, with shifts, the whole, argument that women can't take night shifts or can't do sales roles where they have to be on the ground. So I think, again, coming to giving the woman a choice to be able to say, no, I don't want to do that. And then I think also mandating from a recruitment perspective to be able to bring more women, because finally, even in the roles where we've been able to do it, like let's say, for instance, in our locks factory or in our appliance factory, which are predominantly women, I think there are examples of where, we've been able to push the needle much more.
So what did you do differently there in the locks factory or the appliances factory that actually ensured that you do have more women there?
A lot of skilled handwork is required for the sort of the manual roles, and a lot of the automation has enabled us to bring more women in. So in sharp contrast would be heavy engineering, where the women would mostly be in design roles or in procurement roles, not on the shop floor.
Not on the shop floor. Ajay, let's talk about what you're seeing now, not just within HSBC, but with the clients that you actually service, with the credit that is flowing through to women businesses and so on and so forth. What's the data telling you on that front? Do we have reason to be optimistic or not?
I think we still have a long way to go. So I'll pick on what Mona said. Change is very difficult. But as she's got the first state excited, then many more followed. So I think we are on a journey. A lot more work to be done. Like Sanjeev, I think we need to be very data-oriented. So when I worked internationally, and every country started off at maybe 50%, India is a bit lower. But we do try to start off at 50%. And I think as you go up the levels, it rapidly falls down. So what do you do? How do you make sure that you identify talent, how do you nurture it? How do you make sure that if they do leave in the middle, as many do you have programs to
bring them back?
And we have a power to her where we have people come back, work with us for 6 months, and our success rate is 55%, where they do find a job within the bank. So even if we solve the problem, which we have to, at a university level and engineering level, get more women engineers and women professionals, I think the problem doesn't lie just at that. We have to solve at many layers. And there are just too few women entrepreneurs. I think we still have many in the room that we work with. And I think, do they build as good businesses as men do? Probably better. And I really think there needs to be many more programs, maybe government supported, maybe supported by banks like us, which really make sure the flow of money doesn't stop.
Yeah. I'll get Sanjeev to comment on the entrepreneurship part in just a second as well, but let me come to you, Ritu. There's very few women in spaces that you operate in as well, which is, of course, the BFSI space. I mean, I don't know how many people know she manages an AUM of 50 billion at this point in time, so that's nothing to scoff at. But, Ritu, through your own journey and from where you stand today to what you're looking at in terms of what it will take to course correct, what do you believe is the need of the hour?
Thanks, Shireen. Though I must update you, I've just swapped roles and I've come in as country head for India.
Yes.
But yes, still not a couple of weeks back, I was handling 50 billion. But insurance and investments and BFSI is actually privileged to have more women leaders. And we've had iconic leaders like Naina Lal Kidwai, who I very much idolized. And hence, we have had very senior, even in India, bankers and women. And I think that makes a lot of difference when you have a role model. I was just reminded as my panelists were speaking about a recent graduation, my son's school graduation that I attended. And obviously, this is a privileged section of society, right? These kids all come from families which give them choice. I was very disappointed that when the science batch was being given their school passing, there were hardly a handful of girls. These were girls who had a choice to make. But the majority of the girls clearly had chosen to go for subject like humanities. I'm sure it's a personal choice, but then that is the pipeline which is already so thin. And so then obviously they're not making to these technical courses and are ready for the kind of roles that are emerging now in India. BFSI, fortunately, I think is slightly different in that aspect. I think in most of our industry, we have a good gender parity compared to manufacturing and other sectors.
So what have been some of the changes that you brought in within the organization to ensure that you deal with that leaky leadership pipeline that everyone here is talking about?
It is indeed leaky. So there's a smaller pipeline when we start with, and then mid-level is where we lose out most of the women, and bringing back women definitely helps. I think it also helps that now there's far more empathy and an organizational expectation. I think that definitely course corrects people who are on the fringes. I, for example, always call out, I was pregnant when I was given the responsibility, 9 months pregnant, just going on maternity when I was given responsibility for treasury at Gillette, which kind of got me into my dream profession of being a money manager. And I owe it to that manager who had the courage, and I went and told him, I'm going on maternity next week. He said, yeah, but you'll come back. I said, yes, I will come back, and I came back with more commitment.
Yeah.
But I think the organizational rules and perspective, for people who are not naturally such managers, I think that helps force a behavior also that nurtures talent, because unless we nurture that talent in the middle, it's very difficult to have the senior leaders.
No, absolutely. It is very difficult, and you were lucky that you had a manager who didn't ask you questions about whether you're going to come back and assume that you will come back, because that's not usually the case. Rajesh, and that's what you're attempting to do at Cognizant, is also to try and plug this leaky pipeline. You've also got a return to work policy. You've got programs. You've got mentorship schemes that are currently underway. Take me through the impact. Take me through the outcome of some of these tangible steps that you've taken.
Sure, Shireen. First of all, thank you for having us here. We are very proud to be associated with this program and the season finale. Happy to be here. Shireen, I've spoken about the program Shakti that we have at Cognizant. Very proud of this program. It's incredibly well thought through. If you really think about it, we basically structure Shakti into 4 tiers. We have really thought through what does it take to ensure that our women employees have an opportunity to maximize on the potential that they have within Cognizant while they build a career. So in the 4 layers, if I were to talk about it, the first layer we have is called Be Gritty. So I've personally seen this. Sometimes I sit down and have lunch or with the youngsters who have just joined the workforce. And some of the typical challenges they face is, they join the workforce. Of course, they go through induction program, etc. But they typically tend to get lost. They don't know how to navigate a large organization. They don't know how to go ask, where to ask help from, etc. So Be Gritty is a very focused program for women who join our workforce to help them find their way through the organization as they build their career. Then we have something called Rise. Rise is when they actually move from being a team player to becoming a manager. How do we equip them with the skill sets that is required to manage teams, to manage clients, soft skills starting from business presentation skills, negotiation skills, team management skills, etc. So there is a focused attempt to make sure that all of them who go from being a team player to a manager actually go through Rise. Then we have a program called Propel. Propel is actually an award-winning program. We have a Brandon Hall Award for Propel. We have thousands of women associates who have actually gone through Propel. Propel is really about taking managers and making leaders out of them. So how do you change from tactical thinking to strategic thinking, bringing thought leadership in your way of working, creating personal brand, and so on and so forth. So we have thousands of women who actually gone through that. So this is for the rank and file.
Is there a parallel program for the men, or the men don't get a program at all?
There is a lot of programs for everybody, for men and women, but these are the ones which are really focused on design specifically for women. And one last one which I also want to mention is we have something called a returnship program. You know that we have, industry has a leaky bucket. We can't run away from that reality. But there are a lot of women who take a break for family reasons, want to come back and start. So we have a 12-week returnship program in which we actually help them get back onto the bandwagon per se, train themselves and see if this is what they want to continue to pursue. So there are 12 weeks where they get paid and they call it in, for want of a better word, internship, and then they get to see if they want to pursue the career from there on. So I'm quite proud of it. It's a very well thought through program.
How many women have returned on account of that program?
I don't have an exact number, but we definitely have hundreds of them. Every year we have hundreds of them who actually come back to work.
Okay, well, that's good to hear that there are specific measures being taken to address some of the problems that the panel has spoken about. But Sanjeev, let's talk about entrepreneurship and let's talk about what the future holds. We've started to see more money going to female founders at this point in time, but clearly the gap is still very, very wide. But I know that you're a big believer in the future of female entrepreneurship and why you believe that female entrepreneurship may be the answer to many problems.
So look, I don't specifically single out women. But it so happens, that a number of the founders we've backed are women. Very importantly, I think 4 or 5 of our investing team, and the investing team is only 15. So maybe a third, almost a third is women. So, and
was that conscious or?
So I'll tell you, it was accidental. It happened, but it was not a strategy. Basically, I began the investing business. And I ran it solo for about 3-4 years, with being part-time and then alone and nobody else. Maybe another part-time guy from the company who was running out of the businesses, and he helped me. But by 2012, 4-5 years after we began to invest, we hired our first. I got a call from an IMA prof saying, "Listen, there's this female student. She just graduated, and she's not happy in her job. And why don't you hire her in your team?" And I said, yes, and didn't call back. I don't want to hire anybody. Okay, I wasn't looking. And then he kept calling back, the prof. So the third time he called, I said, "Ab to karna padega." So then I got her over, and it was not even an interview because I'd already decided I have to hire her because the Prophet said, you got to hire her. And so she joined, and she did a great job. Okay, and then we began to expand the team under her, and she ended up hiring others, some of whom are women. So we don't say hire more women. It just ends up that way, that we've hired more women. So she says the best man for this job is a woman. I'll hire her.
Yes, I think as long as you're open-minded and you're looking for the best talent, I think you end up making some of those right decisions and the right choices. But Mona, let's talk about at the policy level, whether you can in fact drive change. Now, we were talking about the semiconductor policy. Many of the leaders here are talking about the fact that they're unable to find women to fit into STEM roles and so on and so forth. Are you designing policy that makes the policy itself more inclusive?
So let me tell you, the good thing about semiconductor and high-end electronics is that women are better suited. They are more suited than men. So of course, when we drafted, when I was working on the policy or modification in the policy, we took a special care because this was the opportunity where industry also wanted the same thing, and we also wanted that. I mean, as a woman or as a lady officer, I wanted to promote the same. So we took a special care. I mean, we ensured that there is a women police station meant only for women. And one very important thing is, these codes are announced now, but this particular sector, they need a 12-hour shift. So Gujarat came out with that notification, and for that we again took a number of measures that women, they feel comfortable doing that. And also discuss with the employers or the investors, like what kind of facilitation they will be doing. So they were equally keen. So for their skilling, for their employment, for their safety and security, all these things that becomes part of the policy, and also for implementation and making that environment suitable for women. Another important thing that I would like to say is, I have seen that a sector called dairy sector. Mm-hmm. In the initial period of my career, I'm very happy. It inspires me even today. I was supposed to take up a tribal district who was a zero industry, and where the women or men, they just knew how to fell trees. And there we took dairy development, and I decided to do it only with women, because the status of women was very, very vulnerable. They were treated as assets. They had no say, no assets of their own. So we decided that let us do it with women. And men were not very responsive as well. And it was very, very successful. They started earning, they had a good monthly earning, they started having control over their families, they started having cattle and this kind of assets. So it was like very, very successful. And then it was adopted as a model that we should have dairy development. It should be women-led dairy development.
Women-led, and yes, absolutely. Amul, I think, is a wonderful story, a wonderful example of the power of organizing women, and of course, you've given us another example of how that has worked in the social sector as well, and we perhaps need to see a lot more of that across the country. But Ajay, in terms of next steps now, we've talked about some of the measures already taken, but what is it that you would like to prioritize on the back of the momentum that's already been created?
So a few things. I think we need to celebrate successes.
We're doing that. We're doing that this evening.
And even within our organization, we do that. Our head of markets, Anita, runs one of the most important jobs, which Mr. Dave used to do earlier. Our head of cash management, which is our single most important product group, is run by Mansi. So we do have a lot of success stories, and we celebrate those. But maybe we need to hardwire numbers. I think that's the only way. If me as a manager and the operational exco of the bank is being judged on a number, it'll get done.
Yeah, and I think that's the debate that we've been having. Can you or should you hardwire these numbers? Ritu, I want to get your point of view on that. Should we get organizations to commit to a particular number? I mean, we have this debate even when we brought the charter in this season. Should we tie companies down to a specific number, or should we just say directionally you want to make move forward, but don't put it down to a number? Do you think we need to tie organizations down to a particular number? And what specifically are you doing within Allianz now to take this forward?
What gets measured gets done, and I think most of us business people would do that for any other aspect, so why not for this? But more and more organizations want to be more an inclusive place. So at Allianz, it's not that we want to have a number for diversity or gender, but we want to be an equal employment provider. And it works if you have an ecosystem that helps women thrive. So anecdotally, I had 80% women in my team. And actually, a colleague of mine came up and said, Ritu, don't you think we should hire some men? But that was not that I was consciously hiring, or it was just a good place to work, and it was attracting talent, and it happened to be women.
Yeah.
So I think numbers do matter, so especially if we have lean numbers like our colleague was sharing here, so I think it helps to have some measures. But beyond that, you don't want reservation. I don't fall in that camp which says that because the seat is reserved for a woman, she got it. It also undermines the capability of that very deserving candidate. Sometimes we see that on board positions. Sometimes we see that even for CXO positions where we say only women candidate, and then a very deserving woman takes that role and is always seen as a woman candidate. So I don't fall in that camp where I like to reserve.
And that is a contentious issue, but we've also seen the fact that till we actually had the mandatory regulations coming in, we hadn't seen any change as far as the numbers were concerned, and only when it was mandated did we start to see that number. So I understand the apprehension and the reservation, but perhaps there is a time and a place for that. Sanjeev, in terms of next steps, both for you at InfoEdge to reverse the decline that you
No, I want to clarify.
Okay.
10 years ago, we had about 2,000 people in the company. Now we have 6,500. So
the universe has grown.
So when we had 50,000 women, we had 1,000 women. Today, 6,500, 40% women, we've got 2,500 women. So the number of women have gone up 2.5 times. Number of men have gone up much, much more. So look, it's a challenge to hire great techies anyway. Right? So on the tech side, we say just get the best, yeah? Because if you want people to work on AI, you want people to work on doing cutting-edge stuff and innovative stuff, you've got to get the best. Right? Now, if that's women, fantastic. If that's male, also very good. Just get the best. I think on the customer engagement side, on the back office side, on the the HR side, you can make an effort and actually get more women, because you will find more women. We can't expand the universe. Right? But yes, if we find a woman techie who's very good, we'll take her like this. But it's slightly harder.
It is hard. Nairika, what are you doing in terms of next steps to ensure that you do, in fact, get more diversity on board?
I think you have to have definitely tracking the numbers, and I think that it's now, diversity has to be a core KPI, and it also in terms of the hiring process, mandating at least half of the candidates are women, and I think also in terms of tracking women in core operational roles and increasing that, but also looking at the other infrastructure and enablers, whether it's transportation systems, whether it's ergonomic systems, creches, flexible hours. I think all of those enabling policies, in addition to also having tracking the numbers, I think is important, because that's finally you could have a number, but then you don't have women staying in the system, you don't have women reaching leadership positions. So I think definitely tracking the numbers, but also having that enabling environment which allows women to.
I want to ask both Ritu and you. Ritu, I'll start by asking you, what's the one change that you've made, over the last 20 years of running businesses, of becoming who you are today? What do you do differently today that you would like to leave here to young women who are getting into the workforce? What do you do differently today? What's been the big learning for you?
Ask for help. So I think when I started out, I was wanting to do it all by myself. I was less confident in being vulnerable, which I am today. And I think it is okay to ask for help, and that's what I remind my daughter who's just joined the workforce, that it's okay to ask for help from your colleagues, from anyone, family, ecosystem, neighbors. Don't try to do it. Don't try to be a superwoman. It really burns you out.
Don't try and be a superwoman. It burns you out. I think that is absolutely valuable advice. Narika, what about you? What's been the big learning?
I think the importance of mentorship is quite, at least, not recognized as important as it is. And I think that to guide people is very important, and to also have the shared experiences and also some of the roadblocks, and to discuss how one can, maybe work around them and, really help women and also share experiences.
Speaking of shared experiences, Rajesh, I'm going to end with you because, season 3 is all about moving conversation to action. And I know that you have a wonderful anecdote that you want to share with us in terms of your own experience and your own learnings from what you've seen happen with the measures that you've taken.
The anecdote that I was sharing with you, Shireen, was about the challenges that women face as they go up the career ladder. We were having this conversation saying, why are more women dropping off from careers, and why are there lesser women in leadership? A couple of anecdotes that I can share. Obviously, we know some of these causes. One is family pressures that women face, whether it's childcare, whether it's parent care. For whatever reason, a lot of the load actually falls on women, and that causes career disruption. The other is, of course, unconscious bias, and I will give you an example of that unconscious bias, which a lot of people don't understand when we say unconscious bias. What exactly are you trying to say? And the anecdote I was sharing with you was a friend of mine in company XYZ, a few years back, appearing for a promotion interview, and she's a star performer, comes in for the promotion interview. Everybody knows that she's a star performer. And the final question the panelist asked her is, this job that you're applying for is going to require a lot more bandwidth and a lot more work. Are you sure you're up to it? And she says, of course, I'm very much up to it. I don't see an issue. Then he goes on to say, but you have a child who is going to give board exam. How are you going to manage this, right? And to me, that example just blew my mind as to how ingrained some of the unconscious biases are there in, in our thinking when we take, and I'm pretty sure that if it was a guy who was sitting there, that question may not have come up at all.
I'm sure it wouldn't have. I'm sure the question would not have come that you've got a child taking a board examination. Do you have the bandwidth to take up this position or not? I think that is the entrenched bias that often constrains women, because there is no idea, concept of shared responsibility, unfortunately.
So one other thing I want to add, Shireen, is it's important for us as leaders to educate the aspect of unconscious bias. Important for us to develop allyship within the organization when people have family pressures and have to take a break. Create pathways for them to take a break, like the example we heard, and come back into workforce. These are essential aspects which we need to incorporate.
No, absolutely. Well, ladies and gentlemen, thank you very, very much for joining us here, giving us some examples of what you've been able to do within your organizations. But more importantly, the idea really is to learn from each other. Thank you very much for sharing your stories, not just your individual and your personal stories, but your organizational journeys as well. Ladies and gentlemen, a big round of applause for our leaders here this evening. Thank you very much for joining us here at Future Female Forward. Appreciate your time.
A big thank you to all our speakers and Shireen for that sharp and forward-looking conversation. Ladies and gentlemen, once again, a huge round of applause for all our panelists here. We now move into our Future Female Forward Town Hall, a space built for honest questions, real insights, and the challenges leaders are facing on ground. We have with us Pooja Sharma Goyal, founding CEO of the Udayati Foundation. Ladies and gentlemen, a huge round of applause for our speakers. We've got Ruchi Kalra, co-founder of Off Business. Neha Mathur, Chief Human Resource Officer, Urban Company, Harita Gupta, Head of Global Experience, Sutherland. Let the town hall unfold. Over to you, Shireen.
Thank you very much. We've got wonderful speakers here, so we're going to take off from where we left off. And Pooja, let me come straight to you now, because we've been doing this together. But I come back to the data, because that's at the heart of the conversations. What's the data telling us? What do we have reason to be optimistic about, and where are the concerns today?
Yeah. So, data is the best disinfectant. Sunlight is the best disinfectant, right? The data says that the formal sector participation is still at 18%. 5 years on, we are still at 18%. So there are very entrenched barriers that we need to dismantle on the design side, the infrastructure side, and the policy side. And let me pick up from some of the things that were said at the panel, right? Sanjeev pointed out the data around the supply side. There are only 30% women in IIMs. I went to IIT Delhi way back when it was 5% women. The role that company CEOs, organizations can play is, and I'll give an example of that, when tech companies were going to hire in IITs, they said, we want to hire 50% women. We will not come to campus if we can't get 50% women resumes. That forced some of the IITs to actually put supernumerary quota, which is exactly what Sanjeev was talking about, which is put extra numbers on top of that, which enables. So there is a role to play in order to create demand for it, unless demand comes out. So solving on the demand side is extremely critical, right? Second is on the policy, as we talked about. As the ambassador talked about, and you were saying, right, that leave it for the women to decide. And the labor code changes that have come now essentially have done that. There are 53 laws in the country that actively prohibit women from taking up roles. You couldn't join in the night shift, you couldn't be part of the hazardous industries, mining, etc. So that's kind of that patronizing attitude that runs through. So leave it for the women to decide, but provide the infrastructure that makes it easier for them. And I'll end with the infrastructure part of it, which is when we design infrastructure for women, then it is better for everyone. What is the biggest problem? We say gender norms. That's why parents are not sending their girls out. It's actually safety. When a woman is going out and staying somewhere, it's because they're worried that, she's going to be paying 5,000 and be living in that place where she's not going to be safe. Safety. If we design for safety,
it's better for everyone.
And it has second-order effects. We'll have more tourism. We will become the highest grossing tourism country in the world, right?
Absolutely.
So I think on all these three sides, we need to work on.
No, I completely agree with you. Thanks for sharing that, Pooja. Neha, let me come across to you, because, I know that Urban Company takes great pride in the fact that you do have a significant number of women who are part of the organization. I want to understand from you what you've been able to do, what is working, what are some of the policies that you thought would have good consequences but ended up having unintended consequences. Share the real stuff with us here.
No, thanks for the opportunity, and it's been so enlightening to hear all these experiences. I think at UC we take pride both in terms of the kind of gender parity we have within the organization and equal parts in the partner base that we have. And several women who actually go out there and deliver exceptional services to our customers. I think first and foremost, we are very grateful, I think, a lot of us in this room, for the privilege we have.
Absolutely.
Because
we have to acknowledge it.
We have to acknowledge, right? Like some of our beauticians, if you hear their stories, they didn't have the choice, right? Which shows that when actually given the opportunity, women have the resilience and the grit in them to make it happen, right? It's only when you have certain privileges, I think, that we as women become blockers for ourselves, right? So I think for us, that acknowledgement that you have something to offer and we are just providing you that platform to take it forward, I think that's been a big unlock for us, is accepting that there is an inherent strength in that woman and celebrating it, right? I really like the point about celebrating it. I think similar parts within the organization, we are very conscious of both our partner and our customer base being very, very, multicultural, multi-gender. Right? So it's very important then internally to have an ecosystem and a talent base which is aligned to the customer that we are engaging with. So we have been very, I wouldn't say, so we don't have rules at Urban Company. We have guidelines, and we want to make sure that we are becoming aware of the unconscious biases that each and every one of us are there, have. And we've created mechanisms where we bring that awareness to each other. So hiring decisions, for example, will involve multiple level of conversations before you reject somebody, right? Because the more you become aware of those unconscious biases, when it suddenly, that shift in your mind happens. Because I'm sure the person who asked that question of saying, who's going to take care of your child is not even aware that they have asked
that question, yeah.
So
or that there is anything wrong with asking that question.
Wrong with that, right? So we all have that. So becoming aware of our biases by making sure that we ensure that at the start of the funnel, it's a balanced funnel, and it takes a lot of effort, absolutely right. The education system currently is not balanced. We work with some of the institutes to actually help students in those universities get a more holistic experience. Because the other part that unconscious bias plays actually, Shireen, is that when you are that 5% in the IIT, right, then your experience is very different to the 95% student who's studying with you.
Yeah.
Right, because you are now surrounded by all boys.
Yeah.
So your exposure, your experience, your learning definitely gets hampered. So that's the place that we work with. We work with a few engineering colleges to help groom those students to become better at employment. We bring them in and create an enabling system. So no rules, but enablement and a strong belief that we have it in us, we just need the space.
It was something that you said which is actually very, very profound. You said that very often privilege can actually be a constraint. It actually blocks women from following their aspirations and their ambitions. But I just want to ask you, Neha, is there one specific measure that you believe has had disproportionate success in terms of outcome and impact that you've taken forward at Urban Company?
I think this is a lens we apply, honestly, Shireen, for great talent. And honestly, there is no gender lens to it. If you're good talent, I want to make sure that you are getting to work on the most important problem that my company is solving for, right? Because good talent will always seek the most high impactful purpose-led mission, right? So that's what we ensure. If you're good, we'll create that. And then they maximize. Then they just take off from there. And it creates a virtuous circle. Because then young girls who join the system see these phenomenal leaders who are building new businesses and get inspired by them and say that, if she can do it, why can I not do it?
So how many women do you now have, both partners as well as people within as direct employees?
We have a significant base in our partners. Of the 55,000 partners we have, roughly about 30,000 of them are actually women. Beauty is one of our largest categories. And we are now encouraging partners even in the non-traditional categories. That, I think, is the real shift. Because that will break some of the barriers we have in our minds. So
absolutely. That will make us ensure that we do break a lot of those barriers. Ruchi, thank you very much for joining us, and I want to take the conversation forward with you. Again, from your vantage point today, what needs to change? What are you prioritizing? Where do you believe the biggest constraints and the challenges are that we need to address?
So I think the panel has talked about it a lot. But one thing that is very dear to me is the fact that many times these barriers, you said breaking the barriers, are within us as women, right? So
give me an example of how that played out for you.
So I graduated. There was a journalist who walked up to me and said, what do you think about glass ceiling? Will you hit a glass ceiling? Honestly, I'm not ashamed of accepting it. I didn't know what the meaning of the word glass ceiling was. So if I don't know what glass ceiling means, then there is no barrier, right? So I just graduated. And nahi pata tha. I was born, I'm the only child. I have a girl child, she's my only child. I never talk about, things that you can't do. So many times we stop ourselves because we think we can't do it. If you don't know that you can't do it, then maybe you can. So maybe the first barrier is within, and the second barrier is what we keep for people around. In the sense, again, going back home, you will see two women fighting a lot. Why can't we just at home be nice to each other and say, you're looking lovely today, Shireen?
You're looking lovely today as well.
Just encourage each other, because that's the second barrier. Because even in office, you have a positive environment. Even if there are like two women in a space of, very nicely shared an IIT story. I'm also from IIT Delhi. We were 30 people in 400. But in our own hostel, we were the queens, right? That was our own space. And we never felt it. Okay, maybe we walked out and we saw we didn't feel it. We were like 7 women in our own chemical department. And honestly, that was the only department with maximum number of women. We spoke a lot about product, tech, etc. Right? But there is an ecosystem. You go to nursing, 80% of there are women, right? You enter a hospital. So there are ecosystems. We form our own ecosystems. And I think the barriers first starts within us. Second is around people around us. And you can always have a very nice laugh and smile and just feel good about working. And trust me, if you feel good about coming to office, you will get more women to come to office. And if you have more women coming to office, many of them will grow, right? That from 10, 15 years back, honestly, people used to talk